Welcome to Green Monday, everybody. My name is Benjamin Poole, head trader here at Verified Investing with today's top trade setups. Thank you so much for joining us today. We have an exciting show for you. I'm going to go over a couple different stocks, and then the nice thing is you guys get to finally join us in the live day trading room. You get to see the cockpit. You get to see our exact entry prices, our exact exit prices, and how we navigate the trades. So before we get into all that, let's go ahead and go over the charts. One of the stocks that I'm looking at is AMD. I've been following this stock for a while now. What I'm going to do is I'm going to take this high pivot point from 2021 connected to this high pivot point at March 2024. And this is the trend line that we've been watching for some time. I'm going to go ahead and zoom in on the chart to show you what I'm now looking at on AMD. So the other day I'd mentioned that we had this gap fill in the charts of AMD. It is still holding this $203.66 level. It did get below that. If price action gets up to $214.88, I am looking to actually short this. Look at this price consolidation. Once you have a pretty substantial move on the downside into some key support levels, and then you get a bounce when price action gets up into previous support, this is resistance. So 214.88 is that first shortable level. I have a secondary short level at $224.50. So what I've done is I've created a head and shoulders pattern. So I've created this left shoulder, this head right here, and this right shoulder. Look at what happened. We finally closed below, and then we confirm below this this head and shoulders pattern. If price action gets up past the $214.88 level, my next shortable level is $224.50. This is a retrace to the scene of the crime or the broken neckline. So on a 15-minute closing basis, I would stop out of this. The first level, this is more of a swing trade level at $224.50. This would be a stop out on a daily closing basis with a confirmation back above. What I've done also is I've connected the pivot top, the apex of the head, all the way down to the neckline. And then I've taken that exact same measurement from the break and connected this all the way down here. So if you were able to get into this short at $224, you could look for a downside target of about $182. The beautiful thing with head and shoulders patterns, it gives you an opportunity to minimize the risk while maximizing the profits. If you're patient on this, $224.50, if it closes above that, you're stopping out for a minimal loss. However, on the downside, you can take as much as 10 or more percent with another gap fill at $164.67. The next chart I'm going to go over is SMH. We've also been tracking this upsloping parallel channel. This has been going on for quite some time. This goes on from the lows of April 2025. I want you to see how price is consolidated inside of this upsloping parallel channel. Every time it gets to the midline, it gets a nice support. When it gets to the upper end of the parallel channel, it's gotten resistance. Then it broke below the midline. This midline then became resistance, a little bit more support. Now we're below the lower end of this upsloping parallel channel with confirmation to the downside. If price action does head up there today, I am looking to enter a short at $347.50. Not only is this a retrace to the scene of the crime of this broken upsloping parallel channel, it's also close to the high end of this wide range red bar candle. Look at the drop on the SMH in one day. You had a 7% move to the downside, a continued flush, and then we got back inside of this red bar candle. There are going to be a lot of buyers who are stuck in this candle who are hoping that price action can get back up to this level so they can make sure they remove their trade, take profits, or sell out of their long positions. That should drive the price down, and you can get a good 3, 4, even 5% move to the downside on SMH. If price action today decides it wants to fall a little bit more, break the low end of this green bar pivot, then you can get down to $204.83. So these are the two levels that I'm looking for on the SMH. Again, one is a retrace to this upsloping parallel channel, and the second one is this gap fill in the charts at, it's actually 305.25. So let me go ahead and change that for you. It's 305.25 is actually that gap fill. So that's my long level, 305.25 with a short level there. SNDK is another stock we've been tracking. One thing that I mentioned the other day was I'm monitoring this upsloping trend line. So the more often a price action hits and consolidates on a support trend line, the weaker it becomes. And then all of a sudden you get this nice break to the downside. We have not confirmed the breakdown of SNDK, but what we have is this wide range red bar candle. There were a lot of people who were thinking that they were going to pick this up for a nice 7, 8, 10% discount. It dropped as much as 20% in this one red bar candle. Now, if price action gets up to this next support level at $229.11, you should get some pretty significant resistance. So this is the first shortable level I am looking to take advantage of a short, 229.11, with a retrace of the scene of the crime at $252.17. In addition to this pivot top or this wide range red bar candle, there will be a lot of people who are looking to take profits if they can get this nice rebound, as well as people who were stuck in this trade and looking to exit the position, driving the chart of SanDisk down. I would be looking, the way SanDisk moves, I would be looking for at least a $5 pullback if we can get a nice move to the upside. On the downside, $174.49 is going to be the next gap fill in the charts. So this is where I'm looking to go long. Couple different opportunities for us to possibly take advantage of SNDK as well as SMH. Let's go ahead, go into MU. Another wide range red bar candle in the works. My first shortable level, because this was a previous gap fill in the charts at $218.03. When price action gets back up to this gap fill, you had a lot of people who are buying this thinking this was a great gap fill, and they're stuck in this position. They were out of the money decently, as much as 11% on MU. Price action gets up to $218.03. This is an area I'm looking to short it. Now, on a 15-minute closing basis, I would stop out knowing that you've got this wide range red bar candle at $230.21. That is the next shortable level. And then you've got the same thing that's going on with the MU as SNDK. You've got this nice this nice upsloping trend line that it could go back up to around $243, $244 for additional resistance. So there's a lot of resistance coming up on MU. I don't really have any long levels for that, but I'm identifying a couple different opportunities for shorts. Now, the next thing I'm going to go over is Google. Google has traded super high. It had a couple different, had this nice topping tail, got rejected. And then all of a sudden on Friday, it actually negated this topping tail, which means that price is likely to head higher. My first shortable level on Google is $315.27. Right now, I'm monitoring this upsloping trend line. You notice how price action has stayed away from this upsloping trend line after it hit for the third time. We need price action to now get back to this upsloping trend line and then break for this uptrend to actually start to die out in Google. For me, though, based on the continued selling pressure, there will be some profit takers at $315.27, or basically a pierce of $315, which is why I'm looking to take this opportunity to short at $315. The last one I'm looking at is BILI. This was a great move to the downside. It's trading up in the pre-market. Look at the move. If you can get a nice 13%, 12% move from the lows, you've got this beautiful gap fill at $27.19 with an additional gap fill at $28.42. So there are a lot of different things that are moving on the charts. So if you guys are interested, stay tuned. Live Day Trading Room is going to be going live at about 9:25. You guys get free access to this and get to see exactly how we navigate these trades. And with that, I'm going to actually kick it back over to Everett and Liz. They're going to walk you through the rest of what's going on today. Thanks for watching.
Hello and good morning, everyone. Welcome to the biggest trading event of the year. It is Green Monday. We've got an action-packed day ready for everybody. We're going to have a live trading session, chart analysis, Q&A sessions, and we might be giving away some prizes. So I am Everett Millman, the senior editor here at Verified Investing, and I am joined by Elizabeth Copeland, a financial journalist and trader.
Yeah, thanks so much, Everett. This is a huge day, guys. We're going to Thanksgiving. Everyone's at their computer today. We've been advertising all week about some of the fun things Everett just said that are coming up throughout the day. So you don't want to miss it, because not only are we live now, we're going to be live all afternoon with like those Q&As. But here's one of my favorite things going on: the live day trade room, right? You can watch it for free. Typically, you have a subscription to this. You can watch it for free today, and you can follow our traders this morning taking those trades, following their entries, their position sizes, long, short, whatever it is that you are going to be doing trading, they're going to be doing it with you, so you can follow the pros. And that's, again, for free. We're streaming that for free today, which is pretty amazing.
Yeah.
Now, on top of that, we also have up to 50% off of our verified courses and products. So you're definitely not going to want to miss that. Again, verifiedinvesting.com is where you can find all that information, and also where you can stream this. So if you're watching on YouTube, you can jump over to our website, verifiedinvesting.com. You won't miss the stream, but you will find all the things that we're talking about throughout the day on our website. We have some new launches of courses as well, which is pretty exciting. So the Winning Trader Pro Edition. Now, don't get confused. If you have the Winning Trader series, I've taken that, Everett's taken that. It's the exact same. We just have some updated content there. So if you have that information from the Winning Trader series, you're not missing anything. Now, here's the thing though. If you just bought it, let's say 2 months ago, and you have the 8 months to get it done, you're not going to lose out. It's still going to be on your computer, on your courses. You're going to get that content as well. Now, here's another thing as well. If you just had it expire, say a couple months ago, and you want to re-up, well, make sure you give us a call, our support line, because we can help you do that right here today for just a discounted price as well. So that's actually super helpful. Let's say 8 months went by on the Winning Trader series. You're like, well, I want to check out the Pro Edition too. Well, you can do that for a discounted price. So make sure you give us a call. Now, our Zero to Trader series, Crypto by Lawton Ho. Now, that is very exciting. That is launching. And I did talk with Lawton, and we're actually going to have an interview with him later today on what it's about, and you'll learn more about it. But here's something interesting about the course. It goes from the very basics. I didn't know that you had to get into crypto and all the stuff you had to do, right? I thought you could just trade it. I'm just used to charts. No,
Right.
there's a whole process. There's a whole process you got to get into crypto for, and he breaks it down literally from zero to trader, right? So that's pretty interesting, and we're going to have an interview with him later on today. Also, very, very cool. You can interact with us this afternoon. We're going to have the Smart Money Q&A. And so how do you do that? A lot of people are asking, how do you get your questions in? A lot of people are used to it. Our members are used to it. But if you're just signing up today, you can go to our verifiedinvesting.com website, and what you can do is right there where our video is streaming, look at the top right there. It says ask and an email.
Watch and ask, I
Watch
believe.
it. That's
Yes.
it. Yeah, watch and ask. So you click the watch and ask button. It will just say your name, your email address, and your question, and it goes right here. We have the list of questions coming in from our members and non-members, and what we're going to do later is actually ask our pros some of these questions for you, so you're going to get direct answers. And we can't get to all of them, but we're going to get to most of them. And the good news is that today, if you have your answers in, you get entered into this. Let me show you. Come over to the wheel for me for just a second. All you have to do is ask one question. Actually, just put in your name, your email, and just put in that you like us or you subscribed. You get a chance to add into the wheel. We're going to spin it. We've got free content right here. So not even discounted, free content ever. I can't even believe it. I know. Isn't that amazing? It's going to be a fun-filled day.
I'm already excited for it, Liz.
Yeah, I'm pretty pumped. But yeah, that's about all for us. But we've got a huge day ahead. Make sure you definitely stick it right here, verifiedinvesting.com. It's all day, right, Everett?
It will be an all-day live stream. As I said, this is the biggest event we have all year.
Yep.
So with that being said, we are ready to kick it off to my trading game plan with Gareth Soloway and get Green Monday started.
Hey everybody, welcome to Green Monday. How exciting is this? I love Green Monday. It's where I get to be more vocal, trade with you guys out there, even if you're not a member, where we get to showcase our styles. Obviously in the game plan, it's meant to set things up and really give you guys the levels that I'm going to be looking for in the live day trading room. But again, Green Monday's amazing. The sales are amazing, folks. We only do this really Green Monday once a year. And the idea is, listen, we understand some of the courses are a little out of price range for many people. I always look at us as giving information to the retail investor, not the institution, right? I'm trying to take institutional knowledge and give it to everyone out there. Everything I've learned in my almost 27 years now as we get into 2026. And ultimately, by giving a big discount during this period here, hopefully some more people can afford to get that knowledge. It is life-changing. There's no doubt about it. Again, I have, believe it or not, the traders, Ben, Drew, I mean, these traders in here, we're actually members. And it shows the progression of becoming a member of the Apex Live day trading room, and then becoming and studying and coming up in the ranks. And now they're the ones that are right next to me here giving the trades. It's very, very cool. So without further delay, let's get right into the game plan.
My name is Gareth Soloway, and I was a losing trader until I mastered technical analysis. Logic and charts beat hype and narratives every time. Now I teach investors the same techniques that made me a multi-millionaire. This is my trading game plan.
All right, guys, back we are. Welcome to the My Trading Game Plan, where we're going to cover levels on trades. What are the key movers? Remember, all charts, no BS. All right, so number one, we are seeing the markets moving up today. We saw a bounce on Friday, albeit a weak bounce. Why is it a weak bounce? Let's talk about that. When we have a rally in the markets after a steep downside move and the markets towards the end of the day sell off, even if they still close green, it's showing lack of conviction. Keep that in mind for future market action. It is very, very important. All right. Now, listen, the markets are continuing to inch up this morning. This is on the back of more dovish talk from the Federal Reserve. It looks like the odds are swinging back now towards a rate cut in December. So last week, early in the week, 33% chance of a rate cut. We're now back to 75 to 77% chance of a rate cut in December. The markets want the cheap money. They want lower rates. It's addictive, like a drug, if you will, for the markets and investors, and therefore markets are inching up. However, don't think we're out of the woods yet. Every chart I'm looking at that's a major player, NVIDIA, the SMH, the S&P 500, they are all showing bearish divergences, bearish signals that tell me after the holiday week, be careful. So this week is a week where a lot of institutions have gone on vacation. They leave their kind of underlings to just maintain the markets and the structure. But ultimately, retail will be there. A lot of retail is off from work. They'll be buying, and therefore, generally, you get a float up into Thanksgiving. But once we get into next week, be very, very, very careful. All right, let's jump into the S&P and take a look at where we are this morning. If we take a look here on the S&P futures, we are trading, like I said, a little bit higher. This is where we ended on Friday. So this was Friday's action. We had that early sell. Then the markets ripped, pulled back, ripped. And then this was the end of the day pullback that I didn't much love. That's not a strong move. You really wanted to see the markets close at the highs of the day to really solidify a good, strong rally. Now, we are up today, but notice how we have not taken out Friday's highs. All right, now I still think today is likely going to be an up day, and I do think the general vibe of the markets going into Thanksgiving will be neutral to positive, but I do also think that overall, like I said, coming in December, be very, very careful. Let's take a look at the S&P here. I want to flip over to our weekly chart. This is the one we've been following for quite some time, guys. And again, really very, very important here. So number one, we have the low from COVID, the bull market high, the bear market low, the liberation sell-off low, and the cycle high. Now, this cycle high is still in the works. We don't know yet if it is the cycle high because we have to look back historically, probably in a month or two, to see if that's the case. But it certainly looks like it at this point. And this is what really keeps me nervous, is that even if we were to bounce up, right, let's say we go like this. Number one, this could be a bear flag forming if we start to get that sideways action. But even if we go up into this level, we have to respect that level until proven otherwise. Now, this same technique that I'm using to tell people to respect the level, right, and this is really important, guys. So the reason why I tell people to respect it is because I've studied charts. I've traded so many years where there were times early in my career where I'd be like, oh, but I really think the market can break out above this level. And I wasn't going along with technical analysis. It just in my positioning was like, oh, I really think it, I need it to happen. And so I would start to shade that, right? Start to say, okay, this is what we need to happen. And just flipping back to the charts, look at the chart of Bitcoin. All right, Bitcoin. This is a trend line here on Bitcoin, and I usually don't go to Bitcoin till later on, but this makes my point. This was your high from 2017. This was your high in 2021. And then look at how we hit this level and we pulled back, the same trend line. We hit it again and we pulled back. Like imagine you think, okay, well, this is where we are right now. Let's say here was that same level on the S&P, and maybe we're right here right now, right? Something in here. Or maybe even we've come down here, And look, it goes back up. And what happens there? It gets rejected again. And then even again, it starts coming back up. And people are saying, oh, well, I really want Bitcoin to break out. And it goes back to that. And then look at the sell-off we've seen in Bitcoin. And so the point here is that I've learned to respect the trend lines, right? Until proven otherwise. Now, in this situation, when we flip back to this chart, here's that same line. It goes back all the way. It's a parallel, which arguably is even stronger. So even if we go back up, a lot of people will say, oh, we're going to break out. Don't assume it. Look at what happened here. I mean, basically, you had a triple tap and then a big sell-off in Bitcoin. We could be setting up. And remember, technical analysis is about probability. There's no certainties in technical analysis. Literally, folks, I am not a perfect trader. I have losers every single year. Every single month, I have losers in my trading. It's about probabilities. And if you can study the charts and you start to understand that you take emotion out and you focus on just what is in front of you, what is the probability of today's action, tomorrow's action, etc., you start to put the odds in your favor. You essentially become the casino versus the gambler. Gambler, yeah, sure. We go into the casino every once in a while. I walk out with some extra money. I'm not a great gambler, but listen, occasionally I'll win. Most of the time I lose. If I stay in that casino long enough, I'm always losing, right? So you want to be the casino. You want to be that if you do 100, 1,000, 1,000,000 trades, you're winning 70, 75, 80% of the time. And that's really the essence of it. All right, so let's continue on here. The QQQ chart. So we've already broken and confirmed we had that really nasty gap up on Thursday that reversed. Friday, we got a small bounce. We're getting a small bounce. Same thing for this daily chart on the QQQ. This now becomes your line in the sand. Now, as long as we come up there, you would assume this gets rejected again. And I don't know if we'll go that high, but I just want to put that out to you. Now, this wide range reversal candle, that would even be a stretch to think that the markets could eclipse that. This is such a negative candle here on the charts. This came on the back of those NVIDIA earnings, which seemed like a month ago now, but it was really only just last week. And that reversal is almost like an exclamation point. In fact, you could even do this, right? Here's your bar of the exclamation and then put a circle below. And there's our exclamation point on the market decline. So any sort of upside here, number one, it would have to have a daily close above this wide range red candle to negate that. And then even if it does that, you still have to take out this trend line, which we've now confirmed below. All right. So again, some just honest, straight up technical analysis. Listen, we all would want to hear, especially those of us with 401ks, we'd want to hear, hey, the markets are going to go up every year, every month, every day. We're just going to keep going up. And listen, sometimes the charts tell us that, right? Like even this week, I came into this week saying, guys, it's a holiday week. Big money's on vacation already. That means retail will generally rule the markets. So you expect neutral to upside, right? So we expect a bounce this week. I positioned myself in some longs. We'll even probably go long in the day trading room, which you guys will all have access to in just a little bit that starts around 9:25. All right. But ultimately, the bigger time frame is still very bearish. And lastly, folks, as always, the SMH chart. This was kind of the discovery heard around the world in my zone here, which is, again, this is your weekly SMH semiconductor chart. And what we see here very clearly is that in 2021, we had this great rally in the SMH, the semis, the AI trade. And what happened? It got 102% up from the 200 moving average. And then it 45% corrected. Here in 2024, we got 102% above, and we had a 40% rollover. And look at this. Weeks ago, I alerted to another 102% extension, and we've now fallen already, if we do the measurement, peak to trough, from the high here to the low, 15%. Now, it's bounced a little, and it's set to bounce again today. But overall, you can't discount that essentially we've been pulled back to home base, the 200 moving average, both in 2021 and in 2024. You have to assume eventually we're coming down to meet that 200 moving average. Really remarkable stuff. Remarkable. All right, now let's go into some charts here. So number one, NVIDIA. NVIDIA did close below a key trend line here on Friday. There's almost a little pseudo head and shoulders here. You can see it right here. It's not the cleanest, which is something that's a little bit of a kind of a nuisance to me. But nonetheless, I still am monitoring this pattern. Remember, head and shoulder patterns in TA are bearish. We did close below. Looks like we're going to open slightly higher. Today, let's watch and see, does NVIDIA recapture this 181 level? If it does, and it climbs back above and it doesn't confirm below, then that's okay. It kind of saves the day. But any sort of weakness and continuation below this neckline opens the door for a measurement, which I saw Ben going over this on a chart in his show as well. If we do the measurement here, guys, you're looking at downside on NVIDIA to about $145 per share. Now, it's not going to be a straight line, right? You're going to get bounces along the way, but the calculation's the calculation. Listen, I don't make up the calculation. It just is what it is. I use this on the meta chart to predict its downside move. It's even gone lower since then, but ultimately a head and shoulders is great. The neckline break is what matters, and then you do the measurement, and that can give you that bigger target to the downside. All right, let's take a look at some other trades here, guys. So we have some morning movers. We have Novo Nordisk. Novo Nordisk is dropping by about 10% in the morning session. This will be one that we zone in on for a trading opportunity, right? So again, I'm kind of setting the table because you guys all have access to the live day trading room today. But ultimately, Novo Nordisk, any stock that's in motion. Remember, a good day trader doesn't focus on something that's moving 0.25% on the day or 0.5%. We want big moves. Why? Because it creates emotion. And emotion means people overdo moves both to the upside and the downside. That means us as traders can come in and counter trade that when it gets ridiculously extended. Most people follow the trend. I've never had much success at that because I always seem to be buying at the highs or at the low or shorting at the lows when I follow the trend. I want to know exactly, and using technical analysis, you can find out where the highest probability point of a reversion is on the chart and bank significant money. In fact, remember Friday in the weekly wrap up, I told you guys I went long MicroStrategies. I'm starting to pick up some of these, like Bitcoin's gotten crushed, even nibbling a little bit on Bitcoin down here on late last week when it was trading in the 83 range, etc. So all of these opportunities there abound. All right, next one, Google. Google continues to be a rock star today. Ben was just going over his level. It's around 315. Look at how high it already got to 314. This chart, again, is a remarkable mover. This was one of the AI stocks that was out of favor. Now their Gemini 3 is stated to be better than ChatGPT. And sure enough, this is up significantly this morning, and it looks like this could be also a trade. Notice the extension move, big move today, up over $10 here, actually about $13 going into the open. That's a big move for Alphabet. And again, look for that 315, and we'll be trading this live in the live day trading room in just a little bit of time. Couple other stocks on my radar. I'm loving Rigetti, folks. I was shorted up here. Now I'm loving it down here. Little bit of a pseudo bottoming tail, major support going back to this pivot. I think Rigetti is due for a technical bounce. I could see this thing going easily back to at least $28, maybe even $30 per share. And that could even be this week, folks. I mean, if we get the light volume and retail comes in and buys the dip on some of these former high flyers, this could really catapult to the upside. Another fantastic one, former major player. Look at OKLO. This is a nuclear reactor play. Again, just literally a month ago, guys, a month and a week ago, maybe, this was $195. It just bottomed out on Friday at around $80. Look at the technical support right in here. These are the dream setups, folks. These are my favorite periods to trade because you get these extreme moves to the upside, then these reversions, and then I want to go back knowing human psychology will rush in to buy thinking, wow, you know, a month ago, this was at $190, $95. Now at $80, $85, $90, they'll push it back towards 100. I bank it, and then I don't even care after that. A trader, remember, I'm not looking for the unbelievable maximum gain. I just want to be in like a ninja, right? In the trading room, I talk to the traders about this. I talk about how we are like a lion in the bush, right? If we jump out too early, we go hungry. If we jump out too late, we go hungry. We have to lay in wait until the perfect opportunity arises where essentially the technicals align, and then we pounce on our prey, aka a stock, a crypto, a commodity, and we take those gains. Okay, we don't get greedy. If you get greed, they say in the movie Wall Street, great movie by the way, greed is good. No. Greed is what gets people to buy all-time highs just before a collapse and panic at the lows, right? Fear and greed. We want to exist as investors and traders in that middle ground. It's the safer zone, in my opinion. All right, so let's continue on here, guys. Let's go on to Bitcoin. Bitcoin right here. It's down just a little bit this morning. Remember, we just talked about how I was able to annotate and show and call the high on Bitcoin here 3 times in a row. 1, 2, 3. Notice the first hit was the smallest pullback, the second hit, the second biggest, and the third hit has been the biggest here. Now, I do think, listen, eventually, do I think we're going all the way down to this 75 to 73,000 level? I honestly do. But in the near term, I actually think we have an oversold condition on Bitcoin. Flipping back to the daily chart, look at this extension move right down here. And you guys just lost me there. Let's get my screen back up here. There we go. Oops. And not sure what's going on there. But anyways, let's see here. Bear with me, guys, as I get my screen back up. Let me find here. There we go. Add to stage. There we go. Apologies on that, folks. So again, what we're seeing here, folks, is a move to the downside and look for a reversion move back up. I honestly could see a bounce as high as this area right in here, maybe maximum upside 100,000, and then I'll look to sell into that, right? So I'm long here. I'll be adding at 73 to 75, but I'm building a little bit of support here. If we get a move up into that level, then we'll be looking to take profits on those swings. Here we have Ethereum or ETH. ETH is at major support. I did nibble right down here like I said I would do. We talked about this chart, by the way, weeks, if not months ago, and this was my target. It has now been achieved. I look for a technical bounce, and we look to bank it. Gold today. Gold is still holding major technical support right here. Beautiful trend line. Look at how many times it's hammering on this level here as we continue through. And then ultimately, if this breaks, I think we head down to 35 to 3,600. Listen, if this doesn't break and we break this upper descending trend line around 4,200, then we could go back to all-time highs. So really watch where we are in the wedge pattern. I do favor a break because the more hits on a trend line, the weaker it becomes. But ultimately, again, if it breaks, we see that bigger move to the downside. Silver, folks, same thing on silver. Silver continues to hammer. It's getting squeezed between this upper area here, double top. It's actually a bigger wedge or a parallel channel here, going back to the financial crisis 08 low, bull market high of 2011, and COVID low of 2020. But ultimately, flipping back to the daily chart, if we break 40, basically if we break 49.50, look for a move down to 45.60. And then ultimately, I could see this at 42 to 43. On the opposite side, if it can break through 54, it's off to the races. Lastly, oil, guys. Oil again. We hear about a potential peace deal between Ukraine and Russia that brought oil down. But again, it's still stuck within its bullish consolidation. Cup and handle pattern is still intact. Therefore, the bias here is still bullish on oil unless we take out the low here. And lastly, natural gas, folks, down slightly on the day. It's just underneath major resistance right here on nat gas. All right. So again, I will be looking to short nat gas right into that level if we push up just a little bit more on the charts. All right, folks. So it's Green Monday, trading galore. That's what we do here. No chart, no BS, just charts. That's what it's all about. And as always, folks, I'm here. My trading team is here. We're going to be focusing on charts, walking you through trade setups that we're actually taking. We are here for you as always. You guys stay tuned for this video. Let's rock and roll.
Wakey, wakey, Grandpa! You fumbled the cleanest double bottom on SPY last night. I'm talking textbook AF. Ratioed yourself IRL. Brushing your teeth. Cool. Too bad you didn't scrub your risk management first. This isn't a pour over, it's a pullback. And you missed it harder than you missed prom in '84. Bro, that bull flag on Tesla was doing cartwheels in your face. You ghosted it harder than your high school crush. You not only ran out of TP, you ran out of risk management. That was a bearish engulfing on the 5-minute, and you YOLO'd through it. Clown behavior.
Verified investing, built for the ones who hate losing.
Yes! Finally giving main character energy. Proud of you, King.
Verified investing, no cap, all facts. Not financial advice, just facts, charts, and a little attitude.
To be a counter trend trader, it means that you're essentially going opposite the crowd. And the key is to only do this at extremes, right? So when a stock or crypto goes up exponentially, essentially what it does is it gets people to react emotionally to the point where it's all greed, all FOMOing into a position. And what you understand is that there's going to be a counter move at the extreme level of greed. And the idea is by using the charts, we can go opposite of that. And that's to be a counter trend trader, and vice versa on the downside. When you see something dropping, and that panic and that fear starts to take over most retail, they just start dumping because they can't take the pain anymore. And that means that price has gotten too far ahead and there's an opportunity for a retrace or bounce. And that's what a counter trend trader looks for and takes advantage of. Hey everybody, welcome to the Apex Live Day Trading Room. My name is Gareth Soloway and I'm here with all my head traders, guys. We are here to tell you a little bit about what the Apex Live Day Trading Room is, how it works, and really all the nuances so everyone watching this gets a great idea of what they can do with it and how to make money with it and all the kind of the different things. So why don't we start? What should we talk about first, guys?
Well, I just think, how much fun it is to be a part of the room together with, 4 different traders, right, who have been doing this for years and have a great methodology, to kind of rest our skills on, and I think that's why we're so successful. We have a process, and it's great.
And what I love is that we each have a little bit of a different skill set, right? So I look at things a certain way, you do things a little differently, you look at things like VWAP, you're looking at things like RSI, and so people that are in that room, they really get a little bit of everything, and they get this education, which is, again, it's not only the trade alerts that we're calling out, and by the way, folks, we literally give you our exact entry price, our exact exit, position size, all of these things, so that when you're listening and viewing our screen live with the charts, you will know exactly what we're doing. There's like no question marks there.
Yeah, and oftentimes we give our levels out ahead of time. They might not be exact, but we give you an idea of where we're looking for the trade to enter the trade, as well as a potential target, right? So on this particular stock, we're looking for like $1 or $1.50, anywhere between there. And so you have an idea of where we're going to exit the trade as well, which is huge.
And I love what you said about that, is that it's not like a surprise when we enter a trade. We've talked about that trade setup. We're saying we're looking at this level. Guys, I'm going to look to enter this long or short at this level. And again, what probably going to do a 1/5 position size of our portfolio. So that's the way we kind of differentiate it, right? Is we have our portfolio, whatever your portfolio is at home, we'll say, hey, we're taking 1/5 of that or 1/4 of that or 1/3 of that, and we're putting it into this stock or ETF.
Right. Since we've got 4 traders that are working their own charts, we're able to go ahead and have 4 sets of eyes, give everybody a heads up as to when those levels are about to approach. So it's very transparent. Everybody's going to get their opportunity to jump in the trades with us when they do happen.
And what's fantastic, Drew, you've been a member for what, 5 to 6 years now?
Going on, yep.
And so we're bringing in members who are now a part of our trading team, and it's really cool to see.
It is.
Yeah, it's a great benefit. Learning the methodology through Gareth and In the Money Stocks. We're learning new methods too, with Dr. B's methods with the 1-minute scalpel, Ben's focus on the RSI. We're just adding more and more layers, making this methodology a very complete and full trading room.
And to the point, on that point, is that basically the track record shows, and the track record can be verified with anyone in there. I mean, it's dead on. We have basically an 85+% success rate.
Right.
Oftentimes we're getting 5 trades in a day, a lot of these in the morning session. So I think that's also key, is that some people may not have the option to be there all day long from 9:30 to 4.
Apex Live Day Trading Room starts now. Intro running. Okay. Yep.
All right, I see Drew right now. How you doing, buddy?
Buddy, welcome to Green Monday. Hopefully you guys are having a fantastic day.
There we go. Yes. Hello, everybody. Welcome to the live day trading room here. So we always get started a few minutes before the open, which is where we are. So we're already behind our screens. We're ready to rock and roll. I'm going to go over a couple of my setups here that I wanted to show you guys. So number one, what we're looking at here, this is Oracle, guys. One of my key targets today. We had a big drop, or we've seen a massive drop. I'm going to look for an entry below 195. If it dumps out here, right now we're trading at around 170, 197.78 pre-market. If we drop below 195, I'm going to do a 1/6 position long. This is based on $1 million portfolio, so 1/6 of my $1 million is going to go into Oracle, and I'll add about every dollar lower. All right, Ben, what do you have, buddy?
Hey, good morning. I'm actually looking at Google. Let me go ahead and remove Gareth. All right. So I'm looking at Google at 315.27. It looks like it's already starting to pull back. It got up as high as 314.07. I still have my level at 315.27. If we can get a nice bid to the upside, 315.27, I'll add every $2.50. And this will be starting at a 1/6 position of the $1 million portfolio. 1/6 position, 315.27 short.
Awesome, Drew. What about you, buddy?
Dude, I like it, Ben. I like it a lot. Hey, good morning again, everybody. This morning I am looking at Netflix. We've got a beautiful inclining trend line on the daily time frame that also coincides with a gap fill right here. So gap fill at $98.79. We'll be looking to go 1/7 position long, 1/7 position long if Netflix does drop down there sub $100, $98.79. Lawton, what are you looking at this morning, sir?
Hello, everybody. Let me share my screen. I'm looking at a couple of the China stocks that are up. So Alibaba, if it gets to $162, I will short it on a pierce at that about a 1/7 position. 1/7 of that $1 million portfolio. Bilibili, if it gets above 27.19, I will short it a 1/7 position. And then Baidu, if Baidu pierces $120.64, I will short that a 1/7 position. So 120 on Baidu, 162 on Baba, and 27.19 on Bilibili.
Awesome, guys. All right, so markets are just about to open here in about 20 seconds, guys, and we will have, or hopefully we'll get some great opportunities here as we get into the open. I'm also going to keep an eye on MicroStrategies, MSTR. Again, just beaten down into major daily technical support here. If it gets below 170, I may nibble on a 1/10 position. All right, markets are open, guys. S&P opening higher here. Let's get this party started. Ooh, right out of the gate, MicroStrategies moving up.
Yeah, Google's dropping now. It's below 310. Oh, that's all right. That's kind of what happens sometimes. INSP is another stock that I'm looking at. INSP at 123.27. It's got a big move up today. Look at these pivot lows on INSP. So 123.27. I would go a 1/6 position if it gets up there. It's still a pretty decent move to the upside that it needs to go another 15%. But I'm interested at that level.
Awesome. I'm actually going to eye Oracle a little bit higher here, guys. I want to get some skin in the game. I'm going to move to a 1/7 position below 196 if we get below 196 here. I'm lowering it because I want to give myself a little bit more maneuverability. It's bouncing to 197. Come on. Come back in.
All right, Google's at 312.35 now. So let's see if we can get another bid to the upside. Not a ton of movement going on right now. Come on, Google, push. Billy, BILI, it's just one more, about another $1 higher.
For my entry.
Yeah.
Yep, 27.19. Yep.
I like
You
that
guys
level.
see SanDisk? SNDK? It's ripping.
There's another one on my radar. I have at 229.11 is the first level that I have. Wow.
Yep, I see that same level.
Holy cow. All right, heads up on Google. It's about another $2 to the upside.
I'm going to bring up your chart, Ben, so they can see.
All right, come on. Keep pushing.
Nothing on Oracle, guys. Or MicroStrategy for me.
So just a heads up, this is GOOGL, not GOOG. GOOGL. If I enter.
Netflix so far has gotten a bounce. The spiders and Qs also gotten a bounce right out the gate.
LITE's having a nice move to the upside as well. Wow, what a move.
Anything on your radar, Lawton?
No, Baba selling off. Not much else happening. I'm looking for a trade. I'm looking. But if you guys have any suggestions, any stocks you want us to potentially day trade that are good setups, throw them in the chat and I'll take a look.
LITE 280. It's got this wide range red bar candle.
Ooh, you eyeing that double top?
Possibly, yeah.
Nice.
Google's getting up there. Got less than $1.
What percentage of portfolio?
This would be a 1/6.
1/6. Nice.
Yep. Come on, keep pushing. Strong stock on the day. $3.75 trillion company. Up, 5% on the day. No big deal.
Guys, on Oracle, I'm still interested, but a 1/7 below 196.
All right, I am short on Google. Short Google at 315.27. 3:15:27, 1/6 position. All right, here we go.
$1, $2. What are you looking for?
At least $3 on Google.
Nice.
My next entry price is 317.77. 317.77. I'll add to my position on Google. This is
Guys, I did get filled on that flush below 196 on Oracle, so I am long a 1/7, 195.85. 195.85 long Oracle.
LITE is heading up 280.
You're gonna short it at 282, right? That's what you said.
No, I was just noticing that that's a good, really extended chart. You want to take it?
You don't want to take it?
Here's to 280. Sure, I'll do a 1/10 on LITE.
Yeah, I wouldn't touch it till 283.
All right. Well, I'll wait for your entry then.
You're gonna wait for 283 to get
No,
in?
I'll let you take it. I'll let you take it.
All right, Pierce of 283, LIT. I'll go short a 1/7 position.
Target on Oracle, guys, is going to be $200. A Pierce of 200. That may be subject to change. But right now, especially with a 1/7, I like to let those run further because they're smaller position sizes.
Let's see if we can get an ad on Google.
MicroStrategy coming down, guys. I'm going to look around 169.50 is an entry on a 1/10 for me on MicroStrategy, MSTR.
Lawrence is saying LITE still has a daily topping tail. Nice.
Yeah, guys, you can see LIT pushing up on a Pierce of 283. I will short this a 1/7 position on a Pierce of $283. It's getting up there. Need about another $3.
I'll be looking to add to Oracle a 1/7 every $1.50 to $2. So about between $1.50 to $2, I'll be looking to add another 1/7. Getting close on MicroStrategies. I haven't been filled yet. All right, guys, I just got filled on a 1/10 of MicroStrategies here. 169.33, 169.33 on MSTR, 1/10.
Wow, crazy. Nice little fall on Google.
Guys, I'm gonna cancel my order on Alibaba and Bilibili, BILIBABA. I've canceled those orders. I still have an order on Baidu at 120.64.
SMDK still holding its gains. And John, yes. Hey, thank you. This is love you guys. Watch every day. Bitcoin, does it take the market down now? Well, it definitely can put some stress on the market. That's a risk on asset. So whenever that asset is getting beaten up, it's likely the rest of the markets are going to follow too.
Guys, I'm going to add $2 lower on MicroStrategies, another 1/10.
So what you're hearing when we enter a trade, that's the noise indicating that we got into a trade. That's why you keep hearing that when we enter trades.
Yeah, it's like Pavlov's dog, you know. If you're not listening, then all of a sudden you hear that, then it's like, whoa,
You're like, all right, time to perk up.
Yep.
We got 50 cents away from our entry on LITE. Now pulling back $4. I'm gonna raise my entry on LITE to a Pierce of 285. A Pierce of $285 will be my shortable level on LITE for 1/7.
Oracle and MicroStrategies came close to my ads. They did not give me the fill, folks. So again, that's fine. I'll be patient.
What a recover on NVO, Novo Nordisk.
Yep.
Got down to 41.23 pre-market. Wow.
It's crazy.
Sox is coming in. It's at 229.
429?
429. What did I say? Yeah, 429.
You said 229.
429. A little bit of a variation right there. It's fine.
All right, good bounce on MSTR and Oracle, guys. Let's see if we can start chugging higher here. MSTR, my target's going to be about $5 to $6.
All right, LIT pushing up. Remember, I'm going to short it on a Pierce of 285, a 1/7 position.
Let's see if we can get another push up on Google. We're about $1,000 in the money. I wanted a little bit more.
One more push on LITE, and I'll get filled. Got 40 cents away this time.
About $1 away on SanDisk. I mean on Google. GOOGL. 317.77 is where I'm going to add to that position. My next ad after that is 320.27.
All right, guys, I just got filled. I'm short LITE 285.07, 285.07, a 1/7 position. 285.07. I'm gonna look for about $3 on this, okay? Around $3. Around $3 to cover.
Dude, it's giving it to you right away. Look at that.
Let's look at this fall. I need a little more of a flush, and I'll take it off the table here. Need about 35 cents.
Let me flip over to your charts here so we can view the
You saw my
easy
entry.
button.
You see my take profit. Well, it's not easy yet.
I know. I'm just teasing you.
My ad's gonna be about every $3. About every $3 here for an ad on this position. Oh, I got so close. Are you kidding me? 30 cents away.
It'll come down again. Come on.
See if we can't get an easy trade. One more flush.
Oracle pulling back, guys. I'll let you know if it gets down to fill me on my next 1/7. For those of you that are new tuning in, we have what's called the easy button. We call that.
Oh, got 7 cents away. Are you kidding me?
No.
Oh my God.
Not kidding. It's just the way it works.
Yep.
7 cents. Oh.
In other words, this wouldn't be this would be a pseudo easy. We'll see how it goes.
Yeah,
I
we'll
guess
see.
my point was I wanted to explain to people what the easy
Oh,
button
now
was.
we're out of the money. I see.
Oh,
That's
it's real
Stinky.
trading, guys. This is how it works. Listen,
It's very
people can
criminal.
claim it's easy, and then when you actually have to get filled on positions, it ain't so easy.
All right, Google's heading up to my ad level, 317.77. Come on, so close. Here we go. Tag that level. I'm not filled yet.
I threw up your chart, Ben, so they can watch.
Yeah, I got up to 317.75, 2 cents. Here we go. Yeah, that's right. Now it's going to push through that level. Could get up as high as 320 today. That's all right. That's why we have maneuverability. $0.02 from my level, 7 cents from Lawton's. It's fine.
Nah. Whatever. MU I'd shorted on a piece of 280 or 230. Excuse me, $230. Piece of $230.
SanDisk isn't too far from that level we discussed.
No, that would be a
29.
nice one.
Yeah.
I would like that. Keep pushing. Amit saying some say to not try catch. Some say to not try catching a falling knife, but you guys seem to take those opportunities. Can you explain the diverging thoughts on this? Yes, it's when the stock gets extended. Stocks are likely going to come back in, whether it's extended to the top or extended with oversold situations. They're going to get technical bounces, and that's basically what you're witnessing right here take place on these day trades.
Yeah. My old adage is that people that say don't catch falling knives are people that just don't know how to read technicals. If you know how to read technicals, I mean, look at our track record, 90%, 85, 90% average win rate. I mean, why wouldn't you try? It's just a matter of people,
at key levels.
Guessing, if you're guessing at the levels, then yeah, of course, don't try because you have no clue. But if you learn the charts, you can dodge a wrench, you can dodge a ball, right?
Love it.
That's what they say.
Good bounce on Oracle, guys.
All right, I just added to my LITE. Added $3 higher, 288.7. 288.7.
You're breaking up, bro.
I added.
He added.
Yep.
On LITE.
Can you hear me?
Yep.
Yeah.
Yeah, our average 280.57, and it's
That's happening again. Yeah, maybe just reset your mic. Guys, MicroStrategies is getting close to my ad.
Heads up
on a break of 167. 167 break if it gets there.
Heads up on Google, GOOGL. 317.77 is still that ad level. Got up to 317.75 again. Yeah, you can see Lawton's new ad or average price.
all right. Yeah,
287.41.
I'm going to. Oh my god. Okay, I just got filled on. Wow, 285.07. I'm out.
What? Okay, hang on, guys. I just added on MicroStrategies. On that break of 167, another 1/10.
I'm out half of my position. 285.07. 285.07. I'm out of half of my position.
Man, twice on Google. Got really close to that level on that ad.
Can you guys hear me? Okay.
Yeah, but just don't talk quickly. I think it's when you talk, I can't keep up with you or something, man.
All right, on a pure.
You'll have to explain what the heck happened with that trade because I couldn't even follow it, frankly.
Yeah, I was gonna take half off above past our break even, like lower than our break even, and the other half I'm gonna take for a $3 gain. So that's what I did. I took half off in the money, and the other half I'm gonna take for a $3 game, around 283.
Lawton's looking for 283.57, I think is where his next exit is. We would be in the money decently on Google. It's all right. Let's see if we can get one more push up. I mean, got really close to that ad level. 2 pennies. A couple different times. SanDisk, yeah, wow, what a push up on SanDisk.
Yeah, it's getting closer. Getting closer to that level, folks. 229.11. I'd be interested in doing a 1/10 short there. Adding every $3, looking for about $3 on profit too.
All right, guys. My next ad is going to be $3 above our average, and my take profits is going to be $3 below our average. So we've taken half off in the money, and then we're going to go 3 and 3 for ads and take profit.
All right, that was clear. Guys, and the reason nothing shows up in closed positions yet, because he still has the core position open. Once it's all closed out, then the P&L shows up. Okay. Good push on Oracle, guys. Oracle's pushing here. 200 Pierce is my target.
Okay, guys, I just added to my position 289.57. 289.57. A 1/7.
Are you able to show your charts or no?
Yeah, let me share my charts.
I got you.
Wait. I don't know. I don't hear myself. So, I don't know.
Guys,
Google's
Oracle's pushing. 199s now. Come on.
I can't do anything right now. Guys are going to take half off, slightly in the money on our average, right here. All right, 290, 287.90. I just took half off. 287.90.
So what
I've
you're
just
doing,
taken
explain
half
what you're
off.
doing too. I think this is really important, guys. He's maneuvering. All right. So when you accumulate a position and then it comes back in, you want to move out of a little bit of it for a small profit, and that brings your average, but it still gives you the ability, if it goes higher, to add. Right. So I mean, these are really, really important things.
Yeah. For me, so again, my profit target's going to be about $3 in the money. What I'm doing is I'm adding to my position, and as soon as I come back and in the money, I take that money that from the amount that I've added. Essentially, I get to move my average and get a better average for free, and also reducing the amount of risk I'm exposing myself to.
That's super, super important, guys. That's what the best traders in the world do. They maneuver. All right. It's basically what we call a dance, right? It's like you got to be able to maneuver, duck the punch, basically bringing your average up as something goes up that you're short. When you get in the money, you reduce so you can add again. And this just slowly, essentially what you're doing is you're waiting out the movement, the push, until you get the bigger fall, and then you cash out for the big score.
Absolutely.
Three times Google has gotten pretty close to that ad level. Means the sellers are really overwhelming the price action of Google.
MicroStrategies, guys, great push here. There we go. Oracle's getting close to target.
Come
Oracle's
on.
such a beaten down chart.
Come on, Google. Man. So close. Wonder how many orders are stacked at 317.77. I mean, it's a wall.
Oracle got to 199.75. Again, I have my order to exit above 200. There should be a wall there, but if it punctures it, we should get a nice pop, and then I want to sell into that volume.
Yeah, Jay. I'm trading. So Ryan or Ram's asking, do you guys show your orders waiting to be executed? I use Trading View with Interactive Brokers. I'm not sure if they do, but I just do it all in the Trading View platform. So it's likely that my orders are showing.
Oh yeah, versus hiding your orders. Yeah, I mean, listen, if you're doing like $10 million, it's good to hide your order. But if trading on $1 million portfolio, doing a 1/5 or a 1/6, it's you're not gonna royal the bump the apple cart or whatever. All right, here we go on Oracle. Come on, punch through. Let's go. It wants it. It wants it. So beaten down chart. MicroStrategy pushing beautifully. And I'm out, guys. 200.27, 200.27 on Oracle. I am out of Oracle. $200.27. Boom.
Nice trade.
Thank you, man.
Beauty.
That is great. Wow. All right. Now on MicroStrategies, my game plan is this, guys. If we get over 172, I'm going to take half off and book those profits. Okay, we're just above 171. If MicroStrategies pushes over 172, I'll take off half of the position. This way we pocket some gains in case it falls back down.
WDC is pushing up. It's currently at 148.71. We get up here to 150. I would be interested in taking a short there at WDC, but it needs to get there pretty quickly. I don't want to see price chop sideways before pushing up there. We'll be looking to do 1/8 short there on that position, WDC.
We are not trading options, Ty. We're trading stocks. Guys, remember a Pierce of 291. All right, guys, I just got filled. I just added to my position on LITE 291.07. I'll take half off in the money. Our new average is 289.57. I'm going to take half off in the money. All right, 289.35, 289.35, got rid of half. 289.35 out of half. This thing can move a lot. 289.35 out of half.
Man, you got to be light on your feet to trade this thing.
On the rest of this, I'd like
Love it, Ben.
$3.
Guys, heads up. WDC is coming up there, folks. Testing that 150 level. Getting pretty close here.
All right, guys, I'm out of half of my micro strategies, 172.07, 172.07. I'm out of half. Beautiful. All right, so I pocketed about 2K there. Now we can let the rest run. Let's go for, I don't know,
181.
Well, I mean, that would be pretty cool.
Wow, Google, come on. At least you guys have been able to add to these positions. It's a lot more fun when you have volatility.
Next add on LITE is going to be $3 higher. $3 higher. And if it comes back down, we will be taking half off the table.
Just as, and you can see we're really focused in, guys. So those of us, a lot of times as it gets later and slower, there'll be more banter. We start, like Ben did a joke there. I don't know if anyone caught it. I know a couple of us did, but like normally we would, make fun of him for making a stupid joke. But like it's when we're focused in on these trades, we don't want to get distracted and cost us money. But good joke, Ben.
What are you talking about? I didn't make a joke.
In other words, we like to have fun at the same time, but our primary goal is for members. We want to deliver gains, right? Profits. And then we, fun and entertainment comes secondary.
Sure. Trades, by all means, most important. But man, hey, trades can be stressful, so it's important to have that little bit of humor inserted in there. Yep.
And Oracle's just going nuts. Wow.
And so
now,
far,
some people would say like this is sometimes occasionally we'll do a trailing stop. I didn't want to do it because I wanted to just book a gain and like get off on the right foot today. But in this situation, you could always do a couple dollar trailing stop on Oracle. That's just another option for us as traders.
Google's again above 317. Let's see if we can punch through that level. 317.75, get our add.
WDC is getting close, folks. Getting very close. All right, just got filled. 150 and 27 cents short. 1/8 position on WDC. 150.27. We're going to be looking to add about $1.50 higher. We'll be looking for about $1.50 as well.
Got about 10 cents from our ad on LITE.
Yes, Martin, I'm still waiting to add to that position. Same level.
MicroStrategy starting to consolidate a little, which isn't a bad thing. It's had a big move from 165 and change to 172. Bullish consolidation, sideways chop is fine for 10, 20 minutes. Getting energized for that next move, potentially.
No, William, he didn't.
We are not trading options. We are trading the stocks themselves.
Yeah, there's no reason to trade. People always ask that. The only reason, so number one, trading options using day trading to trade or day trading options is extremely risky. I'm not sure. There's only a handful of people I know that can do it successfully, because you're actually, what are you going to do? Play your 0-day options? Hit or
All
miss.
right, I just got filled 317.77. Just got filled on Google 317.77.
Yeah, so again, it just adds a whole new layer for day trading. Plus, if your spreads can potentially be wider on options versus on something like the stuff we're trading, it's pennies. Now, listen, if you have a very limited amount of money, yeah, people sometimes do that. But again, generally, I don't know if I've ever heard of anyone surviving with a limited amount of money because they're trading to try to make more gains. It's better just to, yeah, trading the stocks is hard enough. I don't like adding the whole layer of options into the mix.
Guys, getting close to the next ad on WDC. 151.77 is that level.
My next ad on Google, 320.27. At a Pierce of 320.27, I'm actually going to double my position. I'm going to go 2/6. Wow, 413 on stocks. It was above $5 Friday.
MicroStrategy approaching 173, guys. Still riding it. Still holding. Still holding.
Nice. Could be putting in a daily bottoming tail. Still got, a couple hours to go on that thing. Great move up on that.
Good rollover on light.
Yep.
Beautiful.
Need about $1 more.
Flip over to you on light here. There you go. What was that line it just took out? Talk to people about that.
This one?
No,
this
no,
one?
the little, yeah, that one.
Oh, okay. So a lot of people ask me about this. My favorite indicator is VWAP, the volume weighted average price, and that's this thin blue line right here. This green line, yellow line, and teal line up here are standard deviations. Each of those is one standard deviation away from VWAP. So one standard deviation to the upside, downside. Oh, that's our take profit level, about 10 cents away. Oh my God, 8 cents away now. Anyways, each of these is one standard deviation away from of the volume weighted average price. Oh, 8 cents away from our take profit again.
Yeah, crazy.
MSTR just 173 and is just pulling back a little bit. What were you saying, Ben?
I was gonna say that means once it breaks 186, it's gonna flush quite nicely. Excuse me, 286 on LITE.
Yeah, I think this thing comes easily back below 285 today.
All right, WDC coming in. We're looking for about $1.50 on this.
Oh, come on, 20 cents, 23 cents.
It's a lot of support there.
It likes to tease.
Yeah, sure does. Garrett's waiting for a move above 175, I believe, is where he was targeting.
Yeah. Yeah, we already took a 2K plus off this, so like, at this point it's kind of a freebie. We're in the money $4+. And let's let it do its thing here.
Google's getting below our ad level, which is nice to see it come on.
All right, guys, I'm out. I'm finally out of LITE 286.57, $3 yen. Finally, we're
Nicely
out.
done.
Nice,
Thanks.
Lud.
We just had a
Maneuver.
weird. It was a little weird.
Patience.
Just out there. 286.57. I'm out of LITE for a decent chunk there.
And I am out of WDC. 148.77, folks. 148.77.
All right.
Where's the sound? Where's the sound? We need
Where's the money
green
sound,
register,
guys?
or-
I got it. I got it coming.
It's not here.
There we go.
Yes.
All right. There you go.
Two of them. There we
Two of
go.
them. Now, Drew, Gareth, and I have had a winning trade, and STR is in the money. Ben, I gotta ask.
What's up?
Is this going to be a winning trade?
It's a good question.
You gotta get one too, buddy.
Oh, he will. Ben is relentless.
He is. He'll even
How many-
trade the afternoons.
Yeah, he'll trade anything.
On-
Yeah.
On Google, I'm looking to exit a 1/6 position at 315.76. 315.76. I'll exit at 1/6.
All right. Let me get to a couple of these questions.
Yeah, Lee asking, just curious, are you all in the same location or are you all remote? Well, we are all right here in the same office at the moment. There's occasions that we do work out of the office and work remotely, but we try to get together more often than not.
Yep. Do we use stop losses? Yeah, I use stop losses. It's based on a percentage of portfolio I'm willing to risk. For me, it's around 7 to 10K on $1 million account, but every single trader has it differently.
Yeah, that's the key is every trader, and that means everyone following, anyone who decides to follow any of us, you always have to figure it out for yourself because we're all different, right? We have different risk tolerances. Trading as long as I have, I'm able to maneuver better than maybe some other people. So it just depends on personal preference, really.
And like Gareth makes a lot more money than I do, right? He's a better trader. He's been doing it for longer. So his stop losses, he can manage it differently than me. Whereas my gains, even if we take a similar amount of trades, will be a little smaller. You see, I've taken 34 trades, made 40K. Here's taken 37 and made like 101K, right? So his gains are like almost double the size on average than mine, right? Despite taking the same amount of trade, more than double. So he can risk more because he makes more, and I'll risk less because I make less.
Yeah, and I think another aspect too is a lot of people say let's say I entered my 1/10 on MicroStrategies or my 1/7 on Oracle, and the question is like, well, he didn't tell us a stop. Well, number one, I don't even have my full position yet, right? So every time we enter trades, folks, and this is a big difference between most traders and successful traders like us, is that we go in assuming it's going to go against us. And so, if we went all in full position, we'd have to have a stop right away. But because we're accumulating, there's no even thought of the stop yet. All we're trying to do is figure out, okay, how are we going to get this bounce? Now, maybe sometimes we get it right out of the gates, the easy button,
Other times we have to maneuver, right? And so you see the differences. MicroStrategies was a little bit more of a maneuver for me. Oracle did go against me, never gave me my next entry, but then went right to target. Boom. But again, it's the mentality of going in small actually makes you more money. Like going in assuming it could go against you will in the long run make you a lot more money. It's an important angle to think about, really is.
Yeah. Kyle says, "Good morning, gentlemen. I'm a millennial truck driver from Ohio trying to get into trading full time. My question is, how much cash should I have before attempting to go full time? My second question is, if you have a brokerage you recommend, using Robinhood is not always conducive for trading like this. Thank you."
Yeah.
So, first of all, I'd say don't use Robinhood because first of all, you can't short.
I think they were just starting to debut it. I could be wrong, but either way, I mean, you definitely want a brokerage that's probably more catering towards that. I love your question about how much money. It's not about the money. It's about your proven success. I've seen people that have millions of dollars and they come in and they blow their accounts up with millions, and I've seen people with 10,000 come in and they'll blow up 10,000, right? When the thing about when you go into this full time, meaning you ultimately quit your job, number one, that's a really big step to take. So you better be sure you're an expert trader at that point, because you can't risk it, right? All of a sudden, you're in a position where you don't have a secondary income if you make a bad trade. And so you have to prove to yourself on a limited basis that you are successful. Honestly, I would say for, I don't know, what do you guys think, like a couple years? I mean, before you really take that leap. Yeah. I mean, it's
I'd say that's safe.
yeah.
If you're like if you save up money and take time, like set aside 6 months and you have money saved up, it's not going to affect you, and you just take that time to really learn, then yeah, you could definitely do that. But as far as like everyone thinks when you're getting into trading you're going to become a millionaire instantly, they hear all the success stories, getting rich quick, right? And if that was the case, um everyone would be a trader, right? And it would be really easy. But that's not the reality. And we're not trying to swing for home runs all the time. Most of the time, we're taking small gains over and over and over again that accumulate over time. And being able to do that, manage emotion, all these things are things that you can only really learn with time. It's like you can watch courses, you can listen to us tell you, don't trade with emotion, but if you're down $10,000 in a trade, you're gonna have emotions. It's normal. So it just takes time.
Yeah.
Yeah. There's nothing that replaces experience, right?
Yeah. And honestly, that's the difference between why my gains as a trader trading on the same portfolio is usually a little bit bigger, is because I just have a lot of years on these guys. These guys are all great traders. If all of us could be at that level of them, everyone would be making a lot of money. But experience of 27, almost 27 years next year, the patience, the entries, it's just that those little small things can make a big difference in P&L over the course of time. And so it'll come, like this, I always say, Ben ran a CrossFit. I just, I found this passion in high school, paper trading basically, and was like, I got to figure this out. Lawton was marketing, right? I mean, all these different, Drew, you worked at a golf club, right?
Yeah, I was in sales. I was running resorts.
And so there's no, what's nice is there's no occupation that's like, oh, I'm in this occupation, I can never be a trader. But at the same time, you have to be willing to put the legwork in, right? I mean, you want to make the big bucks, you want to have the dream life of, working on a cruise ship on vacation or at a all-inclusive in Mexico and just day trading and making thousands of dollars, then going to the pool and the swim up bar. I mean, that's the dream, but it doesn't come easy. And I don't think any of us would ever tell you guys it comes easy. It's hard work and discipline.
No, but the education is the shortcut there. The education is the shortcut to get your mind trained. Just like Lawton said, we're taking many trades. Look at our track record. We've had hundreds, if not thousands, over 1,000 day trades this year. And we're taking a lot of gains. And what that does too is it helps build your confidence in everything that you did learn. right? So you've taken the courses, you've learned our methodology, you've studied these levels, you understand trend line analysis and different gap fill or even Fibonacci analysis, whatever the case is, you understand what you're looking for, and that helps you narrow down the levels, which then it increases your confidence, which then increases your success rate, and then it all just kind of spills over from there. There's always going to be losers. It's just part of the game. It's just part of, I like to say this in this room, it's like sports. You know, you had one undefeated NFL team and you haven't had one since. And, you know, it's just the way it is. You go into combat, you go into play sports, you go into a challenge, you're not always going to win, but the success rate is high enough to be extremely appealing to work in this industry.
Yeah.
Yep. Evalio says, I'm based out of Canada. Is this service something I can fully benefit from? Yeah, we have plenty of traders from Canada. We have traders from Japan, Portugal, the United Kingdom, all over. It's just finding a brokerage that allows you to trade with us and being able to, depending on where you are in Canada, if you're on the West Coast, you might have to wake up a little earlier, right? But if you're on in Toronto or whatever, you should be fine.
Mm-hmm. Yeah, that's so true. And I know people in the UK, they do the spread betting. That's a lot of people in the trading room do that. And I think there's some sort of tax awesomeness to that. I don't even, I'm not a tax guy, but they always tell me like there's no tax on. I don't know what it is, but
Yeah,
yeah,
no
pretty
tax
cool.
on spread betting.
Yeah, something like that.
Interesting.
But yeah, I mean, we have people in yeah, like you said, all over the world. I mean, I give a lot of credit to people in Australia. They basically
Mhm.
they're in here and it's like midnight and they're still going hard. So
Yeah, that's incredible. Yeah, just Lawrence, one of our members from the UK, chimed in. Yeah, he said tax free, just as you mentioned there. And Lawrence also did say, I want to mention, he said this game is life changing and achievable through hard work, but it is sure not easy. Nope, not easy.
nope.
But you know what? You find yourself just addicted to it, and it helps you through so many other aspects in life. You then start understanding when to buy a home, when to buy cars, when to access cheaper interest rates. All of that just ends up being an additional benefit to studying the markets.
Yeah, I think that's such an important point is that, you know, one thing that trading and technical analysis teaches you is to not be part of the herd. The sheep essentially always buying at the highs because you're reading the charts and you're like, okay, this is ridiculous. Like, yeah, it could go higher, of course, but I'm not going to put myself with the risk of the collapse coming in. I mean, you look at what Sandus did last week, dumping from, I don't know, what did it drop from like 280 down to 190 or 180. You know, and then you utilize that across other things like when everyone's bidding up houses in 2021 and 2022 paying cash over market, you're like, yeah, you know what, maybe I'll just step back. And then all of a sudden, look, now the housing market's coming in sharply and prices are dropping, versus most people get caught up in the FOMO and they just rush in and they'll pay any price. And those type of lessons are really lifesavers across the board in all financial asset classes.
Yeah, it makes you just what I found. It's just made me a better, well-rounded person. There's so many other jobs that we get into where you don't even really pay attention to what the markets are doing, and then you're left blind when you need to get into the markets and make a big decision like a home purchase. But it just helps you become a better, well-rounded investor and purchaser of all goods. Speaking of which, look at this 10-year yield. So 10-year yield is declining today. This is part of the reason I do see the markets lifting up a little bit today too. 10-year yields coming down. We actually have got our Fed Watch tool has increased over the weekend. Had a Fed speaker on Friday discuss potential rate cuts in December, whereas last week that was switching. It was about a 40% chance of a rate cut in December, and now I think it was around 70% this morning.
Yep. Yeah, I think that's the big one. Yeah, more and more likely to see that December cut. I don't think, by the way, it's safe. Like a lot of people are looking at that and like, oh, well, then the markets will go back to all-time highs. I disagree. I think the highs are in, but it's certainly you have to have reasons the markets are going to bounce, right? Markets don't just dump out and just keep going straight down. So the reason now buyers will be coaxed into the market to buy the dip is, oh, well, we'll get a rate cut in December, and sure, you'll get.
All
a
right,
bounce
heads up.
high
I'm
rate.
out of a 1/6. I'm out of a 1/6. 315.76. I'm out of a 1/6, 315.76.
Nice. There you go.
All right, now we can add to it. If it gets back above 318, we'll just add back.
Nice maneuver in there.
Yeah.
Thanks.
Great.
Finally got an ad. Man.
And you guys can see the ads are so important. Believe it or not, us in the trading room, there'll be instances where we actually are rooting for the position to go against us to give us our ad. Because once it gets close enough, it's like, well, the setup is so good. Yeah, I want those extra shares. And so you're like, come on, go down just a little bit more to fill me. Or in this case for Ben, it was like, come on, move up, Google, a little bit more. Get me that bigger position
I know, it
at a
seems
better
weird.
short average so that when it falls, which the chart is still saying it's going to do, then it pulls back and I can make some money, right? Yeah, very cool.
Nice. Way to go, William. Nicely done there. Here's a really good question, and I want to at least answer some of this because this was something I went through when I first joined this room. Brandon's asking, is it important to take the Winning Trader series in addition to doing the live trading room? I have a solid stack from doing real estate the last 10 years and want to make sure I do this right and don't squander it. Yes, Brandon, it is so critical to you taking that education that you will inevitably have your big loss if you don't take it. Now you're going to have a loss too if you take it as well, but I had this happen personally to me. I took some of the educational courses when I first started just to get my foundation in line. And then I waited to take the full methodology, the Winning Trader series, because I was like, I'm in the live day trading room. I'm following these guys. I should be fine. But one thing I left off is, is using, just like Lawton touched on it a little bit ago, when the emotions creep in and I'm having a trade that goes against me, I don't know why it's going against me. I don't have the education. So then the emotion is going to bubble up even more so. And then I'm going to make a wrong decision. That's mainly why we just try to teach you all the education to make you behave like a robot. You see a price hit a level, you get in the trade. You see a price then reach the target, you get out of the trade. You try to perform like a robot to help eliminate the emotions, because inevitably there will be a trade go against you. And if you don't know why it's going against you and you don't have the education, then you're likely going to make a wrong decision. So the education is, I can't stress it enough. That's why the first thing I did when I came here, I created a beginner trader series. Actually, it's a course that's currently about to be released, the Trader's Core, because it touched on certain things outside of the Winner Trader series, like handling your brokerage setup correctly, things I stumbled on that weren't necessarily in the charts. I wanted to just get everybody on board to get them from A to B, being the success point much faster than even what I did, which was a Cliff Notes route. I wanted to see if we can't make it even faster for the next people to get them more successful and enjoying trading.
Yeah. Yeah, it's super important, guys. And also, if you're in the trading room and we're discussing things like time counts and different things like that, like different setups, and it's important to kind of have a basis for that because it's about the confidence, right? The confidence. We always, the old adage is you could give a man a fish, feed him for a day, teach a man to fish, and he'll feed him for life. And that's couldn't be more true in this game, especially with the amount of money that we as traders have the potential to make. It's really incredible.
All
By the
right.
way, take a look at this, guys. Who wants to say what type of pattern formation is on MicroStrategies on the intraday 10-minute here?
So you're saying Bitcoin's going back to
Yeah, it could. I mean, really, if MicroStrategies goes up, it does imply Bitcoin is probably going up, yeah, in the near term here. Now, listen, this is an untriggered pattern, so let's be fair. The neckline is right through here. Change that color to have it pop out more. There we go. Well, let's see. Let's see if it triggers right here, and if it does, the upside is massive. Well, not massive, but be about a $7 move from a break. So it'd be like near 180. 180 would be the target if it triggers, and trigger would be a break of the neckline here around 172, 75, 173. So just an interesting little setup there.
Okay, so I see this question a lot. A lot of people are asking for the day trading room, what position size means, how we calculate that. you want to answer that, Gareth, or do you want me to?
Sure, I can. And we try to keep it super simple. So all of us have $1 million portfolio. That's cash in an account, $1 million. And what we're doing is when we say a 1/5, you would divide 1 million by 5, right? So it'd be 200K. If it's a 1/10, it's 100K, right? And so we keep it super simple so that you can then replicate that in your own account if you so choose. And so the idea is, again, if you have a 100K account versus 1 million, it's like, okay, well, how do I match that position size? And therefore, by doing a fraction, you can easily calculate it out. So that's really the essence of it. We just try to keep it as simple for you guys as possible, right? And what's nice about $1 million portfolio is that we get 4-to-1 margin, right? Day traders intraday 4-to-1 approximately. I mean, there's some stocks that are less, some that are more, but it basically gives us that ability to have, we could have a full position going, and then we could still day trade over here because you have that leverage. So you could have multiple positions, even if they're full positions. But yeah, essentially it's just $1 million divided by whatever 1/5, 1/6, 1/7, 1/10, whatever we end up doing. By the way, I saw another question about MicroStrategies being delisted. Yeah, that's just white noise to me. A true technical trader, you want to be aware of the news, but the news, like, it doesn't. That's why the stock's been pounded, right? I mean, it's actually trading below what its Bitcoin is actually worth that they're holding. And so these type of fear things, which is great for us. So headlines like that are going to make retail a little skittish. That means there's more panic and fear, which usually means that there's better opportunity for technical traders. So again, always be aware of headlines. Headlines, they're going to trigger emotion. That's what the media's job is, right? If no one watches, they don't get to sell their TV spots or their ad spots. So they want to trigger emotion. We as traders need to be agnostic, unemotional. What's the chart saying, regardless of the news?
Google's heading back up. I have an ad level at $318.39, $318.39, and then if it wants to pierce $320.23, I'll add again. Abercrombie and Fitch is actually looking like a possible good long. It's got the double bottom.
Let me flip it to you so they can see.
April lows, $65.40. That's a good sell-off. Look at this continued move. You remember when we were shorting this thing at $180, $190? Look at that move. 70% drop.
Wow.
Yeah, I guess they took the AI out of their jeans. They, I don't know. Maybe they need Sydney Sweeney to get into their jeans. I don't know what's going on there. Anyway.
Or probably would help.
Svetlin saying, would I re-enter Oracle? So Oracle's having a great pullback here. As of now, I'm not planning on it, but there's always a level, right? So if you're really aggressive, you actually could buy it right here. There's this former pivot. Look at that, right into this area. You probably get a quick bounce. For me, looking for like a multiple dollar gain, it would have to come lower. Probably I would do like a 618 of this move, or even a 786 of this reversal move. But yeah, I mean, it definitely. Every stock is on the radar, but we only want to trade the best of the best, right? And that's how we keep our win rate and our stress down, frankly. I mean, we all end up fighting positions. We all have losers. Heck, I've had some big losers this year. But overall, I've made a lot of money because it's the consistency, right? You can afford to have a loser here and there, and even a big loser, as long as the consistency is there to be making money on the other trades, a majority of the trades. But again, the key is just taking the best of the best, so that stress is a little bit on the lower end. And sand is still strong.
Kelvin asking, if you can't trade all day, does it make the most sense to trade for the first hour of the day or the end of the day? And by a large margin, you want to trade in the first hour of the day. That's when you get all your volume, your volatility. That's where the opportunities are present. And quite honestly, though, if you do have a situation where you can't look at your phone or can't access your trades at a portion of the day, I would even question how much I would want to get involved in the morning, because Sometimes you can be caught up in trades that you anticipate being in 5 minutes, and it just turns out to be a little bit longer. So you want to have that flexibility, but there's no doubt about it. The first hour of the day is by far the one that has the most opportunity.
Yeah, that's so true. I would say of all the trades we've taken as a combined group this year, 97% of them are in the first hour and a half of the day. So, like we always say, is like, if you have, let's say you work a job where you start at noon or 1 in the afternoon or even, in the evening, there's an hour and a half in the morning can be very lucrative to a trader. Let's do a check-in on MicroStrategy. Yeah, it's still just chopping. Still
Look at
potentially making it.
AVGO.
AVGO is.
That's up
Oh, wow.
8%. A couple of the people were talking about it, Martin, saying, anybody want to look over AVGO? First real level I have, maybe 370, but that's like the first level. I like 378.27 actually. It's moving up. The volume isn't super heavy, so I think that there's a lot of people who are buying into this. Not a lot of selling pressure.
Also, one thing to note is it kind of made a bull flag here. See the move up, and then this sideways chop was bullish, and now it's getting that move. There's a little trend line here at that 370 level. You're right. But yeah, especially at this time of day, unless it gets higher, I wouldn't want to do, at least for me. I think this double top around 375-ish, though, looks interesting.
Yep, that's where I would short it. Maybe 376. Pierce at 376.
What a move, though. Wow. See the bounce on Oracle right there? Again, just a small bounce there, but that's just a more aggressive trade. Just noticing this consolidation high pivot on Friday, the breakout retrace to the scene of the crime that should start heading back up. Again, this time of day wasn't worth it for me, but yeah. Costco's weak again today. Look at this breakdown on Costco, this trend line right here.
I still hate that I have to show my ID getting into Costco and then at the register. I'm like, yeah, make me do it twice.
That's true. That's a good point now, because they now make you scan it when you walk in, right? So they know you gotta, and they huh, maybe they'll do away with that. I never even thought of that.
No, they just started that. Come on, why are you gonna ID check me twice?
Yeah, you all of a sudden became no member while you were in the store with all your free
Not only that, but yeah, I was gonna say not only that, but then you're like, all right, I'm going in there to buy like 3 things, right? And then you walk out with like 20 things, and it's like $400. It's like, oh man, insult to injury.
I know. I went on Friday, or no, Saturday, spent 250, and then my wife says, "Oh, let's go back to Costco." All right, another 250 or 225 dropped. How?
Oh, here we go, guys. Watch MicroStrategy. It's trying to do it. Trying to break the neckline of the head and shoulders.
So you're gonna go long there?
Well, I'm already long. I'm just riding this last little bit here.
No, I mean you're gonna double up there.
No,
Like you're gonna.
wow.
Come on, it's bullish.
I
The
never.
move is so
have you ever
big.
seen me
It's like-
average up once in my trading career? At least not in my
No.
recent trading career when I knew what I was doing.
Yeah,
and that's the funny thing, guys, is a lot of people ask that, right? Hey, do you guys ever, people say, add to your winners. Yeah, if you want to add and bring your average to a worse average, and then it drops a little bit and you're out of the money again. I do not like that policy, man. I mean, it's one thing to let your winner run at least, but basically the idea is you should always be making yourself a better average, not a worse average, in my opinion.
I'm just saying this Google is pretty amazing.
I mean, the volatility.
The volatility is just incredible. Yeah.
I mean, it's a very, exciting chart.
And that actually was up decently today too. You'd think it would be crazy.
I know it's overextended, but it's just also sleeping.
Yeah. Let's look at Eli Lilly. So Eli Lilly, guys, it actually became the first biotech or drug $1 trillion stock on Friday. It looks like it's just kind of not doing much today. I don't see anything on it really. There's no trade. I mean, a daily chart's extended. There's no doubt about it. But as a day trade, I don't see anything there. I do know Novo Nordisk. They had bad Alzheimer's data. It opened lower. This is one that if it had flushed would have been, we probably would have traded, but it never really flushed for us. Oh yeah, look at MicroStrategies, MSTR. That's nice. G Smith saying, do we ever trade the indices or just individual shares? Well, I'll trade the SPY sometimes or the QQQ, so the S&P or the NASDAQ. We have people in the room that trade futures off of our calls on the levels on the S&P. But the thing is, individual stocks usually give you more volatility. Again, there's once in a blue moon you'll see the S&P getting crushed about 3% or so, in which case you have that volatility. But aside from that, it's just better opportunities. Yeah, let's look at light here again. Ooh, it almost got to double top. Now it's starting to come in a little bit.
You want to trade it?
Yeah, 300 Pierce maybe, but not before 300 now since it's so close. But I'll let you rocked this one earlier. That's all you.
I mean, yeah, that's where I wouldn't touch it to 300 either.
Yeah, Tesla's up a little bit today. Actually having a pretty good day today. I don't see any trade on it though. Notice, by the way, guys, so Thanksgiving week, number one, notice how volatility is dying out more and more. This is a great differentiator between those that won't make it as traders and those that will. Traders that will make it are disciplined enough to understand that once volatility is sucked out of the market, it's pretty much you sit back and you're disciplined and you don't force trades. Retail or newer traders, they're accustomed to wanting the adrenaline rush of being in a trade, and they'll trade all day long, whether there's a trade great setup or not, and they'll end up just chopping themselves. This is where once you get later in the day, the algorithms take over, and this is the computerized programs of the institutions, and they'll just bully you. You'll get in a trade, it won't be a great setup, you'll just be like, oh well, it looks okay, so I'll get in, and the algorithms will be like, oh, I see this sucker here, and like, let's push it the opposite way, and they'll stop you out, and then you'll see another one, oh, then they'll do it again. And so the reason why trades are so great in the morning is because that's when the most retail and the most emotion is in the market. Once you get to lunchtime-ish, here we're approaching 11 a.m. in about 15 minutes or so, the volatility gets sucked out, and it's just like, do you really want to fight algos? I don't, especially when they literally will see my order in the market and be like, all right, he just went long, let's push it the opposite way. So at least that, just give that a good sense, guys. Just keep that in mind. Really, really important. And again, something like light, if it gets over 300, there might be volatility there, and there's probably a lot of retail, so that would be something we might still look at. But especially you look at some of these other names like an Apple or something. I mean, these things are, even look at Google. I mean, Ben got in this with into Google with those volatility, but it's already dying out.
Could be putting in a interesting inverse head. I mean, a head and shoulders pattern
on the
so
1 minute.
I still like it a little bit. It's a down sloping trend line on the possible inverse. I mean, the head and shoulders pattern could play out.
Yeah, I see it there. Yeah, shoulder, head, shoulder, maybe. Yep, needs to curl over here.
Yeah.
Okay. Yeah, Yazid says, hi, I watch you from Saudi Arabia, by the way. My question is, is this what you do on smart money stocks and ETFs monthly so people can watch and copy your trades for an entire month for $150? This is the live day trading room. So you get this for if you want to watch this day trade specifically. There's a 250, which means you get access to the first two closed trades of the day, and the $400 level where you can time chat and see everything that you're seeing now. But we also do the afternoon. Smart money stocks and ETFs is where you get our swing trades specifically. So you wouldn't get this, but this is on our website for the Apex live day trading room.
Yeah, very, very important differentiator. So what you're witnessing here is day trading versus the smart monies are swing trading. Swing trading is holding a stock for a few days, a week or two, a month or two. It's a little slower paced so that you can afford to have a job and not really miss out much because they're swing trades. We're looking for 10% moves versus day trades. We could be looking for $1, right? I mean, like a couple dollars on something. And then we're in and out within seconds potentially. There's really no way to, unless you're in the live trading room with us, there's no way to safely day trade via alerts. In fact, we don't even send alerts out for our day trades because by the time you were to get the alert on your phone and try to make the trade, we'd probably be exiting the trade, right? And so you'd literally, I mean, it'd be a losing proposition. But for swing trades, because the time frame is much bigger, we're looking at daily, weekly moves, monthly moves. That's really what you want to focus on.
Yep.
SanDisk is getting up to 229.11. Wow, still pushing 13%. It wasn't time of day. I would be interested in it.
I was gonna say, is anyone up for taking that trade?
It's all you, man. That's your stock. That's your stock.
That's my stock. I think that's Ben's.
Sure,
stock.
Why not? Today can be your stock.
Yeah, it's a scary stock to trade.
Mm-hmm.
One of the scarier stocks to trade. Okay, Amit says when you say I'll take half off the table, do you mean half off the add amount? So half off the table means half of our current position. So if we're in a 4/8 position, we'll take 2 of those 8s off the table. If we're in a 2/10 position, we'll take 1 of those 10s off the table at that level, and we'll cover it or sell at that level. John says, thank you all for the free day, guys, and discounts. Awesome. Michael says, is the Apex live day trading room subject to discount or not? No, we're not offering a discount on the live day trading room. I think that this product is so worth it. We're not going to offer a discount on it. It's truly like an incredible service. You can take a look at our track record. You can see what our members have to say. It's like in a league of its own, but we are offering discounts on all of our courses, I believe, on Garrett's course, Winning Trader Series, which is the course that taught us all everything we know about trading, pretty much. We have a couple other courses like the Golden Opportunity, which is about gold, 1 Minute Scalpel, and Mastering VWAP, which is tailored towards day trading. Mastering the Overnight Trade, which is Drew's course, and really teaches you how to draw trend lines and become a master of trend lines. And my course, Zero to Trade Crypto, where you learn how to trade crypto from nothing. So, tons of courses, awesome discounts available for you.
Yeah, it's super true, guys, and it's. The trading room, you could see like, this is the results are based off $1 million portfolio, but you could easily, if you have even 50K, you're making well over the 250 for the two trades a day or the unlimited access for 400. You probably make that in a day and a half. Now, listen, we do have losses, obviously. You can see that on the track record. And I always like to point that out, guys, is like literally the system we set up with the trades here in the cockpit. We call this the cockpit that you guys are viewing. It tracks literally every trade we make, our positioning, or the size of it, the P&L. And the second it's closed out, it goes over, it's locked in, it goes right to the track record. And so, heck, I had a couple months ago, I had a 70K loss, and it's there on the track record. Listen, it is what it is, right? It's real trading. And so I always like to point that out because there's a lot of services out there that aren't as good in my opinion. And I just, we really try to be super transparent. People have made recommendations to us and we're like, oh, that's a great recommendation. Let's give position size. Let's do this. Let's create this cockpit where we show portfolio allocation and exact entry, average entry, current price P&L. And, it's really made to just hopefully be as user friendly and just transparent as possible. So
Yeah. Barack asking, can we do the live trading with you every day? Absolutely. This live, not every day, right? Because some days the markets are closed, but you get access to all of this. You get to chat to us. Get to see a lot of trades in the morning and the afternoon, every single weekday from Monday to Friday, but not on the weekends because there's nothing. And as much as I'm sure Gareth would love to talk to you and sit in front of the camera, um, during that time, we have to take a break a little bit.
it's true. And it's good. It's good to walk away from the screen for a little bit and just regather yourself, have a bite to eat, come back better focused.
Okay, I also saw this question a lot. People are asking what brokerage is good for a beginner. So we're not officially affiliated with any specific brokerage, but we use a couple around the office here, and I can tell you a little bit about them. Gareth uses Interactive Brokers, IBKR. I also have experience with that. Ben uses IBKR as well, but also TradeStation. Drew and I also like to use something called Thinkorswim. That's through Charles Schwab. But I think it doesn't really matter what brokerage you use. The most important thing is that you're able to execute on these trades, right? Because it doesn't matter if the brokerage looks awesome, nice and fancy and shiny, but when push comes to shove, you can't take a trade, right? You're missing a
That's
trade.
right. Yeah, and you definitely want to be with one where they have a good trading platform. Like some are more geared towards like long-term investing, and so it's a little more clunky versus a good day trading platform. So yeah, really, again, we don't have any preference. You guys find the one that works for you. We'll tell you what we use. I like IBKR. I've gotten used to it. I think a lot of it's comfort, right? When you're used to something and you can add, the more used to it you are, the faster you execute. It's very hard. Like if you were to throw a new platform in front of me, I wouldn't trade that well that day because I'm not as quick to be able to execute those trades. And day trading is very important. Swing trading doesn't matter as much. Again, you're just entering an order and walking away essentially. But man, we got close to my target on MicroStrategies there, guys. Got very close to 175.
Don't scare it. Don't talk
I
about it.
know.
You gotta scare it.
I know.
Andy says, so what is the cost for getting access to the live day trading room? Is it offered on a weekly, monthly, or yearly subscription? How much is it? And is it part of your discounts you're currently offering? No, it is not part of our current discounts. It's on our website as the day trade alerts, but it's $250 a month if you only want the first 2 trades of the day. But I don't recommend that because you can't chat to us, and after those first 2 trades, you'll miss out on everything else. The Elite Trader for $400 a month, you get the entire access for the entire day. You get to chat with us. If the days if it's a little more quiet, sometimes we'll take submissions. Like you can be like, "Oh, hey Gareth, what do you think about this chart on AMD?" And he'll look at it. We also offer day passes, so $50 for a day pass, and then a 1 week pass, $150 a week. But that $400 is definitely value, and hopefully, with some of the profits you made today, if you've been following along, you can use that to pay for a month.
Yeah. Probably pay for a month even on a small account today alone. Yeah, it's pretty cool, guys. It's pretty cool.
Finally breaking below 315 on Google.
There you go.
Let's see.
Yeah, Lawrence, good sell on LITE. Yep.
Yeah, I never got to that entry price.
Nope. But to the $300 level. Mike Bull says, Gareth, are the charts you use IBKR? No, we're all using TradingView for our charts?
It's a lot easier for everybody to follow along with if we
Mhm.
all use the same platform.
Yeah, for charts. Yeah.
I also think it's the cleanest looking charts. Like I've looked at IBKR and Thinkorswim charts, and some of them look insane. Like I don't know what's going on.
Yeah, Bobby, if you remember, you can reach out to support. I can let them know to give you that price.
Yeah,
$1 million
Ibrahim,
investment would be pretty cool.
that's not happening again. That was an insane deal.
Yeah. You remember that though? A couple years ago, yeah, we did a 2-year crypto sale. Yeah. Yeah, and the way we view it now is the education is the number one thing. I know everyone wants to just get the trades because they think they can become millionaires really quickly. But those are the same people that will end up the second, we're not there for them, then they end up, blowing themselves, their accounts up. And it's the education, guys. I wouldn't be anywhere if I didn't know how to read a chart. Neither would any of these guys. What we are able to do is in the courses that we have on all the courses. And so, it's just like, I think about this. You want to be a brain surgeon, brain surgeon. I would never choose to be a brain surgeon because it's a lot of stress. I'd much rather sit in my pajamas and trade and make more money than a brain surgeon. But think about all the schooling that they have to go through to be able to do that. That's what essentially all of us have to go through for the markets. Now you can take the route that I took. My route. Let's see, what was my route? My route was I have no clue what the hell I'm doing. And so let me just try and make the markets teach me hard lessons continually for a few years. That was my route. It was a tough route. I lost a lot of money. Thank goodness I didn't have a lot of money when I first started. My learning curve, it was literally years versus with the proper education, you cut that learning curve down and it costs so much less. Versus, think about just the opportunity cost of, when I took, let's say, 3 to 5 years to learn how to be even a neutral to slightly profitable trader. What if I had learned that in 2 years? How much money could I have made and compounded for those additional 3 years, right? It's night and day. It really is. Let's take a look at Oracle here again. Yeah, Oracle's just kind of chopping here. And nothing going on. You can see Oracle volatility's kind of dried up as well. SanDisk came very close to that level, pulling back a little bit.
Yes, it did.
Yeah, it had a beautiful 1.71% pullback so far.
All right, I'm looking to take profits at 314.14. I'll just exit 314, 314. I'll exit the rest of my 1/6 on Google.
Throw up your chart there. Oh, that's a beautiful rollover. Nice.
Yeah, really good sell there. And it'd be nice to get a all green, right, from all the traders.
Yeah.
Let's get one.
And to be fair, guys, I'm gonna close out my micro strategies here in the next minute or so, just because I'm just gonna book it. I still think it's gonna go higher, but we're not gonna continue. I don't think we're continuing this live stream of trading much longer. So I always like to be done with it, so you guys know I'm done.
Yep, same. I think we could get, as much as $5 on this Google. 316.52 is our average. As overly extended as Google is, I think you could come in quite substantially. Could head them back down below 310 or right at 310.
Mike asking, hey guys, could you please offer advice for someone with only 10K in the bank? Would you bother day trading with it? Would you focus on swing trades, etc.? Thank you for your session today and the daily content. I've learned a ton so far. Hey, you're welcome. Hey, thanks for joining us, Mike. I know they've got some new rules they're releasing, should be underway within the next month or so, of allowing people to day trade with less than 25K. Here in the US, you need 25K to day trade with. And that also grants you 4-to-1 leverage. Now, once they have this new rule, I believe it's going to be broker specific how much leverage they
Guys,
give you.
sorry, I'm out of my MicroStrategy here. 173.27. I just exited 173.27. All right, sorry about that, Drew.
Beauty.
Good job.
Thank you.
Cha-ching. There we go. Yeah, so the day trading is extremely valuable because it's more. Gareth and I kind of touched on it earlier. It's more intraday work. It's stuff that you usually can get done before noon, just like what we've done on all the winning trades so far. You can usually get in and out of them in the morning, and then that frees up the afternoon for any other work you may do, full-time job or swing trading, whatever it is. So I think it's critical to have that element to trading. But if you've only got 10K in the bank, yeah, you to see good profits come from that, you're gonna want to have a little bit more capital, but it definitely will help you out in learning it, because just like Gareth said, if he started with a boatload of cash, you're gonna make mistakes. It's just now at a point with a lower amount of capital, those mistakes aren't going to hurt as bad compared to, say, if you had several $1,000,000 and you're losing hundreds of thousands of dollars to learn, that would be very difficult. So starting that route can be fine as long as you're in a country that can use that for day trading. And then that way you understand how everything flows. But I definitely try to get some more capital into that portfolio so that you can see better results in the long run.
Yep. And somebody's
just
in. You go for it.
I was going to say a couple questions that I was seeing here, guys. I said, can you repeat what the indicator was that looks like multiple moving averages? You're probably speaking about VWAP, VWAP. Volume, what is it? Volume weighted.
Volume weighted average price. It's that's on Ben's screen, and you see the multiplier bands. Each of those bands is an additional standard deviation away from the middle, which is that blue line. Is there a record of P&L for your swing trades? For swing trades,
there's a track record. Yes, it doesn't show the dollar amount. It shows the percentage of the win.
Mm-hmm.
But yeah, you can go to the Smart Money, any of the Smart Money services. You'll see those track records. Yeah, Pete. So Pete asking, originally Gareth was wanting to get out around 175 on MicroStrategies and wondering if he's concerned about keeping his money in the day trading day as volume lines. Well, volume usually favors the upside. I actually still think it's going to go up, but I ended it because we're going to be closing this day trading portion of today's Green Monday, and I didn't want to have an open trade going into the afternoon with you guys that I hadn't closed out. So I honestly did it just because we're going to be closing out here in a couple minutes on this.
Yeah, I'm actually moving my exit up a little bit. We'll take $2 if we can get another flush out on this 314.52. I'll exit. Just one more little flush out on Google.
Yeah, if you're a member, Kevin, it's there. If you're not a member, then it's not there. But yeah, it's there. All member. If you're an active member, you can see it.
Logan, the Apex day trading room, and I guess for everyone, the Apex Live day trading room is going to stay open for members throughout the whole afternoon. Everything is going to continue as normal, so we'll be back in the afternoon. We're just going to close it for this Green Monday live stream. But for anyone, if you guys want access to the rest of the day, the rest of the 100 trades we're going to take, Ben's going to take 5 trades.
All right, I'm out, you guys. I'm out. 314.52.
Nice. If
Nice
you want
job,
access
man.
to the rest of the trades we're going to take today, you can subscribe and get access.
There you go.
Look at that P&L today, guys. Great job. 2, 4, 5. 5 trades, all winners. Over 10K in the books. Wow.
There you go. Hopefully you guys made some money today with us.
Yeah, for sure, guys. For sure.
Yeah, don't forget those educational courses are all on sale today, folks. Take advantage of it while you can. At about a 50% discount on those educational courses. treat yourself, invest in yourself, take those courses to study the charts.
Yeah, absolutely, guys. Yeah, take advantage of the deals. They're there, and we do them maybe twice a year, so you won't have another opportunity till probably mid-year next year. But as always, guys, we are here for you, and our goal here is to unmask the complexity of trading. It probably seems complex of why we were taking these trades, but in actuality, it becomes almost muscle memory for us in terms of seeing something, seeing the levels, and everyone can learn this. Everyone can learn how to read a chart. It is not outlandish. So we encourage you. Thank you guys for tuning in, and we hope you guys join us in one of our future services here, either the trading room or in one of the swing trade services. We have commodities, we have crypto, and we have stocks, different services for those. And then the courses, like these guys said, we've all put a lot of effort into these courses to make them very easy to understand, to make them utilizable in terms of using them to implement and make trading decisions. And really, once you take out the kind of the question marks, fear, emotion, trading is just a lot of repetition, right? Muscle memory repetition, just like the gym or anything else. All right. Thank you guys. Great job today. And I'm going to let them play whatever they've got going on here. And we'll see those of you in the trading room this afternoon at 1:30 as always. Thanks as always, guys.
See you later.
Take care.
Sounds good, folks. Have a good one.
Clip this for my TikTok. Your FOMO called. It's crying in the club again. I was a day one fan of that breakout. You were a fake fan, Jordan. Are we in a commercial right now? Cringe. But click the link anyway. This breakdown is brought to you by disappointment.
Verified investing, no cap, all facts. Not financial advice, just facts, charts, and a little attitude.
Here's the biggest lesson I learned while trading. My number one rule for trading is know when to cut your losses. I know it sucks looking at your account, looking at your trades, confirmations, and seeing red. But what if I told you that taking a small loss could prevent an even bigger loss? The biggest lesson that I've learned while trading is to stop out when my thesis is invalidated. If the reason that I got into a trade becomes invalid, there's no point in me staying on. At that point, I'm coin flipping, hoping that things come and turn into my favor, and hopefully I take a win on an otherwise losing position. The most important thing to do in trading is to cut your losses small and make sure to keep your winners big.
Hi Gareth, guys. Really fantastic shows that you guys put out. I watched them all. I've learned so much over the last, let's say, 8 months. I've been watching them on a daily basis. I catch all of the shows. And I think one of the experience that I've picked up from this is that I've learned so much more in my trading career, and I've been trading since 2008, 2009. And I only used to trade as a hobby on Forex only. So I've learned so much more. And you've taken me across all of the different trading, including the cryptocurrencies, and also the stock market and commodities. I did dabble a little bit in gold in 2023, and in September of 2023, I got absolutely wiped out. So I know what it's like to lose a lot of money, but I have a passion for this, and I follow you guys religiously every day. I have gone through the winning trading series, and I did Drew's course, and I also did Dr. B's course as well. So thank you very much, guys. I'm really enjoying it, and I started making money in the markets properly, and you've taught me a lot. Thank you so much.
One of the reasons that I love looking at the charts every day, it's like a puzzle. Each tick of the charts, whether I'm using a 1 minute or a 10-minute or an hourly or daily chart, is a new piece of that puzzle that I didn't have before. And so I get to dive into the charts and look at how that puzzle is coming together. So I might have a particular trend line that I'm watching, but then one day happens and we get a big sell-off. Well, all of a sudden, now I have another piece of information that I didn't have before. And so then I may readjust my trend lines. So trading the charts is really about continually educating yourself and becoming passionate about something that is constantly moving.
Wakey, wakey, Grandpa! You fumbled the cleanest double bottom on Spy last night. I'm talking textbook AF. Ratioed yourself IRL. Brushing your teeth. Cool. Too bad you didn't scrub your risk management first. This isn't a pour over, it's a pullback. And you missed it harder than you missed prom in '84. Bro, that bull flag on Tesla was doing cartwheels in your face. You ghosted it harder than your high school crush. You not only ran out of TP, you ran out of risk management. That was a bearish engulfing on the 5-minute, and you YOLO'd through it. Clown behavior.
Verified investing, built for the ones who hate losing.
Yes! Finally giving main character energy. Proud of you, King.
Verified investing, no cap, all facts. Not financial advice, just facts, charts, and a little attitude.
To be a counter trend trader, it means that you're essentially going opposite the crowd. And the key is to only do this at extremes, right? So when a stock or crypto goes up exponentially, essentially what it does is it gets people to react emotionally to the point where it's all greed, all FOMOing into a position. And what you understand is that there's going to be a counter move at the extreme level of greed. And the idea is by using the charts, we can go opposite of that. And that's to be a counter trend trader, and vice versa on the downside. When you see something dropping, and that panic and that fear starts to take over most retail, they just start dumping because they can't take the pain anymore. And that means that price has gotten too far ahead and there's an opportunity for a retrace or bounce. And that's what a counter trend trader looks for and takes advantage of. Hey everybody, welcome to the Apex Live Day Trading Room. My name is Gareth Soloway and I'm here with all my head traders, guys. We are here to tell you a little bit about what the Apex Live Day Trading Room is, how it works, and really all the nuances so everyone watching this gets a great idea of what they can do with it and how to make money with it and all the kind of the different things. So why don't we start? What should we talk about first, guys?
Well, I just think how much fun it is to be a part of the room together with 4 different traders, right, who have been doing this for years and have a great methodology to kind of rest our skills on, and I think that's why we're so successful. We have a process, and it's great.
And what I love is that we each have a little bit of a different skill set, right? So I look at things a certain way, you do things a little differently, you look at things like VWAP, you're looking at things like RSI, and so people that are in that room, they really get a little bit of everything, and they get this education, which is, again, it's not only the trade alerts that we're calling out, and by the way, folks, we literally give you our exact entry price, our exact exit, position size, all of these things, so that when you're listening and viewing our screen live with the charts, you will know exactly what we're doing. There's like no question marks there.
Yeah, and oftentimes we give our levels out ahead of time. They might not be exact, but we give you an idea of where we're looking for the trade to enter the trade, as well as a potential target, right? So on this particular stock, we're looking for like $1 or $1.50, anywhere between there. And so you have an idea of where we're gonna exit the trade as well, which is huge.
And I love what you said about that, is that it's not like a surprise when we enter a trade. We've talked about that trade setup. We're saying we're looking at this level. Guys, I'm gonna look to enter this long or short at this level. And again, we're probably gonna do a 1/5 position size of our portfolio. So that's the way we kind of differentiate it, right? Is we have our portfolio, whatever your portfolio is at home, we'll say, hey, we're taking 1/5 of that or 1/4 of that or 1/3 of that, and we're putting it into this stock or ETF.
Right. Since we've got 4 traders that are working their own charts, we're able to go ahead and have 4 sets of eyes, give everybody a heads up as to when those levels are about to approach. So it's very transparent. Everybody's going to get their opportunity to jump in the trades with us when they do happen.
And what's fantastic, Drew, you've been a member for 5 to 6 years now?
Going on, yep.
And so we're bringing in members who are now a part of our trading team, and it's really cool to see.
It is.
Yeah, it's a great benefit. Learning the methodology through Gareth and In the Money Stocks. We're learning new methods too, with Dr. B's methods with the 1-minute scalpel, Ben's focus on the RSI. We're just adding more and more layers, making this methodology a very complete and full trading room.
And to the point on that point is that basically the track record shows, and the track record can be verified with anyone in there. I mean, it's dead on. We have basically an 85+% success rate.
Right.
Oftentimes we're getting 5 trades in a day, a lot of these in the morning session. So I think that's also key, is that some people may not have the option to be there all day long from 9:30 to 4. But honestly, if you're in there for the first hour and a half, you'll probably catch 75% of all the trades that we take. And so it really gives people that flexibility to be in there if they want the whole day and educate the rest of the day, and maybe there's a trade, but specifically that early point.
And I think, Gareth, what you've noticed is, you were trading in there by yourself, for years, right? And successful. But now that we have 4 of us, right, there's more trades to take because there's different perspectives.
That's the beauty of it.
So I think that's where the real alpha is, and the members are really enjoying that.
Yeah, and just to let everyone know, you'll see on the page here, you have the $250 option, which we understand not everyone has, 50,000 or 100,000 or $1 million to day trade with. So you may want to start with a lower price point. To get in that lower price point, you're going to get the ability to view our screen, right, as we're trading, right? So you're going to see our charts, you're going to hear us over the microphone, but you're not going to get the extra benefits of the $400 group, which get the scanner, they get to ask us questions all day long, they get to be in there all day long, versus the $250 gets 2 trades a day. Once 2 trades a day are completed, then that's the day for them, which, by the way, on 2 trades a day, you can make a lot of money.
Oh, yeah.
But the idea is we really wanted to have a second price point, a lower price point for people that again, we understand money's, it's tough, right? Not everyone has $400 every month, so there's the $250 option for people. And we always say this, right? Try it out. We have a daily rate, so you can just join for 1 day, you can try it for a week, try the $250 for a month, and then you decide, do you want to keep it, do you want to upgrade, what you want to do? We really just want to give people the option, all the options, you guys make that decision.
And I think, leaving out the scanner, we would be remiss to leave out the scanner, right? Because we have pro developers who have worked with clients like Google, NASA, Microsoft, right? They've developed this scanner, with Gareth's methodology, And it's really amazing because it just directs us to the trades to, the stocks to be in.
Yeah, I love that. I love it how when I used to run this room by myself in the morning, I'd have 1, maybe 2 trades a day. Now it's like, we have the scanner giving us ideas. I have you guys giving ideas and trade alerts, and it's like 3, 4, 5, 6 trades a day.
We had 5 on Wednesday, 6 yesterday. I think 3 or 4 today.
Yeah, and I think it's important to.
Winners.
That's right. The winning has been incredible.
That's not always, right? We do have our losers, and we work through them. We dollar cost average through to decrease that loss, but overall, that high success rate wins, in the long run.
Right. That's absolutely right. Yeah. So I think what we come down to is that we just offer this to you guys, the idea that, there's a path here with us to let us guide and to let us mentor you and to let us have you guys in this room and trade with us and make money with us. And like you guys said, it's not that we're perfect. We're far from perfect, but we will win a high percentage of the time. So it's a numbers game essentially. Right. And at the end of the month, we are putting up great numbers on a month in, month out basis. And we're here for you guys to come and join us and check us out.
Yeah, absolutely. One of the other benefits that's often understated, everybody wants the trades, right? The trades are first and foremost and are very important. As Doc pointed out, we've had a great success rate, but the other element of the live day trading room, we're able to provide live technical analysis to all the charts that any of the members ask us questions about. So the education that these members gain oftentimes trumps the trades that we're able to make successfully. So it's very important to note you're not only going to get trades, you're going to become a better educated investor. It's just an all-around great room for you.
Yeah, and that $400 value gets you that. So again, when you have the $400, you get the scanner, you get the personal coach. One of you guys will be their coach. You're going to get the ability to ask questions. And when you're in there from 9:30 to 4 o'clock, a lot of times there'll be a trade here and there, 4 or 5 trades, but also there's hours where there's not. And the educational insight of analyzing the macro, the charts, having people ask us, can you look at this chart and tell me what you're thinking? That's really massive value as well. It's almost like having a webinar every single day for the entire month for $400.
With four different mentors and,
That's right.
analysts. Yeah.
Incredible stuff. Yeah. Incredible stuff. Anything else?
I was gonna say, and then every once in a while you'll get a trade in the afternoons.
That's right. It does happen.
It doesn't happen all the time, but every once in a while you'll still get a trade in the afternoon, even with all the education that's going on as well.
That's right, and I think it's important to note is that one of the reasons why we talk about the afternoon as being slower is because there's just not as much volatility usually. And so we are very disciplined traders. We're not going to take trades just to take trades, to push out trades, because we are taking the trades, we're making the money, and we don't want obviously to blemish our track record. Like if it's good enough for us, we're going to give it to you guys. If it's not, we're going to sit on our hands, and we're experts at doing that. In fact, there are days occasionally where there's no trades at all. That's just the way it is, but that's what a good trader does.
Exactly.
So, all right, guys, I think that's about it. We thank you so much for checking us out here at Verified Investing. Come join us in the Apex Live Day Trading Room. Take care.
Take care.
Hi, just sharing my personal story, which is more about education than being an active trader. I'm more of a tiny long-term investor trying to maybe transition to more swing trading applications. Your show has been an incredible source of education for me, and it goes beyond TA. I've gained a greater understanding of the wider macroeconomic setup, also about mindset frame as regards not being emotionally attached to your assets, also the narratives and the institutional games being played. But even when it does come to TA, I've learned so much, and I can really see the improvement compared with 2 years ago. So I'm very, very grateful for everything that I've learned, and I can't understand why Verified Investing subscribers, how it hasn't grown a lot more than it has. And also the point about paper trading. One of the things always put me off, but by watching your program, I feel also it's like a form of paper trading. And I see myself recognizing certain patterns and things. So even from a paper trading idea, really would encourage any and anyone to watch your show on a daily basis. It's fun. It's like a Netflix series. You'll enjoy it. And I'm just talking about the initial game plan and trading the close, but there's so much more. Anyway, Wishing you all success and a great day today.
Hey everybody, my name is Gareth Soloway and this is Smart Money Crypto. In this service, you're going to get trade signals, buy levels, sell levels, everything you need to be able to conquer the crypto markets. In addition, videos almost every single day, probably 6 days a week. So literally, you're going to get them even on the weekends. In addition, what do? I post up chart levels, constant flow of information from me to you, morning, noon, night, weekends, whatever it is. I am there scanning charts, finding the technical analysis and data points to give you. This isn't about meme coins. This isn't about hype. This is the data just for you guys to be able to conquer the crypto markets.
I've been trading stocks since 2013 and crypto since 2017 and hope to create a nice retirement. Around 2020, 2021 was the first time I saw Gareth on Kitco and him mentioning probabilities and technical data. This sparked my interest to follow him more on other shows. I've never really liked to use social media and listen to all the BS. When the Daily Game Plan started airing, I have pretty much watched it daily and it has made me a better trader in all assets. A saying I learned many years ago is he who has data wins. For me, what I have learned is right up my alley. Thank you, Gareth, for your teachings.
Hey everyone, I'm Elizabeth Copeland, Junior Trader with Verified Investing. Thanks so much for joining us here. We're at the Orlando Money Show 2025, and I am joined by Keith Fitzgerald, principal of the Fitzgerald Group. Thank you so much for joining us. Just gave a talk next door, and the title of that talk was, "You Got This, I Promise." And that's been your message for this particular 2025 Orlando show. But why is it that message super important to investors, especially right now?
Well, there's a lot of doubt. There's fear, there's uncertainty, FUD, fear, uncertainty, doubt, right? But one of the most powerful attributes of anybody, whether it's investing in life, your dreams, your success, whatever it is you really do got this. So you got this, I promise, because if you can mentally make the jump, I guarantee you'll get it, whatever it is. So when I'm talking to young university students like I just did, or I'm talking to investors, I'm talking to professionals, it doesn't matter. Because if you really believe that you got this, odds are you will. But most people don't make the jump. They never make the jump. So I want to reinforce that as somebody who's been in global markets for 45 years. That phrase, that seemingly insignificant phrase, it sounds trite, but it's been the most singular, powerful influences in my life as an investor, as a husband, as a father, is you really got this. And if you believe it, you will.
Man, that makes me feel really confident. I'm
Yeah,
ready. Yeah,
100%.
I'm ready to go.
Investing in optimism beats cowering and pessimism every day, every time. So you got this, I promise. Do what? Invest in optimism, because that's the path to profits.
Right, exactly.
Yeah.
That's all the great way. Very well said. So you've been called a market visionary by Forbes.
Oh my goodness.
And right now, with concentration in mega cap tech, geopolitical tensions, and policy uncertainty, what is the opportunity that you're seeing that investors may not be seeing?
Well, one of the things that investors get bound up in is they don't understand that fear, uncertainty, and doubt is actually an opportunity. So another one of the sort of Keithisms, if you will, is that chaos creates opportunity. And the more the former you have, the more the latter there is. So as we look at the headlines, as we look at social media, we look at all of that out there, there are loads of reasons not to get started. And you can invent up dozens, thousands of reasons not to get started. But if you look at history and you look at the markets and you look at innovation, number one, innovation has never stopped. In recorded history, it may slow, but it has never stopped. So that's number one. Number two, investing in optimism means you're constantly moving forward. You're constantly looking for that next opportunity. Right now, AI is one of the largest single investing themes in recorded human history. We stand on the cusp of what I call the sixth wave. Now there's steam, there's electricity, there's things, there's technology, distributed power, penicillin, the internet itself. Now we're talking about something that's never been seen in recorded history, where knowledge is building knowledge. And every business on the planet will adapt, adopt, or die. So the mistake most investors are making, the thing they're not seeing, is they're looking at AI and saying, oh, it's just a tech. No, no, no. This is going to transform humanity. It's the greatest tech of all time. And it's going to infiltrate everything from your gas station to your dry cleaner to the NVIDIAs, the AMDs, all the things that we talk about every day in the market.
Right. And so you're saying, look at the dot-com era and you said the dot-com bubble, but then you go to AI and you're saying that maybe it's not the way that the next big thing that's going to pop. It's going to be the next precedent, the next level to only continue.
Well, it's very different. I run into that all the time on television, at conferences around the world. Everybody talks about AI bubble, AI bubble, right. AI bubble. Well, it's not a bubble because the AI bubble is very different. It's not a bubble. It's an opportunity. If we're folding proteins 100 times faster, we're training AI models at 1/100th of the cost 5 years ago. There's real progress, real medical cures, real developments taking place. The dot-com bubble, which I lived through, that was very different. That was vaporware. That was companies that were just moving back and forth. It was a shell game. Right. Pets.com, talking sock. I mean, really? Yeah. That's not NVIDIA. So people talk about that and they say, oh, valuations are high. Yeah. Well, actually, if you understand how accounting works, they're not high. They're very low. So this is about looking to the future, not the past. And if you're looking at the past, it's logical to say it's a bubble. If you're looking at the future, this is just in the early innings.
I love it. Well, thank you so much for taking your time.
Thank you. Appreciate it. Likewise.
Yeah, have a great day. Yeah, thank you.
So how long do I hold a swing trade for? So it really depends on market volatility and the underlying asset that I'm trading. So for example, when something is at all-time lows, but it's getting up to some resistance and it's a 15% profit, if I've only held it for like 2 weeks, I'm gonna take that 15% and move on to the other one. That's the beautiful thing about swing trading is you cast a wide net over a bunch of stocks, and when you get 10, 15, even 20% in the money, it doesn't matter how long it takes, it just matters what profit you're looking for.
Wakey, wakey, Grandpa! You fumbled the cleanest double bottom on Spy last night. I'm talking textbook AF. Ratioed yourself IRL. Brushing your teeth. Cool. Too bad you didn't scrub your risk management first. This isn't a pour over, it's a pullback. And you missed it harder than you missed prom in '84. Bro, that bull flag on Tesla was doing cartwheels in your face. You ghosted it harder than your high school crush. You not only ran out of TP, you ran out of risk management. That was a bearish engulfing on the 5 minute, and you YOLO'd through it. Clown behavior.
Verified investing, built for the ones who hate losing.
Yes! Finally giving main character energy. Proud of you, King.
Verified investing, no cap, all facts. Not financial advice, just facts, charts, and a little attitude.
all-day event. Hope you all are enjoying it so far. We just had a great session in the live day trading room. Each of our traders had a winning trade. Lots of green on the screen. So we're going to keep going, keep rolling, and let's tell everybody, Liz, what we can expect for the rest of Green Monday here.
Oh my gosh, Everett, we have so much excitement. Like you said, big day in the live day trade room. So hopefully you joined us for that. Hopefully you took some trades. Well, we've got a lot more coming up, right? I mean, we're going to be talking about our traders courses. We got interviews coming up with each of our traders. Not only are we going to ask them your questions today, but also some questions about their courses and what you can expect if you're still kind of on the fence about buying those courses. Maybe some of those answers or questions you've had are going to be answered coming up here when we talk to some of our traders about those courses. We're also going to pull them aside, at least Gareth and Ben later on today.
That's right.
To have a Q&A. And that's all going to be questions based on what you ask. So if you go to our homepage, first of all, if you're on YouTube watching us right now, I would love if you could go down below, push that subscribe button, and then before you do this, go ahead and go over to verifiedinvesting.com where you can still see our stream. But up at the top, it says watch and ask. Everett told me that earlier. Watch and ask.
Right.
Not just ask, but watch and ask. There's a button right there at the top. And you click that. And all you have to do, you don't have to sign up or anything, but you fill out your name, your question. And that will be pushed right here to us. And then we'll have those questions available for our traders when they come in later this afternoon. Now, on top of that, here's the real kicker I'm very excited about. And we'll talk about this coming up a little bit later. But we also, every time you enter your name, are entered to win a spin on our wheel. And we will do that in just a minute here. So what we're going to do now is kind of look at our homepage. I know Kate's going to send us back to our homepage. So just because I can see it here, but I want you to know, just in case you've never seen this, first of all, if you do want to sign up for our website, this is what it looks like. Look at this. I'm streaming here. Look, it's like 4D. I'm streaming here. It's a little bit later. But this is the watch and ask button right here. And when you click that, Kate, you can go ahead and click that and we'll show you what it looks like. Your full name, your email, and your message. You can keep watching us. And so every time you do that and hit send, you are eligible for one of our wheels. And we'll actually spin that coming up just a minute. So make sure that you're going to stay tuned for that, because if you're watching and you see your name come up, you might be able to win actually a pretty awesome prize. And we're talking like free courses and giveaways, like some big stuff, guys. So that's going to be awesome. So make sure you're entering there. And if we can go back to the home page, Kate, we can show you what's really great about this is you don't have to buy anything to sign up for our page. We actually have quite a bit of free content that comes out. So one thing I do all the time is that oh, thanks, Everett. You can do it too.
Yeah.
So what I can do for you on at least this homepage is direct you to this create account. You can do that. Again, that's for free. You don't have to pay anything for that. And that will give you access to a lot of free things. So the Alpha Trader action over here, just some quick tweets that our traders put out every day, actually multiple times a day. We've got some articles over here, technical analysis and insights, pretty interesting stuff, actually giving you some trade setups, not the ins and outs that you get on the live day trade room, but some good ideas, especially if you're practicing, if you've gone through the Winning Trading Series Pro Edition. That's going to be some great practice and some great reads there. I know that's helped me out a lot. And of course, our shows. We've got shows every morning.
Right.
We went through those. Everett, can you go over some of those shows that we go through?
Sure, absolutely. So every morning we start with Benjamin Poole, our head trader. He has today's best trade setups where he gives you actionable alpha, shows you all of his support and resistance levels on a lot of the best trades he's looking at for that day before the market opens. Then that transitions right into Gareth Soloway's My Trading Game Plan, his daily show, where very similarly he goes over all the charts that you need to see right before the markets open. And then towards the end of the day, we have Trading the Close with Drew Dosick, where he recaps all of the action in the markets, gives you all of his trade levels, all of his support and resistance, and does a little bit of live technical analysis for you on screen. So, Liz, there's a lot to learn from the shows, but I don't want to forget, we have 2 new courses that have launched that we need to tell the viewers about. First of all, we have the Winning Trader Series Pro, the Pro Edition. This is the updated version of Gareth Soloway's master game plan. Liz, you and I have both taken the Winning Trader Series. It is a wealth of knowledge. You will level up your trading game if you take this course. It is being revamped, relaunched, and as you told the viewers this morning, if you've already purchased the original Winning Trader Series, you will still have access to this for the remainder of your access period. So that's one great course we have launching. Also, Pro Trader Lawton Ho, his new course, Zero to Trader in Under 60 Minutes, Crypto Edition. Lawton walks you through everything you need to know about trading the crypto markets. Whether you're a beginner or you're someone who's already been following crypto, this course has everything you need to get started. Lawton will show you how to sign up for accounts, how to enter live trades, and with that course, Liz, our subscribers will get 1 free month of access to Smart Money Crypto.
Oh, wow. That's huge.
Yes.
So you buy the course and you get that subscription where the levels are given to you, I mean, every couple of weeks.
Exactly.
That's amazing. That's
Yes.
good stuff. Now, also, we also have some courses that have been around that are also up to 50% off right now on our website. That sale goes through Sunday. You can see the banner right at the top of the home screen, Green Monday. If we go to our courses page, we can go through some of those with you as well, because we have those two as well. And then we have, there we go. So the Apprentice Trading Library, as you can see, is free. You can watch all those videos there. We kind of update those every, I believe, week. It comes out on the weekends. So that's a pretty good entry level. If you're a beginner trader, those are pretty interesting little tidbits about little pieces of trading that you might not know. Kind of interesting there. Then we have, of course, the Winning Trader Pro Edition. The Golden Opportunity, that's by Drew Wolfer. That's a pretty interesting one. It's more about commodities, especially golds and other assets. Do you want to talk a little bit about that?
Sure. This is a very gold-focused course. Drew Wolfer, he's really traded all different markets, options, crypto, etc. But he has taken a keen interest in gold, and it's really the right time to do so, Liz. As we've all seen, the price of gold is more than doubled in the past couple of years. So there's a lot of trading volume, a lot of opportunities there. Drew Wolfer walks you through every step of it. He does candlestick analysis, pattern analysis. It is really a comprehensive trading course that is focused on gold, but the principles really apply to any kind of trading.
Yeah, that's pretty awesome. And, gold's a hot topic right now, as you all know.
No doubt.
And Mastering VWAP, and that's from our Dr. B. X-ray vision for precision of profits. VWAP, if you don't know, we talked a little bit about the live day trading room, the volume weighted average price. So you'll know everything about that once you take that course. Mastering the overnight trade, the sleeper hole, Drew Dosick. I know that we've had some people sign up today. That's a very interesting course overnight. The 1 minute scalpel by Dr. B. And then of course our Zero to Trader in 60 minutes. So there is a lot that you can choose from, right?
Absolutely.
I mean, you can't not find something that you're looking for. All right. And speaking of those courses, we've got some great stuff over here, guys. The wheel.
It's everybody's favorite.
The verified wheel of free courses and I mean a lot of different things. So let's go over here and maybe check it out. Let's go over a little bit what's over here. So let's say we've got a couple of different, I'll go through a couple of different things and then we'll talk about.
Tell them what's on the wheel.
Yeah, so we have a spin again, so we can always do that, but we have overnight trade, the sleeper hold, 8-month access, guys, for free. That's a $499 value for free, all right? We've got Smart Money Crypto for free, 1 month access there. We've got the Apex Day Trading Room, Elite Trader, 1 week access for free, guys. That's over $100 value. 8 months of the Pro Edition, the Winning Trader, for free. This is the big money right here, guys, because that's over a $9,000 value. You're gonna get it for free. 8 months. I cannot believe that.
Can't beat it.
Wow, that's pretty impressive. The GAN report, cycle report, that's one of Drew's favorite. I think that's an amazing course. That's 1 month access for free as well. You've got stocks and ETFs, 1 month access for all of the stocks and ETFs. That's their Smart Money services. Again, Day Trader Room, 1 week for free. So there is a lot. The Golden Opportunity, here we go, 8 month access for free. And then 8 month access from Lawton's new course, the Zero to Trader in 60 Minutes Crypto.
Excellent. And very quickly, Liz, we will explain how do you get a spin here. All you have to do is engage in the chat where we showed you earlier on the Verified Investing homepage. Go ahead, click the watch and ask button, submit a question, or just say hello to us. You will automatically be entered into the raffle to possibly get a free prize on a wheel spin just by engaging in the chat. So it's that easy.
All right. So should we go ahead and announce our winner first and then
ready
spin?
for a spin?
Or should we spin it? Let's spin it first and then announce our winner.
Sounds
keep
good,
you guys hanging. Keep you guys hanging. All right, you guys ready? All right, this is for. Ooh, that's a good spin.
That was a good spin.
Let's see. Ooh, Ooh, Smart Money Crypto.
Smart Money
1
Crypto.
month access. Are you guys ready for the big winner? Nikki! Congrats, Nikki.
Congratulations.
Okay, so what you need to do, Nikki, is you need to call our support line and make sure that you are given a 1 month access for Smart Money Crypto for free. Again, that's over an $85 value. So great job, Nikki. We are so pumped. Make sure you go right here and contact our support. Good job, Nikki. And we'll have more of these. Don't worry, guys. You're not done yet. We'll have a lot more of these spins coming up. So make sure you're still engaging in our chat, okay?
Yes, there will be more chances, so make sure you stick around, engage us in the chat, let us know how you're enjoying Green Monday, and yeah, I guess we should just go over what else is on the schedule today, Liz.
Yeah, we're not done yet, right? I mean, this is just an intermission. The guys are getting some lunch after trading all morning. Again, we've got the interviews with our traders. Like I said, they're going to go over their courses, but also we're going to pull Ben and Gareth aside separately, and we're both going to be interviewing them with your questions, the ones that you are sending in, right? So that is going to be, it's called Get Smart Live Q&A. So what you do is you just send in your questions, and let me just say, we're not going to answer any kind of open position questions, members.
That's right.
Any kind of specific charting questions. We just don't have the capacity to do that for you today. What we will answer, though, and some of the questions we will start to answer are, I've seen a lot of questions about position sizes and swing versus day trading and some of the basics, and even some things you can get in our courses. So our course is more swing trading versus the live day trading room, which is obviously day trading. If you have questions about our services, ask them here. We're going to try to get to all of them. I can see your questions flooding in right now.
That's right.
So again, we're not going to go over specific open positions within each for our members, each of our areas, services, right?
Mm-hmm.
But we're gonna answer as many of those questions as we can. Okay, so
That's right.
That we have that.
Yes.
That's a big one. What else do we have?
So after that, we will also be live interviewing Drew Wolfer to come and talk about the Golden Opportunity, his course, his show, The Golden Nugget, and just in general his background in trading.
Mm-hmm.
So Drew will be in the studio with us, and then we also have another little fun trivia section coming up. We'll be doing a trivia segment. We'll be doing some wheel spins, giving away more prizes. And we will also have a special guest in studio with us. I'm not going to give it away. I'm not going to tell anyone who it is.
Yeah.
But it will be very fun, very family friendly.
Yeah.
And I'm looking forward to that.
Yeah, hopefully most of the day is family friendly at this point, but this is going to be really family friendly because it's going to be exciting. I don't want to give too much away either.
Right.
Okay, so we have just a couple more minutes here. Again, we're just kind of intermission now. The guys are getting lunch. Let's do another wheel spin. You want to do it?
I'll give it a whirl here.
There. Get a lucky member.
I don't know if I'm going to be able to spin it as hard as you did. That was an impressive spin, Liz.
Well, listen, I've trained for Wheel of Fortune or the Price is Right my whole life, you know.
And Smart Money Stocks and ETFs. Going to our next winner, John N.
All right,
congratulations. John. Free 1 month of access. That's a $150 value. Congratulations. We'll be doing more of these free giveaways throughout the day, so got to keep watching.
Yeah, and that's pretty exciting because, I mean, 1 month access to Smart Money Stocks and ETFs, you get our traders' entry, exits, adding positions. I mean, you get it all. Position sizes.
That's
literally from the pros, right? So it's not guessing where you need to enter and exit. It's exactly where you need to be.
It is exact levels for entry and exit, and they give you kind of a strategy for maneuvering through the trade as well. Stop loss levels, take profit levels. So you're right, Liz. It really is a full trading package where you can just copy their trades.
So congrats, John. All right, guys. Well, we're going to get back to it. We're going to get back to trading, some interviews. We've got it all coming up. We cannot wait to see you guys back here in just a few minutes. So stick around. We've got a lot to do today and more wheel spins, of course.
That's right.
Awesome. Good job.
What's the difference between a gambler and a trader? A gambler goes into a casino where odds generally are going to be against them. A good trader goes into a market understanding how to read charts, understanding how to analyze data, and is going to be ultimately the house or the casino versus the gambler. So always remember, the bottom line is a world-class trader gets an 80% success rate, and no gambler in the world is going to get that type of return. And so that is the key here. It's data-driven, and it's probability-based, and a good trader wins 8 out of every 10 times.
I'm mostly a Ben Graham value investor, fundamentals, intrinsic value, margin of safety, but verified investing helped me take things further. The probabilities behind the chart patterns gave me a structured, confident way to time entries and exits. It's not just about conviction anymore, it's about precision, and that's made a real difference in how I manage my portfolio.
John D. Rockefeller. The name alone evokes images of towering wealth and power. Born into modest circumstances, by the end of his life, he controlled more wealth than any other person in American history. Adjusted for inflation, Rockefeller's fortune would be valued at over $400 billion today. But how did he do it? And what made him different from the rest? I'm Gareth Soloway. Welcome to Born in 1839, Rockefeller wasn't exactly born with a silver spoon in his mouth. His father, infamously known as a snake oil salesman, didn't provide much of a steady income. But young John was meticulous, keeping track of every penny he earned. At just 16, he landed his first job as a bookkeeper. It was here, in the ledgers and numbers, that Rockefeller first saw the potential of finance and business. At 20, Rockefeller started his own produce commission business, but even then he knew there was something bigger waiting for him. It came in 1859 with the discovery of oil in Pennsylvania, a discovery that would ignite a revolution. In 1863, Rockefeller saw an opportunity that others missed. While the oil industry was booming, it was chaotic, with wildcatters trying to strike it rich. Rockefeller wasn't interested in taking that gamble. Instead, he focused on refining oil, turning crude into something usable. This wasn't just about oil, it was about efficiency. He negotiated deals that lowered his costs, invested in technology that improved refining, and bought out competitors who couldn't keep up. By the 1880s, Rockefeller controlled 90% of U.S. oil refining through his company, Standard Oil. But this kind of control wasn't without its detractors. Rockefeller was a master at creating monopolies, vertically integrating every part of the oil business, from extraction to delivery. Critics accused him of using ruthless tactics, predatory pricing, secret deals, and buying up competitors to control the market. In 1911, the U.S. Supreme Court stepped in. Standard Oil was declared a monopoly and broken up into 34 companies. But here's the twist. Rockefeller's wealth didn't diminish. If anything, it grew. Many of these smaller companies went on to become today's giants, Exxon, Chevron, and others. Rockefeller's genius lay not just in domination, but in diversification. Despite the controversy, Rockefeller wasn't just about wealth. In his later years, he turned to philanthropy. The Rockefeller Foundation, established in 1913, was revolutionary. Focused on public health, scientific research, and education, it helped fund the creation of vaccines, established universities, and even founded the University of Chicago. From eradicating hookworm in the American South to funding critical scientific research, Rockefeller's philanthropy touched millions of lives. John D. Rockefeller's life was one of extraordinary ambition, incredible wealth, and transformative impact. Yes, he was ruthless, but he was also forward-thinking, understanding that wealth was a tool, not just for profit, but for progress. Next time, we'll dive into the story of Jesse Livermore, the stock market genius who rode the highs and lows, living by his own rules. Trust me, you won't want to miss it. Thanks for watching, folks. See you next time on Legendary Investors. Hey everybody, welcome to the Winning Trader series. My name is Gareth Soloway and I want to walk you through in this video what the Winning Trader series has in it and why it will make you into a likely successful or very successful individual trader or investor. So basically starting from the very beginning, I've traded for 25 years. When I started trading, I made every mistake in the book. I bought a stock and it would go down. I shorted a stock and it would go up. And I honestly had no clue. But ultimately what I did was I started to study charts. I studied cycle analysis. I studied pattern formations. And all of these things put together started to improve my profitability, where I went from a losing trader to a break-even trader and then a profitable trader. And again, this applies to swing traders, day traders, and long-term investors. If it has a chart, if it's any asset that has a chart, you can use the Winning Trader series to shoot yourself far into the profit zone. Now again, going into this, essentially what I did was I took all the knowledge from 25 years of mistakes and learning and put it down in an almost 20-hour course for you. And this course again delves into every little nuance that is up here in my mind that I've learned, and it puts it down in video form for you to be able to learn. And again, the idea here is for you to not have to make the mistakes that I made, but ultimately leapfrog that, turning yourselves into a much more profitable investor or trader. So again, we're gonna go into everything from pattern formations, the success rates, the probabilities, the psychology of trading, everything I use, even the stuff that I've created. And I've created some of the most successful trading formulations out there, the confirmation signal, time count, cycle analysis. I get into this in the nitty-gritty and I give it to you in forms that you can easily understand. You don't have to be a genius. I am by far not a genius, but I did spend time and effort developing all of these methods and now putting it in video form for you guys. So thank you so much for tuning in. I hope you enjoyed the Winning Trader series.
I bought my first stock when I was 18 years old. Now, 6 decades later, I'm still at it. The problem is, I never really made any money. I would win, I would lose. I wasn't going anywhere. I was like a blind dog in a meat house. I didn't know what I was doing. But then I started following Gareth, and then I became a member of Verified Investing. And now I'm experiencing the thrill of victory a lot more than the agony of defeat. Last week I closed 2 trades, a short of natural gas for 12% profit and a short of crude oil for 8%. All of a sudden, I am excited about being a member of Verified Investing and Trading again. I have learned patience and discipline from these folks, and that's what makes me a better trader instead of totally ineffective. These folks are crazy good, and I'm emphasizing good, although to be a trader with the dedication, passion, and intensity that they give, it's good to be a little crazy once in a while. Thanks for everything, Verified Investing. I'm a member of the team, and I'm glad to be here. God bless.
All right, hey everyone, I'm Elizabeth Copeland, financial journalist and trader here at Verified Investing. If you're just joining us, again, Green Monday, huge kickoff. We've got lots of prizes, exciting discounts, and of course, pro traders here to talk to you today. And today, joining me is Gareth Soloway. Gareth, thanks so much for joining us.
Oh, thank you. This is so cool. I love Green Monday.
Oh my gosh, it's been so exciting. We've had so many viewers asking a bunch of questions, and now it's time for me to ask you some of those questions. Are you ready?
Perfect.
All right, I'm gonna start with the fun one, and then we're gonna get serious. But Tommy has been blowing up the chat, and there's some really funny ones, but this is my favorite. Is it true that you fought a grizzly and won?
No, but I did wrestle a alligator once.
Oh my gosh. Well, it is Florida, so.
I know. That was the problem. It was in, I had to we're not going to get into it.
Yeah,
Let's
okay.
go on.
That'll be for another.
It's still, I didn't kill it though. Don't worry.
Yeah,
guys.
that'll
It
be
just relocated.
That will be another day. All right, Mitch asks, are you queuing your trades in advance? I've heard your discussions are entry and exit points and stops, etc., but don't see the information. Can I see it elsewhere? And I've been trying to follow your trades manually. I'm always later to the trade. What's your advice?
Yeah, so if you're in the trading room, the key is we always set up our trades ahead of time so that you'll never worry about not knowing what's going on. So for instance, we start at 9:25, 5 minutes before the market opens. The idea is that we're already looking at potential setups and we go over them and we say, all right, I'm looking at XYZ. For instance, if you tuned in today for the free live day trading room where we did it for everyone, as soon as I got in there, I gave my level on Oracle and I gave my level on MicroStrategies and my position size. And so therefore, when it came down to those levels, people already knew the size that I was going to do, and I was able to get filled, and then I told them I got filled. And so we really go out of our way here to understand that people are beginners out there. They might be not as efficient. And so we try to give as much heads up as we can for every trade so that people can jump on board with us if they want.
Right, and so they're not caught off guard. They can already have this preset levels, and they're good to go as soon as because it gets kind of chaotic when the bell opens. I mean,
it does, and that's for the day trading room.
Right.
For swing trading, there's usually not as much of a heads up. Sometimes in my daily video, I'll go over the levels that I'm watching, but really for swing trading, entry isn't as important because you're looking for a bigger gain over multiple days or weeks or even months. Right. And so if someone doesn't get my exact entry, if let's say it's $100 stock, does it really matter if you get 5 cents better, 5 cents worse? Sure. When you're looking for a $10 gain? It's very minimal at that point. Day trading is much more important because we're looking for smaller gains on bigger position sizes.
Okay, awesome. Lee asked, from what platform do you chart from? Much better than I have.
So this is TradingView. We don't have any affiliation with them or anything like that. So really everyone should just decide what's best for them. What I like is that this is an open source, not open source, but it's something you don't have to be attached to a broker to use. So you can keep it depending on what broker. If you want to switch brokers, you're not happy with them, then you can still use the same charts that you were using the day before. And I find that helpful. I also like the fact that all of us traders here, we use the same charting platform. So whether we're showing, if I'm showing a chart or Ben or Drew or Lawton, we're all using the same charts and viewers can recognize the same charts like candlesticks, all of these type of things. And so this is TradingView, but I strongly encourage you, find what you're comfortable with. And the same thing goes for trading platforms, is we don't have a recommended broker or anything like that. But the important thing is that everyone should be used to it because speed, especially for day trading, is unbelievably important. Every second lost by your fumbling to try to figure out how to buy or short, that can cost you money.
Yeah, absolutely. And I also had a comment earlier in here. Sorry, I lost your name, but we do have someone who is asking, what kind of tool do you use on TradingView to draw those trend lines?
Yeah, sure, absolutely. So over here, right, we have this it's just the trend tool right there. And if you click on it, you have your trend lines, your raise. I only really use trend lines, and then this is one of my favorites, the parallel. And the parallel, basically all you're doing is you're just connecting. You go to the low on wherever you want to draw that line. And we could draw it here, for instance, and then we drag that up. It allows you to draw that parallel back up. And so really it's just, again, just to rehash, it's just this right here. You have trend lines and you have the parallels. You can mess around with everything else. I don't, but again, this is just where it is on TradingView. And totally, I mean, I love these questions because, if you're a surgeon and you don't know how to use your scalpel or you're a little, you got to know how to use the tools that make you great at what you do.
Right.
And that's part of learning your trading platform.
Right. That's really important. So Paula is asking, how do you decide what stocks to focus on any given day?
Great question. So the first thing I do is I always look for what's in action. So a lot of people in the trading room, they'll say to us, oh, well, what about this stock? And I'll look at it and I'm like, wait a minute. That stock's up or down 0.5% on the day.
Right.
Like there's no volatility there. A trader is looking for volatility because as a technician, we're looking to take advantage of the emotion of the markets or investors. And so when people are panicking, right, you have these big drops to the downside. And what we know is that panic, it gets overdone and you have these snapbacks. Vice versa, things go vertical, they're going to have a big pullback. And so when you get action or big whips in a stock, it's going to create an emotional reaction, which then puts people too much on one side or the other, and we're looking to counter trade that. And so essentially, we're not following the trend as a day trader. We're looking for the inverse move once we hit technical levels. But yeah, it's a great question.
Yeah, so I also get this a lot of question when I tell people where I work. And sometimes in the live day trading room, we get a lot of questions of, well, why are you jumping on now? It just keeps skyrocketing, right? And you just made a great example of that. You wait until that level is hit.
Right, and that's a great point here. I want to show you guys something. So if we just talk about a chart, right, and a chart, let's say a chart's going like this here, and I know hopefully the purple's okay to be seen here. Let me see here if I can change the color here to more of a yellow. So if we're looking at this, right, and we're just going up and up and up, yeah, I could buy here. It could still go up, but the risk is getting bigger. If I buy here, the risk is even bigger now, right? It could keep coming down. And so chasing is like the cardinal sin of trading, right? You chase, you risk essentially becoming the sheep, which is what everyone else does when they're buying the highs on Bitcoin at 125,000, and now look at where it is, or any of these stocks. I mean, we've seen some of these stocks like Rigetti drop 60%. And again, yeah, you follow that trend, that's great. But also you have to be able to get out very quickly. And most people don't have that skill because we always hold on. Like if we're long, we don't want to throw in the towel. We were seeing our losses get bigger and we're like, and you know where we throw in the towel? When it's at its lows, right? So you have a chart like this, you buy up here and it comes down like this. And finally, when it hurts so bad, we get out down here and you know what happens? It starts going back up.
Right.
And so what I find is you say, okay, reality is investors are getting way ridiculously overweight. And there's so many indicators that show this, like too extended, and it could still go up, and that's okay with me. Like, let it keep going up. I just want to find out where the charts are telling me we're going to get a reversion of that move back to the downside, and that's what I want to take advantage of.
Okay, perfect. And speaking kind of getting into positions, what does size mean, i.e. 2/6, 1/10? Then this is from AM. It says, thanks so much for doing this. It makes me consider wanting to sign up more by seeing it versus just hearing about it.
And that's awesome to hear. And that's one of the reasons why we love these Green Mondays is because we get to showcase what we do. And today was just such a good day. We had the right volatility. I was just saying to Ben, my head trader, how I loved how today we didn't have like an easy button trade, meaning like oftentimes like we'll have a trade where we're in and then like 10 seconds or a minute later we're out. And it's just like, oh, that was so easy. Today we made money on every trade we took, but sometimes we had to add a little bit. And it showed people that you have to be comfortable with being uncomfortable. When something goes out, are you analyzing the chart and it's still telling you it's still going to play out? If it is, then you're dollar cost averaging. And that's where we get to position sizes, where every time I get in a trade, and all of us get in trades, we're deciding what size we're doing, and we're basing it off a full position, right? So if I do a 1/6 position, and for me it's based off $1 million account that I trade, I'm doing that amount of dollars, 1/6 of $1 million, as a buy. And 1/6 tells you that potentially I could add another 5 times to accumulate a full position, assuming the chart is still telling me it's going in that direction. And so today, for instance, we had situations where I was in MicroStrategy. I had to add to that position once, and then we made a lot of money. I think we made like $6,000 or $7,000 on that position. But it just shows that trades don't always work out the way you hope initially. That's okay, as long as you're reading the chart still correctly. And you have to be okay with that. In fact, the mantra should be, you're going to get in a trade, you should always assume it's going to go against you.
Right.
When you think it's, and this is what a lot of people do, they say, all right, this is such an obvious trade. It's going to make me so much money. If I go in all my account, then I'll make even more money.
Right.
But the problem is trades don't always work like that.
Right.
They tend to go against us initially, especially fear and panic. And once they go against you and you're all leveraged in, you're at the mercy of the market. You never want to give the market that power over you. And by doing smaller incremental moves, you actually make more money in the long run.
Yeah, that's really interesting. And that's, I think, is a misconception by a lot of beginners. Go all in, make it double and pull out, but it only works for so long.
And I did that myself. I mean, listen, for many years early on, it was, well, I only have 10K to invest, so how do I make this into $1 million overnight? And the problem is the market like sniffs that out. It's like you're in water and the great whites are circling and there's chum in the water, right? There's blood in the water. And they will just sniff it out and make you go bust every time, or most times. And the worst thing that can happen is you actually have success once or twice doing that.
Right.
Because then you have a bigger account and you're like, oh, well, this worked out twice. It's going to work out again. And then one of those times, the market just crushes you. So smaller position size actually makes you much, much wealthier later on.
Okay. And then Michael says, do you trade with a marginal account or cash account? Thanks a lot.
Yeah, so if you're shorting, at least in the U.S.,
Yeah.
the rule is you have to have a margin account.
Mhm.
I like margin because especially for day trading, they're not charging you, right? In other words, if you hold margin overnight, if you hold a position that's bigger than your account size, then there is an interest rate that brokers charge you for borrowing that money. But intraday, you're out by the close, you're back in cash,
Mhm.
you're actually getting the interest paid to you, plus you're utilizing that margin. So for day trading, I do use margin. In fact, it's mandatory if you're doing more than 3 day trades a week to have a margin account. But really, it's a great thing. It's a tool that, assuming you do it right, can be very beneficial in making more money using that margin.
Okay, perfect. And we got time for a few more questions here.
Cool.
Mark says, do you do only day trades and end the day flat, or do you sometimes enter swing trades? I'm guessing this for a live day trading room, but I guess we can talk
Yeah.
more about our services as well.
Yeah, so every once in a while, like once a quarter, I might hold something overnight if I like it enough in the day trading room. But it's super rare because in general, we like to keep day trading as day trading, and also going to bed with when you sleep a lot better at night when you're in cash. It's like, all right, it doesn't matter what happens in Asia overnight with the markets or wherever, I'm in cash. I'll be ready to trade tomorrow. Then we have our swing trading services, smart money stocks, smart money crypto, smart money commodities. And those absolutely, I mean, that's all swing trading, right? So if you're someone who's like, I can't devote 9 to 5 every day or 9 to 4 every day, day trading with them, swing trading is probably the best alternative where you get to just, you're buying something, holding it for a week, 2 weeks, 3 weeks, maybe a month, and then we're looking to take a bigger gain on that 10%, 15% return. So it's really, it depends on, but going back to the day trading room, very rarely will I hold something overnight.
Okay. And speaking of those services, I mean, you give out, when we have those swing services, I mean, you guys, the pro traders in you, give out those levels exactly. And so, like, I'll get a notification. It's like, enter here, exit here, right? Like, you're giving every single position you have
That's right.
an exact position, like exact entry and exit level.
Yeah, and actually percentage of portfolio we recommend as well. And so kind of the same things employed in the swing trades is where we assume, all right, you have 100% of a portfolio. We're entering, let's say, Oracle right now. I've bought some Oracle down in this lower range. It's been beaten up just for a technical bounce. I don't really think long term it's great right now with the market where it is, but it'll be like, okay, 1%, 3%, maybe add another 2%, accumulating that position size. And then once it pops, we can actually leg out of it, maybe half off the table for a gain, let the rest run. It's about that money management at that point.
Okay. Yeah, that's really interesting. And you do that all for us on those services. So
that's right.
That's really
right.
nice. So I'm not going in,
and I think it's important to recognize that I'm just giving out my expertise, my alerts, my trades, and then each and every person gets to decide what they want to do with their own account. I'm just giving the information. But again, it's from someone who should be. I mean, if they're subscribing, they obviously look at me as someone that has knowledge on the situation, on the markets, and they can follow me if they wish.
Yeah, that's a great utensil to be able to follow you. I mean, in exact trading. So that's really cool. Let's see, Claire. When you are in live trading, do you look at the 1 hour charts or smaller? So I guess what hours do you look at?
So primarily the 10-minute chart and the 1-minute chart. 1-minute chart's going to give you the much smaller time frame moves where you can see these quick moves up and down off of key trend lines. But in reality, if you're day trading, you're going to be on a smaller time frame because you're looking for, I mean, on a $100 stock, you might only be looking for $1.50 move, which can happen very quickly. If you're looking at a big time frame, like imagine looking at the monthly and trying to see this tiny, I mean, you couldn't even see it on those time frames. So very important. Day trading should be on a smaller time frame. I do sometimes look at the hourly, but mainly the 10-minute and then the 1-minute sometimes as well. And then swing trading, because you're looking for these bigger gains over days, weeks, and months. That's where you're going to go to the weekly chart, the daily chart, and the monthly chart.
Awesome. And I just had a question pop up here. And we kind of answered this earlier, but coming from you because it's your course, I think it'd be awesome if you could explain a little bit more. Pavlina was asking, what's the difference between the Winning Trader Series Pro Edition and Original? She just bought the series a few months ago. It just ran out. So she's thinking about maybe getting the Pro Edition as well. What would you say?
Yeah, so the Pro Edition is basically an updated version. There's not a ton of new information in there. It just looks a little bit like originally when I shot the Winning Trader series, I did it, in not quite as a professional setting. It still looks good, but this is really just an upgrade of that, a cleaner look, a crisper kind of formation of the information. So again, it's totally up to you if you want to, if you're someone who bought it and want to upgrade. But again, listen, I think if you go to the most successful traders I've ever trained, they've watched the Winning Traders series like 10 times by now. And it's just like you pick up something new every single time. And the amazing thing about it is every little nuance is only turning your graph up more and more, your own chart of your profitability and your financial future, it's making it bigger and bigger in terms of that upswing of financial independence. And so again, we can only absorb so much. That course is like 18 hours.
Yeah.
So, think about it like going through it once, then go through it again and pay a little closer attention, go through, take notes, and again, put space between it so you can absorb what you've done. But if you do, there is a pathway to financial independence.
Yeah, and I was told earlier that we actually have a deal for anyone who's bought the Winning Trader series. Now the Pro Edition, you can call our support line. I know we have a number for it on our website, and what you can do is actually get that for extension for a discounted price. Excuse me,
That's
for
right.
a discounted price. So, but if you have the 8th month subscription of the Winning Trader series that just changed over, you still have free access to Pro Edition. So there you go. That's the good thing. And there it is right there. That's the number, Pavlina, you can call if you wanted to add on a few months of the Pro Edition. All right, so let's get back to the other questions. Do you recommend using prop accounts? Tell us the good and the danger of prop accounts.
Oh, okay. So the danger is they give you leverage, additional leverage. So let's say someone in the US, you have to have 25K right now to get to be a day trader. Otherwise, they won't even let you day trade more than 3 times a week.
Right.
With a prop firm, they'll give you additional buying power. The problem is, and I ran into this because this is how I started, right? I had 10K to my name and I went to a prop firm. They gave me 50K to trade.
Yeah.
But the losses all came out of my 10K. So very quickly, when you're trading bigger numbers and you take losses, they're going to be bigger losses. So my 10K went down very, very quickly. So that's the negative of it. The positive is that you can actually really utilize, if you're good, the leverage that they're giving you.
Right.
So again, it's a give and take, and it's, I would say, listen, I think prop firms are good. Like if you really had like $3,000, like something really minimal, and that, by the way, that shouldn't be the only money you have.
Right.
Because I've never met a day trader who's started day trading and just been a winning trader.
Right.
Like it just doesn't happen. I'm telling you guys.
I mean, how many accounts did you blow up when you were starting?
So many, I
Yeah.
can't even and it was all at the same count. I just refunded it. I worked 3 side jobs, kept on just pumping money in, and I would just keep on getting beat up because I was new.
Right.
And the markets are run by big institutions that know what the heck they're doing. So think about it like a minnow, right? A minnow versus a great white. I mean, you got no shot, right? Until you start growing, and that means knowledge.
Right.
And it just comes down to knowledge and understanding the game. And once you can compete with the institutions, you're golden. Because again, now you're competing with new minnows, but now you're one of the big sharks.
Right.
And that's what the knowledge does for people. It's so incredible.
That is awesome. All right, and before I let you go, Gareth, we've got a couple more minutes. So Everett and I have already been able to do this. We've already been able to spin the wheel. I want you to be able to spin the wheel. We'll announce the member who wins after, but we want you to spin the wheel and get up there.
I love it.
Yeah.
I hope it's something big here.
All right, here we go.
Is it a brand new car?
Brand new car.
There's no car in there. But that we should do something like that. All right, here we go, guys.
All right. What is it?
Oh, spin again.
Okay, all right, all right.
Here it comes. There we go.
Ooh.
Great course. The golden opportunity. That's our gold course. 8 months of info there or of access. And that the golden opportunity, if you wanted to know anything about gold, it's right in here. Again, gold is so popular right now. I continue to think it's going much, much higher, maybe after a small correction. But that right there, my friends, whoever wins that, great job.
All right, and the winner officially is Diana T. So make sure, Diana, there you are contacting support right there below. That's support@verifiedinvesting.com. Thanks so much, Gareth. That is very exciting. And just to mention, that's a $997 course.
Yeah, $1,000 just like that.
For free.
That's
wow.
right.
Good job, Diana. Well, thanks so much for joining us. We're going to have you back, all day. So
love
don't
it.
worry. Gareth
I'm
is
here.
coming back. Gareth is going to be back. But we're going to wrap it up. And next up, we're going to have Everett and Ben in here to have a little Q&A. So keep sending in those questions. Again, go on the homepage. It goes watch and ask right there at the top of the homepage. Make sure you click it, type your name, the question, and we'll be feeding them right here all day. We'll be right back, guys.
Someone clip this for my TikTok. Your FOMO called. It's crying in the club again. I was a day one fan of that breakout. You were a fake fan, Jordan. Are we in a commercial right now? Cringe. But click the link anyway. This breakdown is brought to you by disappointment.
Verified investing, no cap, all facts. Not financial advice, just facts, charts, and a little attitude.
Here's the biggest lesson I learned while trading. My number one rule for trading is know when to cut your losses. I know it sucks looking at your account, looking at your trades, confirmations, and seeing red. But what if I told you that taking a small loss could prevent an even bigger loss? The biggest lesson that I've learned while trading is to stop out when my thesis is invalidated. If the reason that I got into a trade becomes invalid, there's no point in me staying on. At that point, I'm coin flipping, hoping that things come and turn into my favor, and hopefully I take a win on an otherwise losing position. The most important thing to do in trading is to cut your losses small and make sure to keep your winners big.
Hi Gareth, guys. Really fantastic shows that you guys put out. I watched them all. I've learned so much over the last, let's say, 8 months. I've been watching them on a daily basis. I catch all of the shows. And I think one of the experience that I've picked up from this is that I've learned so much more in my trading career, and I've been trading since 2008, 2009. And I only used to trade as a hobby on Forex only. So I've learned so much more. And you've taken me across all of the different trading, including the cryptocurrencies, and also the stock market and commodities. I did dabble a little bit in gold in 2023, and in September of 2023, I got absolutely wiped out. So I know what it's like to lose a lot of money, but I have a passion for this, and I follow you guys religiously every day. I have gone through the winning trading series, and I did Drew's course, and I also did Dr. B's course as well. So thank you very much, guys. I'm really enjoying it, and I started making money in the markets properly, and you've taught me a lot. Thank you so much.
One of the reasons that I love looking at the charts every day, it's like a puzzle. Each tick of the charts, whether I'm using a 1 minute or a 10-minute or an hourly or a daily chart, is a new piece of that puzzle that I didn't have before. And so I get to dive into the charts and look at how that puzzle is coming together. So I might have a particular trend line that I'm watching, but then one day happens and we get a big sell-off. Well, all of a sudden, now I have another piece of information that I didn't have before. And so then I may readjust my trend lines. So trading the charts is really about continually educating yourself and becoming passionate about something that is constantly moving.
Hi, this message is for people who who are new, listening to Gary Soloway. I've been following Gary Soloway for quite some time now. And before I was introduced to Gary Soloway, I was looking for someone with honesty and integrity and respect and someone reliable, someone trustable, a source for my financial education, and also just for trading. Because I've been personally scammed several times by different people on social media or online. So that really taught me to look for someone, a trustable source, with someone with knowledge and expertise. So I found Gary Soloway to another source that I was following who was a trustable source. So he's, if you're new to his channel and following him, I highly recommend that you follow him and follow his education style. He's the best one out there, and I learned a lot from him, from his daily videos and education platform. I personally don't trust people easily, but Gary Soloway has gained my trust because he's honest, he's reliable, he's trustable, and he's streetwise. So I highly recommend that you follow Gary Soloway for your financial education. Thank you.
All right. Welcome back, everyone. I'm Everett Millman, and I am joined by our head trader here at Verified Investing, Benjamin Poole.
Good to see you.
Yes.
Good to be with you.
Thanks for joining me. And we're going to do a quick Q&A session.
Sounds
Take
good.
some questions directly from our viewers today. So if you have them, absolutely send them in. If you have anything you want to ask Ben, I've already pulled a couple of questions here. So Ben, one question we got was from Miri. She asked, do you use stop losses on your trades?
Occasionally, I will use a stop loss on my trade, and this could be either swing trading or day trading. It really depends on what's going on in the charts. One actually stop loss I did recently was on Google, and one of the reasons that I did a stop loss on Google is because I've developed this kind of trading strategy utilizing the RSI. When the RSI fails to break some key resistance level or support levels, then with the RSI heading down to 30, it gives me the indication that there are still more buyers involved than there are sellers. And so I actually ended up stopping out of the trade for about a $2,000 loss because I saw that it was getting to an oversold condition, but it wasn't breaking any levels, thus indicating that the price action was going to continue higher. And that's actually what happened. I actually stopped out for a loss, and then the next day I actually got back into it and reshorted it and recovered that money. So yeah, I do end up taking stops on a lot of trades. Depends on, there's a lot of different factors when going into trade setups on whether or not I take a stop out. But yeah, I do occasionally.
Right. And I've definitely seen you use a trailing stop before. That kind of leads into another question we got here from Ivo. And they asked, how do you decide whether to stop out on a trade or to simply add? So adding to a position. How do you make that determination?
Most of the time, I will add to positions. I go into every single trade with very specific support levels if I'm going long, or resistance levels on the way up. So I've already identified where my add levels are going to be, and I actually want to be able to add to the positions. So that's what I do. I start with like let's use Google for example, another Google trade. I got into this at $315.27, knowing that Google could go up to $320. So $315.27 was my first level. My second ad level, or my ad level, was going to be $317.77, with my last ad level at $320. So I wanted it to go against me so that way I could bring my average price not only up, but I could get more capital invested in it. And if it just gave me $3, $4 pullback, I can just be satisfied with that. Most of the time, I will have those levels already set up. And in the live day trading room, I actually give those out ahead of time so that way people know exactly what I'm doing, my whole process, all the way through the trade, where I'm going to enter or add to the level, or where I'm going to remove some of the profits, and then where I'm going to stop out.
That's right. That's right. And you know, you guys do make it so easy for people to follow your trades when you give all of those levels ahead of time. It's very easy to follow.
Well, thank you.
Let's see what else here. Here you go, Ben. This is kind of a callback to your past career choices. So this is from Connor. They asked, Ben, what advice do you have for someone who wants to get into fitness while at the same time being focused on trading? How should they manage their time between the two?
Anything in life that you want to do, there have to be sacrifices. I talk to my wife about this a lot, and there are a lot of people who want to get into fitness, but there are a lot of people who want to get into fitness. So what does that mean? There are people who say, you know, next Monday I'm going to start working out. That Monday comes around, I'll wait till Wednesday. You know, Wednesday seems like a much better day to start. And then all of a sudden it's Thursday. Oh, well, I've already missed Monday and Wednesday. Let's go ahead and start for the next Monday. So they want to start. So I guess my question to you would be, do you really want to? Because if you do, you just have to do it. And then it comes back down to trusting yourself. Do you trust yourself enough to continue it? If you say, I'm going to start on Monday, do you actually do it? Or do you postpone it? The more often you continually postpone it, it's like hitting that snooze button. The first time you hit that snooze button, it seems really good. But then all of a sudden you're hitting it 2 and 3 and 4 times. And then all of a sudden, that morning session that you're going to get up, you're no longer setting your alarm to that. You're pushing it back to 7 o'clock instead of 6:15 when you know that's when you should get up. It really comes down to trust within yourself. If you set the alarm clock, you get out of bed and you go work out. Even if it's just putting on your clothes and going for a 1-mile walk. That's how you start getting into fitness. That's how you start trusting yourself, just doing the things that you say you're going to do over and over and over again. And that's how you create that momentum going forward. But that's with anything in life.
That's true, and it makes perfect sense when you explain it, but you're hitting a little bit close to home. I'm definitely the snooze button hitter. I'm definitely the procrastinator when it comes to that. So, you know, I'm learning something here too, as well as the viewers. So I know that you use the relative strength index in a lot of your trading, RSI. We got a question from Jack where he asked, is it worth it to look at RSI divergences on longer time frames? Because I know a lot of times you're looking at that on an intraday basis. Is that correct?
I do both. You can use it on an intraday basis as well as a long term. One thing that I would say when you're interested in diving into the RSI, look at stocks that have volatility. Look at stocks that respect the 30 and the 70. Something can stay overbought for an extended period of time, and something can stay oversold for an extended period of time. When you look at stocks, let's say, for example, NVIDIA, where it's got this slow upward momentum where the RSI is staying above the 70, you're not going to trade that. You're going to look at a stock that has more volatility. The RSI, when it's above 70, that just tells you that there are a lot of buyers in there and there's not a lot of fear. Without the volatility, nobody's taking profits, nobody's scared that there's going to be a drop in it. And so then you got to wait for an additional movement, like a super big peak to the upside, and then a drop. And now all of a sudden, there's volatility, there's fear in that industry or in that stock. There's relative weakness and strength, and that's when you can capitalize on the relative strength index. So it's a momentum indicator. When something's upward momentum, you'll see the RSI continuing to rise. It's when what you're looking for is a continual divergence of kind of the support or the extreme volatility to the upside and then the downside.
Right. Interesting stuff. Yeah. We got another one here from John. He says, Ben, you rock. Very nice.
Thanks, John. Appreciate it.
He asks, how much time do you spend after hours researching the market? It seems like being a pro consumes a lot of time.
I do put in a fair amount of time. Most of my time is actually spent throughout the day, and it depends on if I'm monitoring stocks or not. I don't put in, okay, so I get here around 8:15 every single morning. And so a lot of my time is dedicated to coming up with key trade setups. And so I have from 8:15 in the morning till 9:30. And then from 9:30, I'm constantly watching the markets all the way till 4 o'clock. And then after that, I'm also putting out additional articles, studying charts, not only the stock charts, but crypto charts, commodity charts. So my head is in the charts essentially from like 8:15 in the morning till about 5 o'clock at night. I do allow myself, if there's nothing really going on, to rest and relax, and then I do it again the next day.
Yeah.
So, I mean, that's a lot of time in the charts.
It is.
So
it
it's
is.
over a full-time job.
Yeah. I don't think anybody's going to penalize you or hold it against you for not doing, some extra credit work at home. But that just goes to show, though, that yes, you can have time to do research or studying, right, for a beginning trader. But once you're locked in and looking at the charts, that is where your attention goes.
Right. Yeah, I guess the difference is I don't have another job that I go to. And it's a little bit different. If I didn't have this and I knew that this is one thing that I wanted to do, I would definitely put in more time after hours to make sure I studied. And actually going back to that, when I first came on board here, I was not a pro trader. I actually came on as customer support. The very first thing that I did was study the Winning Trader series. I got up at 5:30 in the morning. For the first hour of my day, I studied the Winning Trader series, and then I'd go home and I'd study more of the Winning Trader series. And I did that until I completed that. And then once I was done with that, I went back through it and did it again. And this is after taking a course before the Winning Trader series that Gareth had put out. So essentially, I've done it 3 times. And that's in addition to going live in the live day trading room, also hearing other traders call specific setups and continue to dive in the market. So it takes a lot of work, but it's rewarding and it's worth it.
Yeah, that makes sense. All right, we have another RSI question here, knowing that that's your specialty.
Sure.
Obviously, these viewers have met Ben before, watched the show. So we have a question from Wasim, and he asks, I want to know about bearish divergence and bullish divergence in RSI. So can you kind of walk us through what those mean?
So bearish divergence means, and when you're looking at bearish and bullish divergence, I also want you to consider the volatility in the underlying stock that you're looking at. When the RSI is continuing a little bit higher, when the price action is continuing higher, but the RSI is continuing lower, that is bearish divergence, meaning that some of the sellers are stepping in before the price action actually starts to dip. On the other side, bullish divergence, you actually have a price action that's heading a little bit lower, where the RSI is actually heading a little bit higher. That's giving you a little bit of divergence, indicating that there are buyers who are, sellers that are stepping out of the way and allowing the buyers to push the RSI up, but the price action hasn't necessarily caught up to that. And then you can usually go carry that up.
Interesting. Yeah. Okay, that does clear it up even for myself, because I had heard that terminology of RSI divergence, but I didn't realize that it can actually be bearish or bullish.
Correct. Actually, Google has a great idea of bearish divergence. It doesn't have a ton of volatility in it. Let me go ahead and remove this.
Yeah, and let's make sure that they can see the screen behind us here.
Okay. So what you're looking at in bearish divergence is, you notice how price action can, I don't know, come on, here we go. Takes a second. Doesn't want this. Give me 1 sec. Let's go back. Let's try to exit this. Okay.
All right.
Let's try this again. Technology.
Yeah.
Give it a sec. It's got to freeze. Okay. So you've got price action that's heading higher.
Right.
The RSI is actually heading lower.
Mm-hmm.
So this is giving you bearish divergence, indicating that the buyers are there, but the strength of the stock is actually heading a little bit lower. I want you to notice, though, there's not a ton of volatility. You have a little bit of price movement here, a little bit of price movement here, but overall, price is just really consolidating sideways. So Google isn't one that I would actually use for negative RSI divergence or bearish RSI divergence to say, okay, this is overdone. Because look at how far back this goes. This goes back to September, and price action just continues to float higher.
Wow. Yes, okay, that's a great demonstration. All right, let's get into a couple more questions here. So we also have a question from AK. They asked in the Apex Live Day Trading Room, do you just trade stocks or do you also trade crypto or anything else?
From time to time, we will do ETFs. For example, if silver is way overextended, I might pick up ZSL for a day trade. If Bitcoin is way overextended either on the upside or downside, I might trade BITO or BITI. There are also a couple other ETFs that we'll use. We don't actually trade silver futures in there, and we don't trade crypto specifically, unless there's an ETF that we can trade alongside of it.
Gotcha. And you know, there are probably proxies to crypto, for example, like MicroStrategy. Gareth was trading this morning.
Yep.
But that makes sense about ETFs and other vehicles rather than the actual underlying assets. It's mainly going to be stocks.
Yep. It
Interesting.
will only be stocks. Stocks and ETFs, really.
Got it. Got it. So we have another question here. Last question comes from Ada. They said that they saw Gareth had multiple screens up for his setup. If a trader was setting up with 3 screens, do you have any recommendations for how they would manage their trading station?
It really depends on what you're looking for. I would like to have 2 TradingView accounts. And is your TradingView account connected to your brokerage account? Because if it is, then you can actually have each one of your screens set up logged into your broker in TradingView, and then you can actually divide those, and so you can have 6 different stocks tickers on your screen ready to trade. I know a lot of people have the QQQ and the SPY on one set of screens where it's divided. So if you want to keep an eye on the SPY and the QQQ, if you're going long or short indices or stocks that are inside of those indices, then that's something you could absolutely do. But what I would recommend, at least for me, is the stocks that you're looking at for the day, have those available to check out while you're trading the one that you're currently in. And that's how I have my setup.
Interesting. All right, Ben. Well, before you get out of here, we're going to have you spin the wheel.
Okay.
Give some free stuff away to the people.
All right. What do we want it to land on?
Any of them are good. They're all good options.
All right, here we go.
Oh,
really?
Spin again. You
Really?
did not do it right this first time.
All right.
Oh, wow. Winning
What happened?
Traders Series Pro. That is the
Did I do
big
that right?
prize. The big prize.
All
And our
right.
winner is Bobby B. Congratulations, sir. That's a big one right there. Ben, that was by far the best spin of the day.
Okay, thank you.
Well done.
All right. Thank you, guys.
Yes, thanks for joining me, Ben. We will take a brief intermission here. Coming up next, I will be interviewing Drew Wolfer to talk about everything gold and his show, his course. Don't want to miss it.
Take care.
Wakey, wakey, Grandpa! You fumbled the cleanest double bottom on SPY last night. I'm talking textbook AF. Ratioed yourself IRL. Brushing your teeth. Cool. Too bad you didn't scrub your risk management first. This isn't a pour over, it's a pullback, and you missed it harder than you missed prom in '84. Scrolling memes instead of reviewing setups? That 3-bar play was cooked and ready to eat, and you served it cold. Tragic. Wow! Not even verified on your trades or your relationships. Embarrassing for you.
Smart setups, real data, no fluff.
Yes! Finally giving main character energy. Proud of you, King.
Verified investing, no cap, all facts. Not financial advice, just facts, charts, and a little attitude.
One of the reasons that I love looking at the charts every day, it's like a puzzle. Each tick of the charts, whether I'm using a 1 minute or a 10-minute or an hourly or a daily chart, is a new piece of that puzzle that I didn't have before. And so I get to dive into the charts and look at how that puzzle is coming together. So I might have a particular trend line that I'm watching, but then one day happens and we get a big sell-off. Well, all of a sudden, now I have another piece of information that I didn't have before. And so then I may readjust my trend lines. So trading the charts is really about continually educating yourself and becoming passionate about something that is constantly moving.
Hey everybody, welcome to Smart Money Stocks and ETFs. My name is Gareth Soloway. I'm a verified pro trader here. 25 years of experience. I've been through it all from the dot-com bubble through the Great Recession all the way to the current markets. In this service, you're going to get chart posts 24/7. When I see something morning, noon, or night, or even on weekends, I'm posting up the levels, giving you analysis and everything you need to be fully informed about the truth, the data, the technical analysis within the markets of stocks and ETFs. In addition, you get exact entry and exit signals from me with suggested portfolio, position size, everything you need to conquer this market and make money for the long term.
All right, everyone, Elizabeth Copeland here, junior trader at Verified Investing, and I am joined by Ms. Kim Githler, founder and CEO of Money Show itself. So thank you so much for being here, Kim. I really appreciate you taking the time. I know you're very busy.
Well, I'm extremely happy you're here.
Yeah, absolutely.
We love new opportunities at the Money Show.
Awesome. Well, we're really glad to be here. Thank you. Well, you know, you're hosting over 100 speakers and thousands of investors here at the Money Show in Orlando. What trends are you seeing across the financial industry right now that made you curate this specific lineup for the 2025?
Well, certainly I would share with investors and traders and even new investors that policy and government certainly give a big impact. So we've had some of Trump's economic team, because Trump has been causing a lot of volatility in the market, so to speak, when he makes various announcements. So policy is certainly one. Economics and the trends globally are others. And then we work into individual investing in stocks and what people are buying, and AI, and data centers. And we have Money Show University here, where we've got wonderful college kids that are coming in and they're getting educated for the first time and taking their steps into investing. And then we have a very active trader audience. So we have options and futures and many subjects covered. But when you attend a conference, you want to attract your foundation of economics, the policies that are driving those economics, global issues, because of course investors don't like uncertainty. Right. So you want to point those things out, and then you want to dig deep. You want to turn around and say, okay, if you're in the world of AI, what's driving AI? What are the various types of people that are investing in AI, like Planeteer? Keith Fitzgerald's here. So Keith Fitzgerald's a big investor in that, and he's going to go into why that's such a great investment for the long term. He's going to give you the fundamentals and he's going to give you the technicals. So that's what we do here.
That is awesome. And it's been a great lineup so far, enjoying every minute of it. We, again, appreciate you having us.
Thank you. Thank you.
I have one last question for you. So the Money Show has been around and a leader with investing education for over 45 years. With everything going digital from robo investors, YouTube, social media, why do you think it's so important to have these face-to-face meetings with investors?
Well, I would say that, first of all, I'm going to share with you for the youth, I'll be producing an event at the end of 2027, probably in Boston, where I will attract 5,000 Gen X, Gen Zs, and college students. And I'm going to bring the entire industry there. I'm going to bring the industry there for somebody like Acorns or somebody like the New York Stock Exchange or the Texas Exchange that's just come out. The Texas Exchange is going to be 45 seconds of a millisecond in trading. The first, and that is, of course, Ken Griffin, Schwab, and Blackstone that's bringing that out. And what I'm sharing with you is that it's so important when you have these things happening that you get to hear it firsthand. You get to a mentor, like people that are, the NASDAQ 100 is one of the hot things right now. So the guy that heads up NASDAQ 100 is here, and he's going to tell you why it's going to outperform the market, because he is the guy that's creating it and working with his team. So that contact, that mentorship, that following is so important, because you can't really get that online.
Right.
You got to know who you're meeting, just like you as a beautiful lady, and you're a wonderful person to be in this world. And I understand that this is a world that you've decided to go into for investing. And I'm very proud of you. Your family's in it, so that's wonderful.
Right.
We're really happy you're following in your father's footsteps.
Yeah.
It's wonderful.
Absolutely. Well, thank you so much. I know you're very busy, but I really appreciate you being here with us.
Thank you.
And
It's
having
a
us.
pleasure.
Yeah.
We really enjoy our shows. So come out and see us. We have free portions and we have paid portions, but the free portions are always great education.
Yeah, and if you can't come to Orlando this year, where is your next event?
Our next event is in Sarasota in December, but that is for really a high net worth investor, so to speak, probably 5.5 million net worth, and they're more alternatives oriented.
Okay.
And then our next big event like this is February in Las Vegas at the Paris Hotel.
Ooh,
Yeah,
all right.
so we're
Vegas.
excited about that. So thank you so much.
Awesome.
And please come and see us. We'd love to have you.
Awesome. Thank you so much, Kim.
You're welcome.
Yeah, have a great day.
You too.
Yeah.
Here are the top 3 ways to mitigate risk when investing and trading. Number 1, diversify. I know everyone says it, but so few people do it. So what you want to do is you actually want to diversify with different assets, with different trade options, and that will protect you and help you grow your money over the long term. Another way to mitigate risk is to look at the charts. The charts give you probability. So you have something that's logical and decision-based, not on emotion, but instead on facts. The last one is to always have an exit strategy, that if it doesn't go right, where do you cut that? Where is your thesis invalidated? And at that point, you can take smaller losses versus blowing up your entire account. So using these 3 methods, folks, it will mitigate risk and make you into a wealthy investor.
Hey, my name's Tyler. Been trading for about 2.5 years. I actually quit drinking about 3 years ago. And during my recovery, I was not interested in a lot of the normal things they have you do. And I just randomly found Gareth. And I have learned, I'm not prepared to even make this video. It's just too much to say. At one point, I was not happy with my trading. I had trouble with the service at first because I was so new. I didn't understand what I was doing. I continued to watch his videos and got back into the service. And it is just one of those things that if you stick with it, follow the techniques, and just keep learning every day, you're gonna get better, you're gonna grow, and you're gonna learn. And for me, it has been a massive part of my journey to do better with my life. The risk management that I have experience in as a skydiving instructor, I guess I should say. I was a skydiving instructor for about 10 years. And that makes you think about everything that could go in any direction, and you're ready for it. You have a plan. And I managed to translate that into something else that I can love and watch and study and learn and do every day and grow a little bit every day. And I'm ranting, but verified investing has helped change my life, and I'm not doing it justice now. So thank you guys for everything you've done.
Welcome back, everybody. We're continuing on with our Green Monday all-day event. I'm Everett Millman, and I am joined by our verified pro trader, Drew Wolfer. Thank you for being here, man. Good to see you again.
Always, man. I'm happy to be here. Happy to talk about some gold. We've already got the chart up in the back. We probably shouldn't have that up yet. We should probably just put up the golden opportunity. A little bit of technical difficulties.
That's all good. We do a lot of technical analysis here. Sometimes the technicals get confusing. Yeah. So, Drew, you've been trading in the markets for 10 years, and I know that you've traded stocks and crypto and options. You've kind of done it all. Yep. How did you get interested in gold?
So there's like this common misconception, at least from my understanding, that gold is super boring. And in a traditional sense, it kind of is, because it just consistently moves up and to the right. But whenever the institutions are buying it in troves, and actually not just buying it, but hoarding it, that's where people need to take notes. In my opinion, liquidity is what drives the entire market. Gold being the largest market in the entire world with pretty much the highest amount of liquidity, that's what's going to draw me to a market, because that's where traders thrive, is in liquid markets that can be volatile, right? Because we can make tremendous gains inside of gold, silver, precious metals, any asset for that matter, if we know how to read the charts. Secondarily, the central banks, they're just buying gold. So whenever the smart money, I trade a lot of what is called smart money concepts. And it might be a concept some people are familiar with, it might not. But essentially what that means is you are following the big money moves. And when I see central banks, institutions, and I see this big money moving into these assets, pretty much makes it abundantly clear that I need to be in that market. And that's actually how I built an 88% win rate, because gold sticks to technicals, right? And that's one thing that I really like about gold and silver. They stick to the technicals more than most other assets, at least in my opinion, especially like crypto assets. Gold is going to stick to those technicals, even though you might see a fundamental factor have to come in to push the technical where it's supposed to go. A lot of times you can see, if I see the charts, I can tell you what the news is going to be, right? So that's why I like gold, and that's pretty much how I got involved.
Interesting. Yeah, that's an interesting perspective. I've definitely heard gold referred to as a boring asset, a pet rock. But the fact that it sticks to the technicals, you can really read it in the charts. That's the first time I really heard that perspective. So, you know, one thing that's definitely different this time around in the bull run for gold compared to, let's say, the late 70s is that, as you mentioned, central banks are buying gold hand over fist. Where did that trend come from? What's going on? What do we need to know about that institutional demand?
So it seems like, first and foremost, central banks, they're buying more gold than they pretty much ever have, right? And they're not buying it for tomorrow, right? They're buying it for 10 years, 20 years from now, 5 years from now, right? They're not like us where we're trading in and out. You know, that's how we built that 88% win rate. We were just trading in and out, up, down, whatever. They're throwing it in their vaults, and saying, this is a keepsake to me, right? I want to keep this. And in my opinion, I think the reason for that is, well, let me give you a statistic first, and that way it'll kind of drive this in like home for everybody. They've bought 3 tons in 2 years. That was just in 2024 and 2023 alone. So over just the past 3 years, they've bought over 3 tons of gold, which is more than they had bought since about 1950.
Wow.
Right? This is something that people need to, take notice of, at least in my opinion. They've also now listed gold as a tier 1 asset. If you know what a tier 1 asset is, it's basically currency. And there's only like 5 different currencies that are the tier 1 assets, and now gold is one of them. So could they be potentially prepping for like a massive monetary shift, right? And what I mean by monetary shift is, we don't want to go too far into the weeds on this, but we used to be backed by gold, right? Our currency used to be backed by gold, and then every other currency before ours used to be backed by gold, right? And so with everything that's happening and all of the gold that's being bought by the bankers that control the money supply, it kind of makes you wonder, are they looking to take advantage of potentially preempting that move and then shifting it monetarily back to a potential gold standard? Now, the other thing is that we are in a bull super cycle, and that seems to be one of the reasons why we're in a bull super cycle, right? Because central bank demand is so robust right now. It's creating this technical floor for gold. And that floor just keeps moving up. It's crazy. It's like an elevator, and it never goes below it. We've left so many runaway gaps. We've left so many levels below us that a lot of people thought and still think are going to be revisited. And it just doesn't look or seem like they're going to be, right? And so the structural floor of this is insane, in my opinion. Now, that's something that I absolutely bring into my trades and my trading strategy. Understanding that we're going to have a lot of these technical floors coming in helps me kind of understand, okay, once we get so far extended from a floor, is this my shorting opportunity, right? And these are the things that I bring inside of my analysis to document that 88% win rate, and also kind of just put it into my strategy as a whole, right? Now, the one thing that I can say is that gold has gone up, so a lot of people are going to be like, well, I could have just invested in gold and made 68% this year if I would have sold it at the top. If you would have sold it at the top, right? And are we at the top? We don't know yet because the year isn't over. But one thing I can say is that if you would have just been watching the Golden Nugget and also inside of just the free membership of Verified Investing and got all of my gold and silver calls, you would have made 68% times 2 or 3. Right. Depending on which assets you were trading, because I did this on both gold and silver, right? So that encompasses the entirety of that win rate, at least in 2025. So by investing, yes, you can make, pretty good gains, but by trading it, you can make a lot more. And this was on average like 2 trades a week. It wasn't anything crazy. And I get it. A lot of people are like, it was an aggressive strategy. We'll put it like that. A lot of people are like, look, I can't take 2 trades a week, or I don't want to trade that aggressively, or whatever it may be. That's why we made Smart Money Commodities, right? And that's why we made the futures trader inside of that. So now I'm inside of there, giving everybody my gold and silver analysis, as well as, oil, corn, soy, rice, everything that you can think of, natural gas, everything. And that's why we did that.
Yeah, that's awesome. So in addition to Drew now being part of the Smart Money Commodity Service, giving out trades, every Wednesday at 12:30 on YouTube, the Verified Investing channel on YouTube, his show, The Golden Nugget, every week, Wednesday at 12:30. So you definitely want to check it out. He's giving out these trades for free. And as you said, your track record speaks for itself.
Yeah, we've never had a down week, ever.
That's saying something. That's tough.
In what, 6 months, something like
that?
Yeah.
Crazy. So back to gold. There's been a lot of these really crazy headline numbers out there where they, predicting or forecasting gold could go to 50,000 or 100K. Let's probably pump the brakes a little bit, but what is the thinking behind a lot of these calls that you're seeing, and how does that kind of play into your trading strategy?
So Yeah, they get a little outlandish, right? Some people
Sure.
are like 50K, 100K, 200K, right? And it's kind of, it reminds me a lot of the Bitcoin people, right?
Yes,
That
yes,
they're
I
like,
was just thinking
Bitcoin's
that.
going to $1 million tomorrow, right? So the reason why it's a little different than like the Bitcoin maxis, right? And I love my Bitcoin maxis, man. You know, I'm in crypto too, don't get me wrong. So it's because it has precedent, okay? Because it's happened before, and what they're calling for is like a repricing event. They're like, gold's gonna be what, $4,000 today, and then tomorrow it's gonna be 100K. First and foremost, let me, give everybody the spoiler. It's not gonna go exactly like that, right? But this does have precedent where back in 1932, they actually made it illegal for US-based citizens to hold gold.
That's right.
And then you had to turn your gold in and take US dollars, right? The very next year, they revalued gold by about 75% up to $35. The asset that they made you turn in is now worth 75% more overnight. So that was an absolute repricing event. So it's happened then. It happened in the 70s too, where they literally took the US dollar off of the gold standard, which if you know anything about central currencies and worldly currencies, world reserve currencies, when that happens, it kind of spells the beginning of the end for those currencies. We saw it so many times before, but what happened is gold actually went up 850% in 10 years. It was absolutely insane. So they're saying this because it has precedent, but there's a second reason why they're saying it. And it's because of the US debt clock. So basic math, right? Basic math. $40 trillion in debt, 261.1 million ounces of gold supposedly inside of our vaults, right? Take the two and divide them. That's $140,000 per ounce on gold. And that's why these analysts are like, hey, this is wildly underpriced. Because if we do what we did in the 30s or in the 70s, or what other governments in the past have done, and we rebalance our balance sheets that are, we'll call it what it is, very out of whack right now, then gold would need to be $140,000 per ounce to take care of our national debt. Now, it's not going to reprice overnight, in my opinion, but there are a few things to look out for, definitely.
Wow, yeah. When you break down the kind of the ratio to debt there, it makes a lot of sense.
Wild.
You see where these numbers are coming from. They're not being pulled out of thin air. So Drew, I've heard you talk a lot about the BRICS nations. So that's Brazil, Russia, India, China, South Africa, among others that are in the BRICS group now. What is so important about BRICS and what is their role when it comes to trading gold?
So the BRICS are a key group of nations, right? This is Brazil, Russia, India, China, South Africa. They've got a lot more people joining their coalition now. We totally understand that, but we'll just say who the founders were.
Founders, right.
They have been steadily accumulating gold since 2009. Okay, so China is obviously, we'll say, probably our biggest competitor from the United States-based perspective in the world, right? Now, if China is our biggest competitor and they're also the largest producer of gold and they're also the largest consumer of gold.
Easy to forget.
Right? So this is a big deal whenever the BRICS nations are coming out and saying, hey, we are looking to get off of the dollar, right? And I kind of want to go a little bit off track here, if I can.
All right,
if we're okay with
Grab the wheel, man.
So basically, there's a few key things that you're going to have to watch out for in order to see a global monetary shift that's going to shift towards gold, and this is going to tie right into the BRICS nation. So I want to give everybody kind of like a little backstory, right?
Yeah.
So essentially, countries that are settling in their own currencies, this is bad news for the United States dollar, for any world reserve currency, right? Because that's the whole point of being a world reserve currency. Gold is priced in US dollars. Oil is priced and settled in US dollars, even more important, settled in US dollars, right? And then you've got every single crypto asset known to mankind priced in US dollars, right? So when those countries start settling in their own currencies, this is a huge deal. We've got China doing it. We have the Middle Eastern nations settling oil deals in it. We have Russia, India, they're all doing it, right? Secondarily, countries stop buying our debt. Big red flag. And that's actually happening right now. And you see a lot of countries offloading that debt. And you're probably wondering like, it doesn't seem like anybody stopped buying our debt. And I'm going to tell you why here in just a second. But We've got China that's offloading our debt. Not just the BRICS nations are doing this, right? China, Brazil, India, they're all doing it. Saudi Arabia is doing it. And guess who else? The UK.
Oh, wow.
Right? The UK is also doing this. You can go and look at their balance sheets and you can see our treasuries are going down year over or month over month, quarter over quarter, year over year, right? So where did all the rest of the treasuries go? And it was USDT. Tether inside of the cryptocurrency market, because they basically said, and definitely through the Genius Act now, that has to be backed by, you know, something, right? So they've been buying up the majority of these treasuries, right? So the bottom line to this is that literally 4 world reserve currencies have plummeted. The 4 previous ones to us plummeted whenever they left the gold standard, right? And we left it 50 years ago, right?
Right.
And this is going to get, you know, into the kind of like the history of gold, but we're talking the British pound, right? We're talking the franc, we're talking the Spanish real, and the Dutch guilder. Every single one of them, they were pegged to something physical, right? Mainly gold or silver. And as soon as they unpegged, inflation, debt, all this, and then they lost their world reserve currency status. And then in, I believe it was the 40s, Bretton Woods happened, where the UK lost their world reserve currency status, and then the US got it. And then less than 30 years later, we took it off of the gold standard. It was absolutely insane. So, you know, we've seen these things happen in the past before. But getting that back to the BRICS nations, the BRICS nations know all of that.
Sure.
That's why this matters. So you guys are probably like, dude, Drew's crazy. He just went off on this crazy tangent. It's all a backstory for the BRICS. So the BRICS know all of these things, and they see this all happening in real time. And they're like, look, we got to get ahead of this. China has its own gold exchange, right? And here's the crazy part about China's gold exchange. It's 100% allocated, meaning that if you buy a contract on gold, it's 100% backed by gold. Now, go to London, it's 95% unallocated, right?
Wow.
Go to the United States and you see 100 contracts per ounce of gold or silver or whatever it is. So you see where we're over leveraged to the nines. So it doesn't surprise me that China, Russia, and all these, you know, BRICS nations are hoarding gold, because China's already got their exchange set up, right? And it's functioning properly.
Right.
What happens? Do you know what happens whenever all of the gold or all of the silver or just whatever actually gets taken physical inventory from either the LBMA or our exchanges in the United States?
My guess is that it's going to be, what, rehypothecated, or it's lent out, or there's something.
They have to take it off of the exchange.
Oh,
so you
I see.
cannot trade gold anymore. It's the second that leaves, that last ounce leaves the vault, they can't trade gold anymore. So who gets the gold, right? Everybody has to go to China to buy it now. And that's where that kind of brings it all back to that and just random repricing event that could happen. Maybe gold is $4,000 that day, and then all of a sudden London and the United States run out of gold, and everybody has to go to China, and China's like, hey, guess what? It's $8,000 today. That's a repricing event that could absolutely harm people. So these are the things that I'm taking into account inside of my analysis, and you know, like trading in and out and in and out. And whenever we see things like what just happened, I mean, these things aren't just happening without precedent, right? We literally saw London just almost run out of silver, right?
Right.
We took this trade on the golden nugget for free to everybody that wanted to see it. We took the top end of it because London was running out of gold, and they literally had to overnight and fly silver over to London to be able to, you know, keep the exchange running, right? So we actually took a 7.5% win in like, what was it, 24 or 48 hours? And here's the crazy part. The technicals preempted that move. So I gave that out before we even knew that the London vaults were like losing all of their silver. So then we wrote it right back down, and that kind of gets you into why, if you would have just held gold for 68% gain in 2025, we would have, you know, 2 or 3x beat that. So I mean, that's the BRICS nations, you got to pay attention to them, because whenever these supply crunches come, those guys are going to be the ones holding the majority of the supply.
Wow. Yeah. And that's definitely like skating to where the puck is going, right?
Yeah.
Rather than where it's been. And it doesn't surprise me that those BRICS nations are strong students of history. They've kind of seen this movie before.
Yep.
That does bring me to your course, The Golden Opportunity, because I would describe it, and you can correct me if I'm wrong, as like a comprehensive trading manual, I would say. I mean, you break down all the candlestick formations, all the patterns. But what I think also sets it apart with respect to gold is that you give a lot of these fundamentals behind the gold trade in your course. So if you could just talk a little bit about that and give them a preview of what is a beginning trader or even a seasoned trader going to get with the golden opportunity.
Yeah. So, and another thing that we can tell you as well, if my explanation here isn't enough for you, we actually give out what's called the Golden Nugget every single Wednesday on the Golden Nugget stream. So I encourage people to obviously watch that because I give them a Golden Nugget from inside of the golden opportunity, whether it's a concept that I teach or, like an indicator that I use or just whatever, right? So essentially what you will be able to find inside of there is you're going to be able to trade any market from any type of trader type, whether you are a scalper that does 10 trades a day, or a day trader that maybe stays in for, less than a day or a couple of days, right? Or even a swing trader. It doesn't matter what your level is. The charts are the charts and everything is fractal. So if I'm looking at something on a 1-day chart, I'm going to have the same technical analysis and the same levels that I'm looking at on a 5-minute chart. Why? Because I'm still looking for the same things like naked VWAPs, points of controls, and things of that sort. All of the things that I teach you inside of the golden opportunity. So what I also teach you though is inside of the metals markets, there are fundamental factors that drive it, right? And they drive every single financial market. So understanding what drives gold, you understand what drives every other financial markets, whether it's Forex, crypto, stocks, does not matter. They all coincide with each other. A federal interest rate decision is going to affect every single market, right? So that's kind of what I'm teaching people inside of there, how to break those things down and understand them to the fundamental, degree that I do, and then craft their strategies inside of it. And this goes for anybody, like if you've never taken a trade, if you don't know anything about trading, that's fine because we're going to tell you everything that you need to know. Or even I know I talked to Gareth and Gareth was like, dude, I even learned a couple of things in your course. So even to the most seasoned professional people, we've got you covered 110%. Any trader, any person, and any market you will be able to learn inside of there.
Awesome.
Yeah,
Awesome.
Absolutely.
Well, it's been a very interesting conversation, Drew. Before we let you go, gotta spin the wheel. We gotta give away some prizes, man.
All right. Let's see if we can get I take fate into my own hands sometimes. I know people are gonna want the golden opportunity.
Oh boy! All right, that was
Can't fight fate, right?
That was dramatic.
Can't fight fate.
Fair enough.
That's what we got to do.
And our winner, Teresa K, congratulations, getting a free golden opportunity. Amazing.
Yeah, get your education. It'll be well worth it. It'll be well worth it.
Awesome. All right. Thank you so much for joining me here, Drew. And we will take another quick break, and then we will be back for more Green Monday.
Clip this for my TikTok. Your FOMO called. It's crying in the club again. I was a day one fan of that breakout. You were a fake fan, Jordan. Are we in a commercial right now? Cringe. But click the link anyway. This breakdown is brought to you by disappointment.
Verified investing, no cap, all facts. Not financial advice, just facts, charts, and a little attitude.
Here's the biggest lesson I learned while trading. My number one rule for trading is know when to cut your losses. I know it sucks looking at your account, looking at your trades, confirmations, and seeing red. But what if I told you that taking a small loss could prevent an even bigger loss? The biggest lesson that I've learned while trading is to stop out when my thesis is invalidated. If the reason that I got into a trade becomes invalid, there's no point in me staying on. At that point, I'm coin flipping, hoping that things come and turn into my favor, and hopefully I take a win on an otherwise losing position. The most important thing to do in trading is to cut your losses small and make sure to keep your winners big.
Hi Gareth, guys, really fantastic shows that you guys put out. I watched them all. I've learned so much over the last, let's say, 8 months. I've been watching them on a daily basis. I catch all of the shows. And I think one of the experience that I've picked up from this is that I've learned so much more in my trading career, and I've been trading since 2008, 2009, and I only used to trade as a hobby on Forex only. So I've learned so much more, and you've taken me across all of the different trading, including the cryptocurrencies, and also the stock market and commodities. I did dabble a little bit in gold in 2023, and in September of 2023, I got absolutely wiped out. So I know what it's like to lose a lot of money, but I have a passion for this, and I follow you guys religiously every day. I've gone through the Winning Trading series, and I did Drew's course, and I also did Dr. B's course as well. So thank you very much, guys. I'm really enjoying it, and I started making money in the markets properly, and you taught me a lot. Thank you so much.
All right, so you guys didn't think that we were going to leave you hanging. We've got a sit, and I believe, Ronick, we will be spinning the wheel for you, and we will give you an honest chance and not force you into the golden opportunity. So let's do it. You might still get it.
Oh, wow, that was close.
Ooh, Apex Live Day Trading Room, 1 week access. That is not bad. That's where you're going to make some money, baby.
Yeah, that'll pay for
Gotta
itself
love
pretty
it.
quickly.
Yep, gotta love it. Perfect.
Nice.
Hey everyone, I'm Elizabeth Copeland, financial journalist and trader here at Verified Investing. Thanks for another episode of Verified Market Insiders. Today, we have a very special guest. We have Gareth Soloway. He's the chief market strategist here at Verified Investing. I mean, this is the guy you want to go to, right? For everything. Thanks for joining us today.
Hey, thank you. It's great to be here. Love to talk markets, love to talk whatever you want to talk about.
All right, well, let's dive in. Let's talk about those markets, because for 26 or over 26 years now, you've become, one of the leading roles of traders. Lots of people follow you, love your trades, love your setups, your methodology, and you've known for calling some of the major market reversals. Can you walk us through some of the thought process you have when you're identifying the turning points or the key indicators that really make you sit up and you're like, oh, here we go. This is where it's coming.
Yeah, so a lot of these have been a combination of the technicals on the charts and then also human emotion. So reading, and this is one of the great things about social media. So social media, I'm not a big fan of. I think it's done a lot of harm into society, but at the same time, it gives you insights into a lot of people's psyche. Like, are they overly greedy? Are they thinking, once you start hearing things like, oh, Bitcoin's going to 1 million by the end of the year, and if enough people are saying that, it starts to make you recognize that that's likely a top scenario. That's where you get that crazy bullish mentality where it generally can't last, and it's telling you there's a reversal coming. Markets have an uncanny way about kind of getting the most amount of people on one side of the trade and then pulling the rug out from under them. And that goes both ways, right? So you have markets that in March of 2009, the financial crisis, I still remember vividly because I even felt it back then as a trader. The markets every day were just down massively. A Dow was down 1,000 points every day, 1,000 points, right? And it just wore you down to the point where you're just like, oh my goodness, this never is going to end. I just want to give up and walk away. And people actually were at the point, they didn't even want to turn on the financial news. They didn't even want to know about it. Just like if I don't hear it or I don't see it, it's not real, right? But those were the signals that the bottom was coming. And we look back now and it's like, wow, look at how much the markets have rallied. So again, you got to focus on the charts because the charts are going to give you price pattern and time formations, which are probability based. And then you also want to have this little bit of an artistic nature to you where you're paying attention to what everyone else is saying. When I first started trading in 99, 2000, I remember a trader telling me, and he said, when the bagel man is telling you to buy a stock, the top is in. And the idea being is that when the good news filters down to people that don't have any insights into markets, and it's not a knock against these people, right? It's just, this is just the way markets work. Once they're telling you to buy, they're giving you the stock tip, the markets are usually done. And we're honestly getting towards that point now in the markets where you see these stocks going crazy and the hype is so real that everyone is trying to get involved. probably close to a top.
And that's where you're looking for, whether top or bottom, to counter trade. So you're looking to hear those things, and that gives you the signal, okay, it's time, it's coming the other way, let me get in then.
Right, right. So in that situation, I'm looking to either short or move myself into cash or a combination, looking for other assets. You know, I still remember vividly gold in 2022. You know, David Lynn, I was doing an interview with him, and I said, you know, listen, I'm a big fan of gold here. And this was 2022 to 2023. Gold was trading at like, you know, $1,800 an ounce at that point. And I was like the laughing stock of the internet, right? Like, oh, you know, gold's so old school, like only old fogies buy gold and like all this stuff. And I'm like, oh man, I really like gold now because it was the sentiment. The more attacks that you get as a trader when you're putting yourself out there, the more likely you're going to be right. It actually, certain scenarios, I've actually loaded up even heavier because I've seen that reaction, and it's usually made me more money.
Wow, that's pretty impressive. And speaking of that, in 2001 and 2007, some of your formative years of market psychology, understanding, and risk, so you've said. So how does that historical perspective influence the way you approach modern market analysis during, especially these times, maybe not top or bottom, but extreme volatility?
Right. So extreme volatility is one of those scenarios where you have to tone back share size or the size that you're investing. So if it's crypto, you tone back to smaller position size. A lot of times people say, oh, well, I can make a lot of money. Yes, that's true, but a smart investor is not thinking about how much they're going to make. They're thinking about how much they're not going to lose.
Right.
Right. Because if you go all in and you're wrong, oops, you know, there you get wiped out real fast. And by the way, it's happened to me so many times I can't even count early in my career. Right. So I think I want everyone to fully understand that is that I'm no different than anyone else. I went through the peaks and valleys, mostly valleys in my early trading career where, you know, I had to work 3 side jobs just to replenish my trading account and just keep trying to build it back up. And then I'd lose it and then I'd have to build it back up, right? And it's kind of almost like a rite of passage for anyone that wants to be a trader. Is like, there's never been a trader that just walked in and was like, oh, I'm the greatest trader ever, right? I always make money. And so people have to understand is there's a process. I could tell my kids that the stove is hot. They might believe me and maybe they'll avoid it. Inevitably, they're probably going to touch the stove.
Right.
They need to find out for themselves. Same thing with trading. We all have to take our lumps before we learn our lessons. And so I think that's really the key. The key point is you got to go through these things. You got to go through the process. Back when I started trading, there wasn't YouTube. There wasn't a lot of these like assets. You didn't have courses online. I mean, heck, online was just emerging at that point. And so I didn't have the resources. I had to really do it like grassroots. And so I probably took a lot more hammerings than people today, if they just focus in on good education, would take. So their learning curve can be a lot more like this. Mine was more like, huh? You know, like it was like going over a bunch of hills and valleys, right? But again, it's where you end up and your commitment to get there. Sure. People again look at things and they're like, oh, that's hard, or I took a big loss. It's all about commitment. Like anyone can be a trader. You know, I was just saying this today to the live day trading room is that like in high school, I took my SATs, you know, I don't know what they take now. I don't know if it's a different test, but it was like 1,000 on the SATs, which was like basically average.
Right.
So there's nothing special about that. I was basically an average kid and I just found something I was passionate about. And once I did, I just dove right in and I refused to accept no as an answer or a like loss as an answer, right? It was just like, this is my goal. I'm going to go do whatever I need to do to achieve it. If I got to work, you know, all day, all night, I'll do it. Like, it's just, there was no alternative. It was like, if this doesn't work out for me, you'll see me at McDonald's and like whatever, like that's fine.
Right.
But in other words, there wasn't an outlet. It was going to be my mission to become a trader and there was nothing that was going to stop me.
Yeah. And I want to go back to something you said just a minute ago. It was really interesting. You said, when you started your career, there was no YouTube. So, of course, there was a lot of self-learning, a lot of lessons learned. Well, my first question is, and I think I know the answer, what did you learn more from, your winning trades or your losing trades?
Always your losing trades, right? Yeah, I mean, it's your winning ones. Half the time it could be dumb luck, right? In other words, like it just worked out and your thesis might not have been accurate or whatever, but it was just, and also back then when I first started trading, I didn't even know how to read a chart, right? So I was really just going with the crowd. Like I was going on, you know, hearing what the other traders in the office. So initially I worked at MetLife after college because I didn't know how to be a trader, right? I was like, all right, I know that I love trading because I played around with fake money and I started to play with like a very small account. but I didn't know like, well, how do you do that as a career, right? And so after college, I went to MetLife. I worked as a financial planner, insurance guy. Hated it. Like they were like, Gareth, you're low man on the totem pole. Get on the phones and call people at dinner and just try to sell them insurance.
Wow.
Well, we all know the responses that most of those phone calls got. Basically, F off, right? And so hated it. I'm not a confrontational person in that way. I was always a shy kid growing up, and so it was like everything. I would like avoid making those calls. I'd like hide in my cubicle, right, and like hope that the boss didn't come around and see me, right? I'd pretend I was on the phone, like all this stupid stuff. But as soon as I was in a year into that job, I like quit, and I saved from that job $10K, and then I went to that prop firm. And then I was exposed to other traders, right? And so I started to hear about, oh, well, you know, this stock is up 40% on the day. I'm going to go short. I didn't really know why, but I was like, okay, let me do it. Sometimes I got burned, by the way, because they were doing a lot of bad habits.
Right.
But really it opened the door to now I had multiple screens in front of me. I was looking at charts. I was starting to understand price action. And that was really that start of the charts. But just going back to your original question, your losses are always what you learn from. And that goes for everything in life, right? I mean, whether you're into trading or you just want to do a different career, we learn from the losses, and it's about how do we get up from that and continue. Do we stand up and just drive forward? Because some people don't. Some people just like say, oh, it was too hard, I'll walk away. Those people will never be great in their careers. You got to keep pushing.
You know, and when I started, you know, just a couple of years ago, just kind of trading, dabbling before I joined here. And I have to tell you, I had almost the opposite experience. I had an overload of information. It felt so overwhelming because I did have YouTube. I did have all these people out there, whether pro traders or just social media traders, as I call them, just trying to give you so much information on how to trade. What would you say to those people who are starting to trade and just feel like information overload?
And you're right. In this day and age, that's what it is, right? We're exposed to so many different avenues. There's financial stuff on Facebook, on Instagram, on YouTube, I mean, everywhere we turn. And it is a hard situation. And I would always just say, start out by learning the basics. And then you can expand out from there. But don't try to take too much in because it's impossible. In fact, you know, I see some of these influencers and watch, you know, I'll tune into their video. I'm just curious. And they have so many different indicators on the chart that I can't even, like, even I'm like turned off. I'm like, wait, what the heck are we even looking at here? I love the fact that in trading, I keep it so simple. Like, I don't have moving averages on my charts. I do occasionally throw them on just to see where they are.
Right.
But it's basically trend lines, which then make up parallels, which make up, you know, double tops, double bottoms, all that stuff. It's so simple, yet it works. And I love the idea that, you know, one of the things I always say is a chart is essentially a foreign text. Like, let's just say do you know how to read German or Chinese or whatever, right? No, so if I were to give you a book in Chinese, you're going to be like, I have no clue. And that's most people looking at a chart.
Oh, for sure.
But if you just learn how to read that chart, all of a sudden it's starting to tell you things like what's the most probable next move coming. And if you see enough of that and you're like, okay, the probability is, let's say 70, 75%, 80%, you could say, okay, well, now it makes sense. The risk reward factors, the odds of success, these are the things that now make it sense for me to get in a trade versus, oh, I just saw that influencer talking about how it's going to 1 million, so let me just buy in.
Right.
And then you're like, oh, crap, I just lost a ton of money because he was pumping it at the highs, probably looking to unload. So the charts are just awesome like that.
And you have a series, the Winning Trade series through Verified Investing. And, you know, when you go through that series, what do you find, and lots of people have gone through it and you've seen them come out, they're in the live day trading room now. What do you find is the most aha moment from these traders who have now, like me, gone from overwhelmed to now, okay, let's just break it down to the simples. Let's get to the point, keep it simple. We're coming out on the other side. What's the aha moment where it all kind of comes together, you find?
I think what it is when they put factors together, right? So in the Winning Trader series, there's a bunch of simple factors, time counts, price pattern, and time, essentially those three factors. And when you find a trade setup that has like three of those, and three essentially, the more you have, the higher probability of success, right? And so the idea is that as you get more and you start saying, okay, well, now I actually have a thesis that I could defend in front. I always say to people, like, come to me and imagine I'm with the top traders in the world and you have to present this trade to me.
Right.
Would I say, all right, your thesis is valid? If not, then you're just, you probably shouldn't make the trade. But if you do that and it fits, and then watching people say, wow, I put the pieces of the puzzle together and it worked out. That's the light bulb that goes on over their heads. And it's so liberating because we go from this world of where, investing is very mysterious, like, oh, I hope the markets don't crash. I hope they just keep going up forever. I just hope, hope, hope.
Right.
Into a world of, wait, this trade that I'm accepting the risk of taking has a 75% chance or 70% chance of success. It's a night and day scenario. Now you feel like you have control, and you do to some extent.
Right. And speaking of the Winning Trade Series, we also have a Pro Edition now. What makes this Pro course different?
It's much simpler. So we've really kind of tried to simplify with better increase the graphics, and really it's the same knowledge, but just increased in its expertise and its simplicity, I would say. And I think that's really the great thing about it is that it should be just an upgrade to the original with all the hard-hitting facts that it already had, but now it's just even easier to digest. It's still, significantly long. I think we've been able to kind of simplify it a little bit,
Right.
but the length is just because there's so much information that I want to give out that will make you into a trader. And if you think about it, right, if you go to become a doctor, I mean, how many hours are you spending, right? And so I think the Winning Trader Series is like 15, 16 hours, whatever it is. But people are spending years, and the amount of money you're spending to become a doctor, the debt you're taking on, versus here you have a career where you can make thousands a day with a couple clicks of a mouse on information that I'm revealing in here in about 20 hours or less.
And sitting from your home, not even, at some point, the dream is to not even have the 9 to 5.
That's the beauty of it, right?
Right.
Wear whatever you want to wear, sleep. I mean, technically, and this is what's so funny, is that when you become a trader, generally people are so excited that you're like, oh, I have this freedom, but I'd still rather be in front of my computer because like, it's just, how do you say no when you're thinking about like, oh, wow, I could, in the first 5 minutes of the day, make $1,000. It's like, or I could just stay in bed. Well, that doesn't, like, really? You're not going to get up for $1,000? Come on.
Right. Yeah, I get it for $1,000. That's
Yeah.
not a bad
Yeah.
deal. That's not a bad deal. And you also start out the day pre-market with a 9 a.m. show called My Trading Game Plan. I mean, tens of thousands of people watch this. It's very popular. What is your philosophy about how you structure this daily show? I mean, what are you looking for to highlight each day? And how do you come up with some of these trades or some of these ideas of what's moving the market that day?
So the first thing I do every game plan is I always say to myself, I've got to make this show worthwhile and actionable enough to justify why someone's going to watch for 20 minutes, right? Because it's their time and it's their morning. They could be choosing to do many other things. And so I always have to bring like my A game. Every once in a while, there'll be a show where I'm like, that wasn't my best show. And I'm like, damn it. Like, that's not cool.
Yeah.
Like, it always has to be on point. So that's number one. But number two is I always want to find what's actionable for the day, because tomorrow I'll do the game plan again, and then there'll be new trading opportunities. And so I'm always trying to give trading opportunities that are actionable with education, where if someone's just tuning in for the first time, it's simple enough for them to understand. But if someone's tuning in every day, they're starting to put the pieces of the puzzle together. And so the idea is the game plan is almost like the precursor and the walkthrough of the Winning Trader Series, where you're watching me. So let's say you've never taken the Winning Trader Series.
Right.
The game plan is simple enough to understand, but if you have, now you're watching me do everything that I've taught, and you're like, now I understand why he's doing this.
Right.
And so I love that. And I love the idea too of in the game plan being able to take these complex thoughts and extrapolate a couple steps out to make people understand the likely outcome of the markets, why I believe the markets are bearish or bullish, or individual stocks, cryptos, commodities, etc.
Right. And I mean, you talk a lot about discipline in trading. And I would assume that kind of correlates to your life. Like, what is a morning Gareth Soloway's life like? Are you waking up at like 7, checking? I mean, what are we looking at as you wake up in the morning?
Yeah, so sometimes I'm up as early as 4:30 or 5.
Mhm.
Usually what I'm doing is monitoring markets, right? And so, and people say, oh, that doesn't sound so cool, but I kind of love it.
Yeah.
Like, it's like there might be an opportunity that early, right? So, and I also start to get my bearings. Like, we talk about prep work, right? So prep work isn't me going out into the garden and like spending hours lifting bales of hay or anything like that. It's literally just starting to be tuned in to the point where I'll go on vacation, and I'm still trading on vacation, right? In fact, since I started the original company of Verified Investing back in 2007, I've always worked on vacation. And part of that is that there's a commitment to the members that I feel responsible for, like always walking them through the day's action. But also, if you go away for like a week and you come back, you almost feel like out of touch. And out of touch in trading means you're more likely to lose because you just don't understand the inner flows of the market, like what's going to happen here, what are the market's driving forces. And so it's kind of a twofold factor there. But for me, it's just always being tuned in. I get up, I have, you know, CNBC on. Not that I'm a big fan of CNBC because they basically talk the fundamental side and I'm a technical trader, but it lets me know what kind of the key driving forces are. Like what are other investors going to be doing today? What's the big stocks that are moving, right? And so I pay attention to that. Then I go right to my charts. I start analyzing the charts. What's the big movers of the day? And I just, you know, basically all day long trading and just analyzing.
And you've been doing this, like I said earlier, over 26 years. You said, I mean, there's been times where you know, were learning, wiped out accounts.
Yeah.
Right now, if you had to go back 26 years, what advice would you give to young trading Gareth of MetLife?
I mean, that's a good one. I mean, there's number one, like I said, I made lots of mistakes early. I also look back on that and say it was a learning curve. It made me who I am today. But I certainly would, like anyone who's starting, including myself, I'm so happy looking back that I didn't have a lot of money.
Yeah.
Because if I had a lot of money, I would have just been trading with more money. I had very little, and I had to, like we talked about, I had to work 3 side jobs just because I was taking losses in that account and it was going to zero. Yeah. So I had to keep replenishing it every month. And I'm really happy that I didn't have just millions to draw on because I would have just kept on drawing on. Like if I had a trust fund or something like that, I would be like, oh, let's take another million out and like just trade, and I would have lost it. Yeah. But when money really matters, you pay more attention. And so I think if I had more money to trade with, it would have even taken me longer to become a profitable trader.
Okay. Well, that totally makes sense for sure. And I mean, you not only built your successful career on, you know, learning from your losses and trading, but you were also an educator. What do you find more challenging? Trading profitable trading for a win, or teaching others to take profit? So education or trading, what do you find to be more difficult or rewarding?
Well, rewarding is definitely the education.
Yeah.
I mean, it is so cool. It's, you know, when I first got into trading and when I first started the company back in 2007, and I was trading already for years before that, but finally, you know, I still remember telling my mom that I was going to start trading, and she was honestly disappointed. Like she was disappointed that I was going to be starting a business and making this a career. I think before that she thought it was like a hobby and because she was an educator. Both my parents were teachers, and my mom always had this hope that I would be a teacher.
Yeah.
You know, and like I still remember she was like, "Oh, you're going to become one of those greedy Wall Street guys and like all about the money." And then what I'm proud about is that I still, number one, I stuck with it and I just pushed forward. Mm-hmm. But now I'm able to teach and do, like, it's weird how it's come full circle where I'm still able to be a trader, right, but I'm also able to teach. But to answer your question, I would say trading is harder than educating. I can teach anyone to trade as long as they're committed. Mm-hmm. But the one thing I can't teach people to do is be disciplined.
Yep.
So that's the emotional side, right? Everyone has to find that on their own. The teaching people what a double top is, a topping tail, all these little things. I mean, it's just, it is what it is, right? It's very black and white. It is what it is. But the education is more fulfilling for sure.
How do you feel like you stay disciplined? Like what is your process of looking at a trade that may be going against your way? I mean, we are in the live day trading room every day, right? Mm-hmm. We're trading risk management. We're trading real money with real members. Mm-hmm. When you see a trade going the opposite way, how do you stay disciplined in emotion?
Yeah, so I've really trained myself over years and years and years to have zero emotion. So I always go back to the chart. The chart is always going to be the one that tells me, should I still be in this? Is it still going to bounce, let's say, or is it going to go south? And also the money management side, right? Mm-hmm. So, you know, the general consensus of most investors is, here's a great trade setup. Whether it is or not, we don't know. But generally, people don't enter a trade unless they think it's a good trade.
Right.
And so if you think it's a good trade, the idea is, well, why don't I put in as much money as I can, mm-hmm, because then I'll make the most.
Right.
I've learned that when I do that, I get smoked. You know, so what that's taught me is to be very disciplined and say, okay, I like this setup, but I could be wrong. Mm-hmm. So let me start small. And it's not about how much we make, it's about how much we don't lose, right, as a trader to be successful, right? If you can keep your losses minimal, then you're going to be likely a winning trader. And so those are really that's such a key factor, that mindset shift. to go into a trade thinking you might lose is a much different mindset than most people have, which is why most people don't do very well in trading because they're going too heavy.
Right. And at what point, because a lot of times I have, level set that's going my way, and all of a sudden it's not, and my thesis is negated. At what point, though, I'm having a hard time figuring out, okay, is my thesis negated, or is this a part of the market just trying to pull my money?
yeah.
Right.
Yeah, and that's always the tricky thing, and a lot of times that will happen, right? It'll go just a little bit lower than where your stop is, and then they'll reverse it. And part of that is there's something about the markets that understand, whether it's algorithmic or just the natural way of things. The markets understand you bought where you did, and there were probably thousands of other people, and they know where can they push you to get you out of that trade. And so it's a fine line where. This is another scenario where sometimes it's good to go smaller because you can withstand those type of flushes and then stick with it, or even add down there, be like, okay, well now it's down here, dollar cost average, and get that bounce. Because inevitably, unless there's some news like, bankruptcy or something like that, very few things go straight down, just like very few things go straight up. And so you're going to eventually get a bounce. The question is, can you manage the position appropriately to be in a good position to get that bounce and be in the money, or at least break even, right? I've taken trades where I'll be out of the money and I have to manage it, and I'm just happy to get back to break even. That's okay too. No loss is kind of a win.
Right. Yeah. I mean, there's been days where it seems like at least in my trades, have to dollar cost average almost all day to fight just to break even. But I mean, that's another, pro of not putting in 100% of your portfolio, right? Because now you've got money to navigate that trade and be able to be a little bit more flexible.
Yeah, and one of the biggest lessons that I try to teach in the Winning Trader series that I teach all the traders here is be a singles and doubles hitter, right? So a baseball analogy is you have the home run hitter. Well, the home run hitter might hit a lot of home runs, but they also strike out a lot.
Right.
And striking out is not good for us because we tend to take big losses, right? I mean, when you strike out, you're taking a big loss that can do major damage to your count.
Right.
And so the key is just taking small, and that's partially share size or crypto size, whatever it is, that you're buying small amounts to allow that maneuverability, but just understanding, don't swing for the fences. Don't try to make 1 million in one trade. Just do 1 million trades for a few dollars, and the math works out.
That makes total sense, because if you're striking out and hit, one home run every 5 strikeouts, I mean, yeah, you might make a couple $1,000 in one, but if you're just consistently making $100,
$100,
boom, it adds up so quickly.
It does. It really does. And it's that compounding factor too, right? It's like, so you build your account, let's say from 5,000 to 10,000. If you then take a 50% loss at that point, you're back to 5,000. And what was that all for? But if you're just consistently building it, let's say making 200, 200, 200, 200, lose 200 or 300, you're still hanging in there, 200, 200, 200. High on base percentage, essentially.
Right. I'd rather be dollar cost averaging every day to get back to zero than trying to fight multiple days in a row to get back to zero after a huge loss. I feel like that's a lot easier.
I agree.
Well, I think we have time for one last question. Now, I've been hearing a lot about this in the office. I'm very excited. I wanted to be the first to ask you because I'm not quite sure what everyone's talking about. But I've heard about the $1 Million Investor Series. So I've heard about this, and everyone on the VI team seems to know except for me. So tell me what this is all about. Spill the beans. Let everybody know what the $1 Million Investor is all about.
So what I wanted to do was I wanted to start a new service, and we only meet quarterly. So it's like a mastermind class.
Okay.
But I'm putting $1 million in account. And everyone that's part of that service is going to get access to that account to view it, right? So it's real $1 million in that account. Our first meeting, I will be talking about the investments that I will be putting in there. It's not meant to be as much a swing trade like I do in smart money stocks and ETFs, which is shorter term, like we buy for a few days or a week or two. This is more like, okay, over the next quarter, what is my game plan for growing this money? And so we'll be holding for a little bit of a longer period, which is some people always say like, oh, I wish you had a longer term holding portfolio or subscription. And we'll be going over all of this, and they'll see it live in the account. So if I buy and sell, they'll see anything I do in that account. They'll see the P&L of that account grow or shrink if I do poorly. But essentially, it's that full transparency, but on a little bit of a longer time frame, to allow for it to be much, much different. So I think this is kind of something that a lot of people have asked for. And so I love the idea of doing this kind of mastermind $1 million portfolio kind of challenge, which will be for a year. Anyone who signs up is going to be in for a year. And we'll meet quarterly, and they'll get alerts if I do trade. Every once in a while, I will put a new position in or take it off, and they'll get alerts on that, and they can see it in the portfolio as well.
So
see
real-time updates.
Real time, with exactly how many shares of a stock or ETF, dollar amount invested, like all of the data, P&L, profit or loss, if I'm in the profit or loss for that.
Okay, that's what I was going to ask you because, so like, let's say I don't have $1 million. Let's say I have $100,000. So I can then calculate, all right, he put this much of a portfolio into this, so I can calculate my own trade, same entry and exits, but I can calculate that risk management myself in my own portfolio.
Exactly. And I'll be focusing on higher quality names, most likely too, where it's more like, like we might be looking at something that pays a great dividend. Since we're holding it for a full quarter, we'll get that dividend. I'll be factoring that into my analysis, but you'll be able to basically take anything I do and you can extrapolate into your size account, and then you get to make the decision of, do you want to follow that percentage? You can go heavier, you can go less. I'm showing you exactly what I'm doing, full transparency.
Okay, awesome. Well, I am super excited to see that, to be a part of it, quarterly meetings, but transparency 24/7, right? It's not just the quarterly updates.
No, that's right. 24/7, full access to that account to be able to view. And then we'll meet quarterly to discuss. I'll answer questions. I don't really have a service anymore where I answer questions. My traders do for me, but this will be more of a mastermind where we can talk about things, maybe talk about the next investment we're going to do. People might have a great idea. I'm always open, right? I certainly don't know everything. So people in there, bring your ideas as well.
I mean, just before coming into this company, Verified Investing, I will tell you, this level of transparency, you don't see anywhere else. You really don't. And that's just not from me because I work here. That's just, it's true. You don't see that level of transparency anywhere. So that is a huge deal.
It is true. And just to mention that too, I love the fact that in our live day trading room, you basically have a cockpit now where when we enter a position, it goes in live with our size, like 1/10, 1/5, whatever it may be. We tell you it's based off $1 million account, which we're trading. And basically, as soon as we close it in, it goes right to the track record. It's all automated. So it's just like people see whatever we do. It is what it is.
That's awesome. Oh my gosh. I mean, you can't beat that. That's amazing. Well, Gareth, thank you so much for being here. I really appreciate you talking with us. And we'll definitely be in touch about that $1 million investor.
Sounds good. Thank you.
Thank you. All right. Thanks again for joining me here, Gareth. And Gareth, just one last thing. Where can people find you on social media if they are looking to follow like what your thoughts are, if they're not maybe in the Verified Investing group?
Yeah, so YouTube is the big place. I do a few videos almost every day where just more insights from me, and that's a great place to get some information for free and just check it out. And really just Verified Investing. I write articles every single day. I do our little commentaries. I mean, there's so much free stuff on the Verified Investing homepage that I do, including these videos, that really, if they just come to Verified Investing, they'll get everything they need.
Okay, and make sure you go there, like and subscribe. You'll get those notifications of Gareth or any of our other traders or any interviews that may come up. So make sure you do that. But again, thanks for joining us on Market Insiders. We can't wait to have our next episode.
When do you get out of a trade? I like to keep it simple, and a real simple tip I use is the 10% rule. The 10% rule can be applied to day trading, where if a stock is down $10, I'll be looking to gain about $1 on that day trade. For swing trading, I'll be looking to gain about 10% gain of my total position. The 10% rule helps me keep it simple. Trading can be so complicated. It's imperative you do whatever you can to make it as easy as possible.
Welcome to the Apprentice Trading Library. In this segment, we will explore tulip mania, the first documented asset bubble. The story of tulip mania in the 17th century Netherlands is often portrayed as a classic example of an asset bubble and its dramatic crash. Here's a breakdown. Tulip mania originated around 1593 to 1633 when tulips were introduced from the Ottoman Empire, capturing the Dutch imagination with their vibrant colors and exotic appeal. Initially, appreciation remained within horticultural circles, with rare bulbs fetching high prices. A newly developed technique allowed faster reproduction, increasing supply but also creating mutant varieties with unique patterns. The mania took hold from 1634 to 1637. Demand surged beyond true flower enthusiasts, attracting speculators seeking quick profits. Futures contracts were traded on bulbs not yet grown, amplifying price rises. Prices became absurd, with single bulbs costing houses, livestock, or even annual salaries. But this mania wasn't universal, impacting mainly middle class and lower classes, not the wealthy elite. Now let's explore the crash from 1637 and beyond to present day. In February 1637, concerns about unsustainable prices and limited demand triggered a collapse. Contract prices plummeted, leaving many speculators financially ruined. While some economic hardship occurred, the overall impact on the Dutch economy was likely minimal. The tulip bubble narrative gained traction in the 19th century, used as a cautionary tale about financial speculation. It is important to remember that tulip mania was a period of extreme speculation. Its true scale and consequences are debated. The crash primarily affected individuals, not the Dutch economy as a whole. The story serves as a valuable reminder about the dangers of speculative bubbles, but historical context is crucial. I hope this explanation of tulip mania has been helpful. Thank you for watching the Apprentice Trading Library. Please visit verifiedinvesting.com for more.
All right, hey everyone, I'm Elizabeth Copeland, junior trader here at Verified Investing. And today I have a very special guest with me, Mr. Mike McClone, who is a senior commodity strategist at Bloomberg Intelligence. Thanks for being here.
Well, thanks for having me. So how do you go from a junior trader to maybe a higher senior trader?
A lot of learning from people like you who know the business in and out, and obviously from Gareth. So a lot of strategy and learning and absorbing. Yeah, it's going to be exciting. A couple months to go, but I've learned a lot.
Good.
Well, your macro research has consistently highlighted the deflationary forces in the economy. With recent inflation data and Fed policy shifts, has anything changed in your long-term deflationary thesis?
No, the key thing that's changed this year, Elizabeth, is I'm completely seriously scared about what's happening in gold. Gold, I don't think is going up for inflationary reasons. It's a cycle where it goes up for deflationary reasons. I mean, it's an offset to the stock market. It's an alternative. And you can see that in, for instance, bond yields. Right now, the 10-year note yield in the U.S. is 4%. At the end of last year, it was about 4.6%. So that's dropping. Even 30-year yields are dropping. So if there's inflation, it shows up in the bond market first. And then there's seriously deflationary forces in China. China has 10-year note yields of 1.84%. And it just brings me back to, I was trading Japanese government bonds in 1995, and I remember seeing those deflationary forces there that lasted for 30 years. That's happening in China now. So I'm worried that a normal cycle in history is where you get deflation from inflation. Now, we just had the biggest inflation in your lifetime. Now, I saw bigger inflation in the 70s. I only cared about candy bars back then. But now, that's my point, is I think we're tilting that way. So it's happening in China. Potentially in Europe, they're facing those massive deflation forces coming out of China. And there's one key force, the pillar of everything, is the U.S. stock market. At 2.3 times GDP, and at the highest ever versus the rest of the world, it has to stay elevated, or we have a very serious situation, very serious, like happened. There's only 2 points in times in history, and I love that people push back on me in this. 1929 in the US, that peak, and 1989 in Japan. And those are what happens. You get risk assets go up for good reasons. In this case, it was big pumps and liquidity thing, and then they just revert. And we need to keep that pillar high, or we're going to get normal deflation from the inflation. That's what I'm worried about, my kick in by the end of the year, and I think that's what gold's figuring it out.
That's really interesting. That's a great perspective, especially going back to the cycles, I mean, all the way back to everything in the early 70s. So you've, let me look at commodities broadly. What's the most compelling opportunity you're seeing right now, and what's the biggest risk these traders are underestimating?
The biggest risk, I think, right now is a normal pullback in the assets that rallied the most this year. Precious metals, gold, silver, platinum, and palladium. On average, you put them together in their basket, up about 70%. That has not happened since 1979. And it's mostly, you didn't really trade a lot of platinum and palladium back then. It was really gold and silver. That's a serious sign, and I'm afraid that they might have a little bit of a pullback. You see things like crude oil down 15%, and just to say that crude oil is down 15% and gold's up 60%, that's a global recessionary trajectory. So something happening there, but the biggest thing I'm worried about is what might happen with the stock market. Why? Because you look for little signals. So when you have crude oil down 20% in a year, and a year that the S&P 500 is up 15%, that's kind of odd. And so you look at it, it's a highly correlated, crude oil is very highly correlated to the stock market. So what if the stock market starts ticking down? Those deflationary forces that I've been worried about for a while accelerate. So the key thing I'm worried about for the next 3 months, the end of this year, is we get a little pickup in volatility. I have to start with stock market volatility because 90-day volatility in S&P 500 just bottomed at 8.9%. Right now it's around 10%. And that was the lowest in 5 years. So you have to expect a new lower plateau in volatility for the rest of the year to stay low, stay moderated. Or if we just get a little backup in stock markets, the domino effects kick in. And I'm afraid it's already happening in cryptos. So I'll end with this. It's already happening. Bloomberg Galaxy Crypto Index. I helped launch it at S&P. I'm sorry, I was at S&P. That's why I talk indices. But at Bloomberg, it was up 30% in the year. Now it's up about 5%. So think of traders. Anybody who's been long this year, like, I still got a profit. Maybe I should start hitting a few stops and maybe get out of it because you don't want to sell it down 30%. Maybe you get up 10% by the end of the year.
Right.
You get lucky.
Right.
But getting lucky with the stock market volatility at a multi-year low is like good luck.
Yeah, good luck getting lucky, that's for sure.
Yeah.
And for our viewers who want to learn more about you or want to follow your work, where can they find you?
Well, on Market Mavericks, I'm just a big fan of Garrett and your team. So there, definitely, I'm on Bloomberg Terminal, on X, at Mike McGlone 11, and LinkedIn, Mike McGlone Senior Commodity Strategist. But I post a lot of my stuff, and people, if they ask, I can put them on my distribution list. But one thing I really enjoy, partly worth speaking, is being on Garrett's show, Market Mavericks. Because what I do is 24/7 is strategy and research and just trying to figure out stuff that's new and different that I can, put out to people. And I get to show and tell once in a while. Garrett allows me to do that in the show.
And it's a great time because it seems like you guys just kind of ping off one another. There's no script. You're just going at it, just talking with a crypto fanatic and then a technical trader and yourself.
So that's one thing I really love about this show, and Scott pointed out before, we don't plan at all. It's completely extemporaneous. Garrett drives it.
Right.
And Garrett, and we know what's relevant because we're so in markets, but that's what I want our audience to know. That's just complete extemporaneous. 3 market people just enjoying bantering, and it's important we disagree because that's where you really hone your views. Am I right or wrong? And it helps our audience make better decisions, I hope.
I think so, yeah. And again, check out Mike and the whole Maverick team every Thursday at 3 Eastern on our YouTube Verified Investing page. Thanks so much for being here.
Thanks for having me.
Thank you. All right.
Hello, everyone. Hope you're enjoying Green Monday. Up next, we've got another interview with Liz Copeland, interviewing Drew Dosick. So you don't want to miss that. Stick around.
Hello, everyone. I'm Elizabeth Copeland, financial journalist and trader here at Verified Investing. Thanks for joining me on Verified Market Insiders. Today, We have a very special guest, Drew Dosick, a pro trader here at Verified Investing. Thanks for joining me, Drew.
Thanks for having me.
Yeah, well, let's go ahead and dive in first because you came not necessarily from a financial background in the trader sense of the word, but from sales. What mindset puts you from, sales to trader? What brought you over to this side?
Well, it was a significant journey, right? And during that time frame too, when I decided to become a pro trader, COVID was going on. I was in sales. I was doing leisure golf sales for groups of 12 or larger coming down. Part of my territory was Canada. And once COVID happened, that border was shut down. Travel was shut down. The whole industry really was furloughed for an extended period of time. And during that time frame, I started wondering, all right, what am I going to do with the rest of my career? I don't want someone else to control my destiny, something that I literally had no control of, and none of us did during COVID.
Right.
And lucky enough for me, I had met Gareth Soloway back in 2008, started my brokerage account, started looking more into that too once COVID happened. Then I decided, you know what, I'm just going to go head first and learn everything I can with Gareth. And it was just smooth sailing from there. Had a lot of fun learning it and really excelled pushing into the markets. And one of the main things though, like I said, the one thing I wanted to do with getting into stock trading was to control my own destiny. And that's what I'm doing even here at Verified Investing. It's almost like I'm a general contractor, individual trader here amongst a great team, all learning more and accelerating my trading skills.
So you're able to collaborate with everyone, but yet still be able to make your own trades, make your own decisions, and kind of push your own brand almost as Drew Dosick forward, but with that collaborative background, kind of like that solid brick in the foundation.
That's right.
Yeah.
Yeah. And that's what's fun about it too, with the courses in particular, doing my my show, Trading the Close. Those are something or places in which I can really express just my own characteristics, my own points of view on the market. I know we do collaborate with a lot of different ideas here at Verified Investing, but all of the analysis that we do is our own. And that's what's so wonderful about it. And it gives viewers multiple takes on certain stocks or commodities, one if which another trader might not have seen a particular level. But the neat thing about technical analysis is that generally all of our levels correspond. And so it's pretty neat too to get that reassurance whenever Gareth comes over my shoulder, is looking at a chart and he's like, actually, I got the same level right there. So yeah, it's a lot of fun.
Right. And what has been the biggest difference, do you think, from going from sales to trading?
Sales from trading, trading is a lot more action packed, I would say. Sales, sales, just like trading, actually, it's got cycles to it. You have a sales cycle, an annual sales cycle. I'm dealing with a lot more people in sales, whether it be through the phone, in person, or through email. Here at Verified Investing, I still am discussing trade levels with our members. However, it's not a lot of face-to-face interaction, not necessarily closing deals. They're following along, learning the education, becoming better traders. So it's two completely different dynamics. However, the pressure is involved in both, right? It's a high-pressure job here in trading. It was a high-pressure job in sales too. If you don't hit those numbers, you could be on the cutting block, right? And so, and I've seen, we've all seen it in a lot of people that have been in sales. But lucky enough for me, I had a great career in sales and really enjoyed my time there. But then here, as I've said, the main direction was to shift to really start taking control of my own destiny, being that I can start trading now, but then all throughout the rest of my life. Even when I decide to leave Verified Investing, I'll likely still have a computer and be clicking buttons as long as I can see and move on the charts.
Yeah, and by that time, maybe AI is doing it for you. Just tell it what to do, and it enters and exits levels for you.
It could.
Right there now.
You're right, but it may be like the first time you get in a Tesla and you don't know, like, oh my gosh, this car's driving itself.
Right.
Do I want to let it do that or not? And with all the knowledge I have in trading, I would be inclined to, dally in that area of letting some AI trade. However, I would rather be in control myself.
Oh, absolutely.
Yeah.
For sure. And I've talked to a lot of the other traders around here about lessons learned because, every trader, I feel like, from new trader to being here 26, 27 years like Gareth, there's always a lesson to be learned. And I asked this, kind of knowing the answer, but I do want to let other people know because it's the most surprising answer I found so far. What and how, what are the lessons you've learned and how have you learned them? Is it from winning a lot of money? From trading very successfully, or is it from losing a lot of money and maybe not trading as successfully? Where were those lessons learned along the way?
That's a good question, and it really kind of the answer boils down to human psychology. And really, as humans, we have you can boil everything down to we either want pleasure and we want to avoid pain, right? And so we're ingrained with that inside of ourselves. Whenever we have a losing trade, it sticks out far more than all of the winning trades. I've had, as far as percent goes, they far outnumber the losing trades.
Right.
But the losing trades really stick with you because I think in humans, we want to avoid that pain, right? So that's where I've gotten my biggest learning lessons. And I'd have to say, especially starting out trading, and I talk about this in one of my new courses, the Trader's Core, position sizing is everything.
Mm-hmm.
A lot of investors don't necessarily understand that, but giving yourself the ability to maneuver within and without of positions without being too over leveraged, too much of your portfolio in one position, it helps keep your emotions at bay. And you'll actually find you'll start making more money without having to use as much of your money for leverage.
Mhm.
So I'd say those are the biggest things that I've learned as far as the beginning when I was trading.
Right. So, I mean, talking about just kind of compounding those wins, Gareth said, a couple of days ago that it's about hitting the home runs, about the
Mhm.
singles. And I found that a lot with new traders, and even myself trading newly. It's, you have X amount of dollars. Let's say it's not that much. Just you start with a small capital.
Yep.
You want to double it the first day. That's just not how it works, though. I found, you got to slowly build it up. Is that what you found as well? Just the slow earnings, the small little earnings that add up very quickly.
Yes, yes, and don't be confused with a lot of people online. They'll post a lot about their big winners, right? And especially options traders. It's usually hit a grand slam or go broke.
Yeah.
So you can certainly go that route, but that route's typically very short-lived,
Yeah.
right? This game, again, I wanted to take control of my own destiny. So what that meant too is this is going to be a long run for me. This is going to be a marathon. One of the things that Gareth said for many years that really resonated with me was this is a game of singles and doubles. Singles and doubles. You swing for the fences, you're going to strike out. And then Gareth also said that one of his favorite players who made it to the Hall of Fame was Wade Boggs. And Wade Boggs wasn't this big, Jose Canseco swing for the fence type of guy. He was very much singles and doubles, but he was a solid, consistent player making it to the Hall of Fame. But my favorite in that same regard is Cal Ripken Jr. Similar sort of player. However, Cal Ripken Jr. had the longevity. He was the Iron Man. Played the highest number of consistent games in Major League Baseball ever. And as we know, Major League Baseball has a ton of regular season games. So it was a major feat for him. But again, both of those players, you really just view them for some of the characteristics that they've had that they excelled at. It was all consistency. It wasn't high peaks of success and then a lot of low valleys of losses. It was basically consistency throughout their career. And that's what you want to strive for. That's what I strive for in investing.
Yeah, reliability and consistency seem like they come up quite a bit in talking about trading and being a successful trader, at least.
Yes.
Now, talking about your trading, so we're technical pattern traders here, and you talk a lot about inverse head and shoulders, measured moves, targets off those measured moves. For someone watching who's still learning about technical analysis, what would you say to someone who's looking at those patterns and say, maybe gets in a little too early, kind of pulls the trigger on something they think is forming, like a validity? So the validity check, like, is it valid or not? What would you say to those people who still don't quite understand that or still trying to understand, measure moves or things playing out on the technical level?
Sure. Now, please forgive me. First off, measured moves. I can't say the word measured that well. It's just how it is. So it helps too for folks that are learning from me to remember some of these patterns carry those measured moves, which are so valuable for you to understand, right? If you were to go to anybody and say, hey, look, I've got a pattern on a stock, it's going to take it from $100 to $140. That's extremely valuable information. Now, yes, sometimes those patterns do fail. And the way to get around it, especially a new trader, to understand some of these patterns is really where you have experience. There's really no way around it. Getting experience, there's shortcuts to you learning the information, which we can help you get there. But then emotions take over. And once you're involved in that trade, there's really no way around getting experience, watching the price action behave on those trend lines. What happens when price breaks those trend lines? It's amazing because a lot of people even call it, when they watch my show, they call my trend lines magical trend lines because they truly are.
Yeah.
Price will, I'll keep a trend line on the chart for weeks or months. and then all of a sudden price will come up into it and get rejected almost right on the spot. May pierce it just a little bit, but the time that you're watching and studying charts, understanding the technical analysis really helps you put confidence in the trade. Also, understanding that trading isn't 100% guarantee. Nothing is. There's no pattern that I would say, hey, 100% put your whole portfolio in this trade right now. Because usually if you're going to do that, it's likely going to fail at that point. So understanding the more factors you can stack up, the experience, and also putting the probabilities at test all helped me get towards the confidence I have now to take the trades.
And going back to what you just said about, there's not just one pattern that you like. There's not just one indicator, but if you had to choose, if you had to choose just one pattern or one indicator that's your favorite, and you can't live without. I mean, obviously you want others to go along, but the two that are the best for you, what would you
The
say?
two? Perfect. I'm glad he didn't limit me to one because I got two.
Yeah.
I love the head and shoulders and inverse head and shoulders. Those I'll put under umbrella of one.
Sure.
Very similar pattern, but they come with a measured move. And I found too, in my experience, those head and shoulders and inverse head and shoulders, especially inverse head and shoulders during bull markets, they play out fantastic, folks. I mean, it's really amazing how often they play out. It's a high 90% probability of those inverse head and shoulders, especially in a bull market. The other indicator that I really can't live without are the Fibonacci sequence retracing. I went to school very long time ago. I was a scientist. I went to school as pre-med. So I love numbers. I love the thought process of the stock market's not just a whole bunch of chaos. There's a lot of organized moves within it, but it's just we need the right proper lenses to really see it and identify where those levels are. And the Fibonacci sequence and the Fibonacci retracements really help me hone in and concentrate on significant levels that matter.
Yeah, absolutely. And those are two fantastic things I use every day. And a lot of it you taught me for especially the fib retrace. It's just amazing how that happens in nature, on the charts. It's all psychology of human nature.
It is, isn't it? Yeah. It's so wild because we see it on the charts and it's electronic. It doesn't look like it should be something that's just natural and occurs all the time, but it does because we're the ones that are inputting the data to move the market. So it's just fascinating.
That is fascinating. And something else that's fascinating is your course, the overnight sleeper hold. I do want to talk to you about that. You've been identifying stocks that are lagging their sector, setting up for potential sympathy bids, as you call them.
Yep.
How do you scan for those opportunities and what criteria separates real trades from maybe some hope that you might have?
Yeah, good question. As far as I'll answer the last first.
Sure.
As far as some factors that really distinguish and set up a more successful trade, you're going to have multiple factors. A lot of newer traders, when they're learning, they may see one of the factors that they've learned, such as something like a time count play out, and say, okay, every time now this time count, once it goes hits a certain amount of candles, I'm going to short it. Or if it hits a certain amount of candles going down, I'm going to go long. Well, you need multiple factors. And whenever you're trading, you can almost think of taking a trade like you have a 50-50 shot of it going up or down at any given moment, looking at any given stock. Once you have a factor, it then increases odds to about 60-65%. And then if you have two factors, now we're talking about 75 to 85% success rate. Of course, there's still failure within those multiple factor trade setups. But that's what really helps distinguish a successful trade and helps me isolate down better levels to take, better levels for swing trading, day trading, etc.
Sure.
As far as the first question again, I'm sorry.
You just have a knack for identifying stocks that are lagging in their sector, potentially for a sympathy bid setup.
Gotcha. In that question, most investors don't realize, or especially newer investors don't realize, that the markets don't necessarily go straight up and they don't necessarily go straight down.
Sure.
There's an ebb and flow to it. There's a little bit of a dance, if you will. There's stocks will go up and they'll come down, much like the ocean rises in tide and then also lowers in tide. There's going to be periods of both, right? So when stocks get oversold, as long as the news isn't bad, as long as there's not something like fraud going on with the company, well, then there's likely going to be a technical bounce that takes place simply because enough of the sellers have gotten out of that stock or commodity. And then the buyers are now interested because now that stock or commodity is what I like to call on sale. And so then they'll start scooping it up creating a technical bounce for, in a lot of cases, swing trading, giving us opportunity to get like 10, 20, 30% returns on finding these great technical setups from oversold or overbought stocks and commodities.
Right. Oh man. Well, that sounds good. 23% is not a bad return.
Yeah, hey, we'll take that any day, right?
Do you remember any specific setup that you've had in the past, super hold setup that you have, been like, this is so perfect? Is there one that just stands out?
Yes, there was one, and I put it in my course too.
Yeah. Okay.
That's it's one of the modules at the very end of the course.
Okay.
It goes over trade setups for potential sleeper hold trades, and it also goes through some trades that I actually did take within services here at Verified Investing. And one in particular was on Victoria's Secret stock. This stock on the weekly time frame almost was about straight down, and it put in a perfect time count right into a major level of support, then gave me my third signal on that course. And those three factors together, the third signal was that, well, you'll find out.
Yeah.
And that's that third signal came in, and I took the trade, and it was an easy 15 to 20% win for everybody in the membership. We didn't have to add to the position. It just worked like magic, just like I've said, the magical trend lines. And that's what happens when you can start really narrowing down different levels with multiple factors.
Right. Man, the chances of probability go up, and so do those, earnings.
Yeah, no doubt.
Not too bad.
No doubt.
Now, tell me a little bit more about the Gann cycle report. So you have a show every Monday, is that right, for the Gann cycle report? Tell our viewers a little bit about that and what they can expect as they join you.
Well, guys, this is a really exciting. It's an episode. It's like a show, and it's an educational course too. Cycles are one of those things we can't get out of, right? And when I first started learning cycles, what I was trying to do, my mental approach was just to have a better understanding of the markets. Kind of like what I said just previously, where there's an ebb and flow to the markets. Markets don't always just go straight down. They don't always go straight back up. So I wanted to just further understand that. And I think really the roots of that come from really me back in college. As I said, I studied pre-med. I love the science courses. I love the microbiology. I love looking through the microscope and figuring out why life works, why and how it works here on this planet. And then in an odd way, I became attracted to the stock market in the same manner, just to kind of understand, well, why is this doing that? Or why did this stock price move right here and stop? Or why are all semis now starting to move? And so all these questions started surfacing, and I found myself attracted to cycles. And cycles, as I said, we as humans can't get out of cycles. We live on an earth that's round. We orbit the sun. All of this is a cycle. Our earth is spinning around. We look at our clocks. The clocks are round. Pre-digital clocks. They're round. That it's going to be 12 in the afternoon, and it's going to be 12 at night. We can't get out of cycles. And so the more I started learning cycles, the more I started realizing they apply to the stock market too, because we as humans go through a lot of different cycles. There's a lot of influences on us that we may not see or be aware of. And that's what my course helps people identify. It helps them identify situations that come up, whether they be anniversary dates, or whether it be certain time count dates extended out through Gann's numerology studies, or whether it be different alignments of planets. And I know it may sound odd, but guys, you can't deny it. The world gets a little bit different when we have full moons, right? There's a little bit more chaos. And I say this in the course too. My mom was a kindergarten teacher long before the internet, and she was actually documenting this with her kids in class during full moon. She's like, every month during a full moon, her class would just become a little bit more chaotic. And she would document. She's like, oh my gosh, I can't believe this is happening. And then month after months go by. Now she starts prepping for those chaotic weeks when the full moon would occur. Have the kids do a little bit more activities. And then that too helped her in her life. And in a lot of the same way, the cycles help us as traders to anticipate certain movements so that we can start trimming some positions or even adding to positions if we're anticipating a bounce. So it's really fascinating stuff, and it's really next level information.
Wow, putting science into human psychology, basically, at the end of the day. That's very fascinating. And let's talk about a little bit about your course that's coming out. You've got a section for new students. You've got a lot, it goes over some of the basics. I mean, tell us a little bit about that and what some of our viewers can expect. I mean, even if they're just trying to get into trading as a beginner.
Yeah. So when I came here to Verified Investing, actually, before I even started, when I first got information that I was going to be coming here and at least learning, I said, I went through, just like every trader, we're going to go through speed bumps. We're going to make decisions that aren't or weren't the best, maybe over leveraging ourselves, kind of like the example I gave you earlier. And I decided that I want to create a course where I can inform these new traders all about the pitfalls that I had that weren't in any educational courses that I took.
Yeah.
The educational courses that we have here at Verified Investing are fantastic, but none of them really were for beginners.
Right.
None of them helped me answer some of the silly questions, such as what is a wash sale? Why was I worrying about it for so long? What is FIFO, first in, first out? How does that affect my account? And I would stress about these things, and it really would take away from some of the analysis that I was doing. But then plus, I go through major mistakes I made as a trader, and I help them avoid them. One of which mistake, I lost over 5 figures. I lost tens of thousands of dollars because I didn't set up my account appropriately. And no one was teaching me how to set up my accounts.
Wow.
You know, what we have here at Verified Investing was all technical analysis, which I do have in that course too, because I go through swing, day trading, and a little bit of options trading, but I mainly go through some of the speed bumps I had to get over, some of the hurdles I had to get over in order to still remain a profitable trader. But these sort of little pieces of information not only can save you time, but can save you thousands and thousands of dollars. That's my goal with my course, is really to help people avoid that landmine that I hit, so that they can have a faster head start and continue on with the singles and doubles with the marathon of trading.
Right. I mean, sometimes it does just take, setting up an account, making sure that's right before you even begin trading, the basics to be able to trade and not have to worry about all that stuff. So I think that's going to be great information. And if people want to find you, Drew, on social media or follow your trades, obviously we have our Verified Investing, but where can people find you on social media?
You can find me on X at Drew Dosick.
Okay.
I also have shows on YouTube. So we have Trading the Close as well as Erect or Rich. And so we've got a new show coming out. We're always going to have new shows coming out here at Verified Investing too. It's a lot of fun getting this information out to you folks. But mainly, you can follow me right here at Verified Investing. We've got several services, whether they're swing trading services, day trading services, educational courses. If you want to tag along for the cycles courses too, that's as Liz said, that's a weekly episode. And I'm really giving away a lot of information in that. Everything that I learned also cost me thousands of dollars to obtain. So it's a great value for anybody interested in taking their trading to the next level.
That's awesome. Thanks so much for joining us, Drew. Really appreciate you having on. And make sure that you like and subscribe down below, because we have so much information for you, not just interviews, but of course Drew's things, and all kind of trader inside information, and all kinds of different trade setups that you can take, and just basic information about the market. So make sure you like and subscribe, get the latest. Thanks so much for joining us here on Verified Market Insiders. We'll see you back next time.
Welcome back. Everett Millman here with Elizabeth Copeland. You're going to want to stick around. We're about to do a trivia segment. If you participate in the chat, you get the right answer first. You can win some awesome prizes with the wheel spin. Yes, everybody loves the wheel.
All right.
Perfect. I'm not a good trader, but when I started hearing Gareth Soloway, I just become a fan of him. The way you trade is just fantastic. Then I opted for your smart money crypto, and I'm doing just fantastic. I'm a long-term holder. I do invest in stock, but crypto, it's my new journey. But with you guys, you have done just superb. Thank you.
To be a counter trend trader, it means that you're essentially going opposite the crowd. And the key is to only do this at extremes, right? So when a stock or crypto goes up exponentially, essentially what it does is it gets people to react emotionally to the point where it's all greed, all FOMOing into a position. And what you understand is that there's going to be a counter move at the extreme level of greed. And the idea is by using the charts, we can go opposite of that. And that's to be a counter trend trader, and vice versa on the downside. When you see something dropping, and that panic and that fear starts to take over most retail, they just start dumping because they can't take the pain anymore. And that means that price has gotten too far ahead, and there's an opportunity for a retrace or bounce. And that's what a counter trend trader looks for and takes advantage of.
Imagine waking up every day with freedom. No boss, no clock, just you, your charts, and profit stacking. That is the life of a verified pro trader, and it's exactly how I built mine, by learning to trade gold the right way. I've helped countless members start winning, and now it's your turn. This is your golden opportunity to trade like a pro, live like a boss, and take advantage of the gold super cycle that is transferring wealth like we've never witnessed before. So make this your golden opportunity.
Here's a sobering truth. The difference between a manageable loss and a portfolio-crushing disaster often comes down to 3 simple words: stop loss order. Today we're covering stop losses, your trading safety net. But more importantly, we'll show you when they fail and how to prepare for it. A stop loss is simply an order that automatically sells your position when the price hits a predetermined level. Think of it as your emergency exit from a trade gone wrong. Let's say you buy a stock at $50 with a stop loss at $47.50. If the stock drops to $47.50, your broker automatically sells, limiting your loss to $2.50 per share instead of potentially more. Without a stop loss, that same trade could become a 25% loss or worse. And this is why stop losses aren't optional, they're essential. Professional traders set stop losses before entering every trade. It's not about being pessimistic, it's about staying disciplined when emotion wants to take over. The key principle: decide your exit strategy before you need it. When you're watching red numbers, rational thinking goes out the window. There are 3 main ways to set stop losses, and the best traders use all 3 depending on the situation. Method 1: technical levels. Place your stop loss just below a key support level. If that support breaks, it often signals more downside ahead. Method 2: percentage-based. Risk a fixed percentage of your position, typically 5 to 8% for swing traders, 2 to 3% for day traders. This keeps your risk consistent across all trades. Method 3: volatility-based. Use the average true range indicator to set stops based on how much the stock normally moves. Give it room to breathe without being too loose. The biggest mistake? Setting stops too tight. You want protection from real moves, not normal market noise. Remember, a stop loss that gets hit by everyday volatility isn't protecting you, it's guaranteeing losses. Here's what every trader needs to know. Stop losses aren't bulletproof. They can fail, and you need to be ready. Gap downs are the biggest threat. When bad news hits after hours, stocks can open well below your stop loss. Your $47.50 stop might trigger at $44 instead. Flash crashes can trigger stops at terrible prices during extreme volatility. Your stop becomes a market order in the worst possible moment. Low liquidity can also cause problems. In thinly traded stocks, there might not be enough buyers at your stop price. So how do you prepare? 3 backup strategies. First, proper position sizing. Never risk more than 1 to 2% of your account on any single trade. Second, stay alert during earnings and news events. Consider closing positions before major announcements if you're not comfortable with the risk. Third, for larger positions, consider protective puts as backup insurance. They cost more, but guarantee an exit price. Stop losses are your safety net, but they're not perfect. Set them using technical levels, percentages, or volatility. Give them room to work, but always have a backup plan. Master this defensive skill and you'll protect your capital while others blow up their accounts. Ready to build bulletproof risk management? Well, visit verifiedinvesting.com for professional trading strategies.
Should I buy the dip? Did you even chart the dip, Kyle? What's RSI stand for? Really should have invested. What's a good entry signal? When the chart says, "Come through, King," not when Reddit says, "YOLO." Is this a good time to get in? If you're asking me mid-candle, the answer is no. Can I learn to trade without risk? Yeah, just like you can ride a roller coaster without crying. Technically possible, not likely.
Verified investing, no cap, all facts. Not financial advice, just facts, charts, and a little attitude.
This is one of the most common mistakes that we see with beginning traders. Most beginning traders don't interpret the data properly. They look for a move that's going higher and they try to catch the tail end of it. Or if a stock's going down, they try to ride it to their lows without any technical factors. They just rely on their emotions instead of factors. Advanced traders, what they do is they look for additional support and resistance lines to give them an idea of which way the stock market is going to go. At the end of the day, it's really all about the methodology that you use to understand the charts.
Hey everybody, welcome to Smart Money Commodities and Miners. If it's a commodity, if it's a miner, I'm covering it in this service. I'm giving out exact entry and exit prices on these commodities and miners. And basically what you're gonna get is almost daily videos of information, technical analysis, data driven. This isn't a service about hype. This is what is the data telling us to clear out all the nonsense from mainstream media, all the nonsense from social media. It gives you literally the data to use to make trading opportunities happen and profits ultimately happen. So welcome again, guys, to Smart Money Commodities and Miners. Come check us out here at Verified Investing.
Hey everybody, welcome back. I'm Elizabeth Copeland, financial journalist and trader here, joined by my co-host Everett Millman. We're so excited to see you guys back. We're going to dive into a lot, and we're going to get into some very exciting stuff. The wheel is in your future.
Yes.
But I do want to answer some questions in the chat, because remember, we're live all day, so we're going to go through some of these questions, talk with our pro traders. We have talked to them, but a couple that I'm seeing here. First of all, a couple people are on YouTube. If you're on YouTube, first of all, love it. Thank you for joining us on Verified Investing YouTube. But make sure you go below, subscribe, and like so you get all the notifications. And then jump over to our Verified Investing page. That is where you can find the chat that will enter you for the chance to have the wheel drawn. That's where the names we're pulling from, right? So when you go to verifiedinvesting.com, what you'll do is right at the top of the screen there, you'll see the stream, you'll see us live, and it'll say watch and
ask.
Ask, that's right, watch and ask. So you push it, you type in your email, your name, and your question, boom, it comes right here to my iPad. So I'm seeing all those right now. So if you are asking questions about the YouTube comment section, that's closed, but what I have right here is your question. So you're in the right spot. That's the good news. Also, talking about those sales, I had a few questions about sales and when they last. They go through Sunday. So they're on sale now through Sunday. The sales you see on the website are what we have, up to 50% off of some of our courses. So make sure you check those out while we are going through this. But yeah, excited to have you guys here. make sure that you're interacting with our chat because you'll have some chances to win. And Everett has a very exciting activity that we're going to jump into now.
Yes, everybody's favorite thing, the prize wheel. We're going to add kind of a game to this.
All right.
We're going to do some trading and investing trivia. And the winners, and again, Liz just explained, if you go to the Verified Investing homepage, you can participate in the live chat, click watch and ask. That is where you will submit your answers to the trivia questions. Whoever gets the correct answer first will get a prize from the wheel. So that's how the game is going to work. You want to just dive right into it, Liz?
Let's dive. These questions are pretty difficult, guys. So if you get them, good for you. We're excited.
Kudos.
I'll read some of them off too. All right.
Okay.
You want to read the first one?
Sure.
All
sure.
right.
Let's start. So the VIX, we all know about the VIX. The VIX is known as the Wall Street Fear Gauge. But what does VIX, V-I-X, actually stand for?
All right.
We'll give them about 30 seconds to start entering their answers. Again, whoever is the first one to get it right, Liz and I will not know who that winner is, but our IT team in the back is checking everything, and they will be rewarded with the prize from the wheel.
All right. We've got quite a few of the correct answers, so I'm very impressed, first of all. Yeah, everyone is spot on with your answers. I love it. So,
are we ready to spin?
Let's do it.
Okay. And all right, GAN cycle report with Drew Dosick.
Ooh.
Not bad. That is a $24.95 value, 1 month of free access.
All right. So, do we have a winner? That being said, VIX, what is it known for? What do you do you know the answer?
I did know this.
Okay,
actually,
yeah, this is what I will say. It's one of the easier answers. Here we go. There's
That's why
the
we
answer.
started. And it's a little bit, though, of a trick question because, not each letter in VIX is actually represented, just the X is for index. So, yes, most of you who answered got that one correct.
Yep.
Off to a good start. All right, let's move on to our next question.
Oh, we have a winner. There we go. Congratulations, Steve. Steve.
Congrats.
Hey. Yeah, thanks, Steve. So make sure everyone who does win, email this email right here. Let them know what you won.
Yes.
Again, reminder that's the GAN cycle report, correct?
Right.
That's
so
what
yeah,
you got. Nice
please
job, Steve.
email support in order to claim your prize.
All right. You got to be quick on the trades and quick on the keys today.
Yes,
all
you do.
right.
It's it's like a little bit of a practice for.
I will say most people who answered did get it correct. So good job, guys. Very
Excellent.
smart.
Excellent.
Yeah. All right.
All
What do
right.
we have next?
Our next question. So, a very infamous day, October 19th, 1987. Dow Jones Industrial Average crashed by what percentage in a single day? This is the largest one-day percentage decline in the history of the stock market. So, we're looking for a percentage. If you're within 1%, you're going to get credit. But if you can get the exact percentage, that would be impressive.
Ooh, okay, we've got quite a few different answers. I'll start reading some of them here. We've got 16, 15, 21, 4, 13, 70, 22.6, 7, 27, 19, 8, 65, 10, 15. 65 would be
pretty ambitious.
That would be, yep, 21, 8. All right, we've got quite a few answers here. 22. Peter says 22. All right, we've got quite a few. Nice. All right. Do we have a winner? I think I saw quite a few of the correct answers.
I did see one that would qualify.
All right, should we go ahead and spin the wheel and then let her know which the winner is?
Sure.
All right, let's do it.
Right.
Go ahead. You go do it.
Another wheel spin.
Yep.
Eventually, I'll let you get a turn on the wheel.
No, yeah, you got it.
Ooh, are we going to get a repeat?
Oh!
No! Wow.
Another winning
Another winning trader.
Wow.
Wow. That's the big one up there.
All right. Oh, there's our winner, Isla C. Congratulations.
Congratulations.
Let's show the answer and then we'll put it. Yeah,
There we
okay,
go.
there. 22.6, but we had a lot of 22s and a lot of 23s, so
yes.
Good job. All
Both
right,
were
Isla.
acceptable. I would have been very impressed if someone had gotten the exact to the 10th decimal
I
place
think
there.
I did. I think I saw a couple people. I don't know if that Google helped or if that
Perhaps
was just
someone might have been using ChatGPT.
or maybe
but
someone just relived the 1980s right
That's
then
true.
and there, and they're like, "Well, I know that exactly." Yeah.
day that will live in infamy.
Yep, exactly. Well, good job, Isla. All right, email that email, and we've got a few more questions, I think. So a few more
We
winners
do.
to go. All right.
Yes. All right. So, what technical indicator developed by J. Wells Wilder Jr. measures the speed and magnitude of price movements and is typically considered to be, here's the key point, overbought above 70 and oversold below 30? That's kind of a big hint there.
That's
so,
huge.
what is the name of that technical indicator?
Oh man, we have quite a few answers already coming in. Before you even finished the
Yeah,
question,
wow.
we had yeah.
That's like if Jeopardy, they buzzed in before I even got through with it. Wow.
Now I don't want to read these because they're all correct. Who just who
Yeah, you
got
don't
there
wanna
first?
give it
Yeah,
away.
who just got there first? You know.
So
but
we
these
definitely got.
Wow, members, non-members, you guys are geniuses. This is good. Everyone's getting it correct, even spelling it out.
Wow.
Even spelling it out. I would be so scared just to
Okay.
get it in quickly. So
Yeah, and
there's
I
another
thought-
hint for you.
There's
Good.
another one that I did know the answer to, but I thought it'd be a little more obscure.
I think the last part really helps you. The overbought by 70,
Yeah.
oversold below 30, and
It-
plus it's one of our pro traders, one
It
of his
is.
favorite things. So
It is. We've got a lot of viewers who watch Ben's morning show,
Right.
clearly, because
Yep.
he does focus on this. All right, so
Okay.
are we putting up the answer?
No, we're gonna other. Oh, okay.
RSI,
RSI, relative strength and.
Okay.
We had people type that out, if you can believe it. That was impressive.
probably
See,
slowed
about
them down,
60.
though.
Again, these are like just to let you guys know, hundreds of people are writing it. I mean, it is just
Excellent. All right, it's good to see the participation.
Yeah.
And are you? Oh, 1 week of free access to the Apex Live Day Trading Room. Another really, really good one. That's a cool one.
That's a $150 value. So you get to go for the morning and afternoon, I believe,
Yes.
sessions. And that's where, I mean, we're doing day trades. It is very active in the morning. You get to ask more questions in the afternoon. So it's really engaging either way. Taking trades in the morning, asking questions of our traders when it's a little bit quieter in the afternoon, and sometimes taking trades then too. So that's pretty exciting.
Yeah, that's a good point, Liz, because the members in the Live Day Trading Room also have access to the live chat. They can ask the traders questions.
Right.
Usually in the afternoon they have time for that. So
All right.
awesome.
So who won
Yes,
the
who is the
RSI?
winner?
Who won? Fingers, drum roll. Who is it? Oh, it's me. No, Chris S. Nice job, Chris. Good
All right,
job. All right.
congratulations.
Again, contact support at verifiedinvesting.com to claim your prize. Good job, Chris S. All right. So we're going to take a break real quick from trivia. We have more coming, so
We
don't
do
leave
have
us.
more. We do
Don't
have
leave
more.
us. We're going to get some Q&A from some of our members here. All right. So if you've got a question for either just relative questions for myself or for Everett here, please send them in. Again, we're looking at the chat now. Now, keep in mind, we're not going to show any charts, so we're not going to analyze anything for you. Just if you have questions about the sales, questions about anything, Lisa says, pick me. Lisa, we're going to try. You got to get in there fast. You got to type those answers quick. Yeah, so we've got a lot of people in here just talking about, and I'm waiting for the questions to come in if we have any, but let me read some of these. Lisa, earlier you said, speaking of you, you love Verified Investing, you've been watching the show for years, been a member for years, best decision she's ever made. She tells her friends and family about Gareth and the team. Heart, heart, heart. So thank you, Lisa.
Wow. Love the kind
Thanks for
words.
spreading the love. You know, I know the guys here. I just joined about 3 months ago, and I know everyone here behind the scenes, the traders. I mean, everyone is working extremely hard to make all this happen. So, and that's an everyday process, right? So I'm very, very thankful to work here myself, just coming in. So, let's see. Oh, here's from Kess Urban. When I subscribe to your services, would I get trading alerts with prices sometimes ahead or only after the trade was taken? So those are sent in our services.
Right.
So like smart money services, like crypto, stock, ETF. That's
Right.
actually sent right when the trade is taken. So
Correct.
ahead of time, you get those levels for our day trading room and our live day trade, which you probably saw earlier today. But for the more swing trading services, you
Right.
get them as they're taken, right? So that's kind of how, and those alerts come out right away, and that's how I see my alerts come through as well.
Right, right. And there's an alert when the trade is opened and another one when the trade is closed. So you really do get precise entry and exit points.
Yep. All right. Okay. All right. Yeah. So yeah, we're good there. So I would like to take the classes for beginners. All right, Adi, that's going to be your Winning Trader Pro series. Again, on sale now through Sunday. So that's the beginner. That's what I mean. The baseline. You're not sure about the day trading or swing trading. It's all inclusive. That's what you would sign up for sure.
Oh, absolutely. Yes, it's comprehensive, and any beginner can pick it up.
Oh, and then there's another question about the $1 million investor. What is the start date? Grateful for verified investing. Thank you to everyone. January 2nd. You can sign up now, but keep in mind there's limited space. Limited space.
true.
So that's why you want to get in now, just to reserve that space. Because listen, Gareth, this is you're gonna have access to his portfolio, right? I mean, like 24/7 access. This isn't just going on in the live day trading room and seeing entry and exit levels. I mean, you get to see everything he does in a $1 million portfolio. It's exclusive access. I mean, this is wild. To see Gareth's access to his actual portfolio, taking the trades as he does. You can obviously, you don't have $1 million because I talked to him earlier. You saw that interview about scaling it. Like if you had 100,000,
Right.
it's just a percentage, right? But that's going to be awesome. I mean, that's a once in a lifetime opportunity. So that's why it's more on the side of you. There's only a select few people when you sign up.
Right,
Limited
right. There
availability.
is limited availability.
Yeah. All right.
We ready for
Thanks,
the next?
guys, for the questions. Let's go,
Awesome.
Everett.
All right.
Give them another one.
Back to trivia.
All right. The
This is-
people have been wanting.
Yeah, they want the prizes.
They want the prizes.
Who knew?
They
Who
want
knew you
Everett
give away
asking them
free
questions.
things
I
and
know.
people come around. All right, so our next one, the Russell 2000. It's an index. It tracks what category of stocks that are particularly sensitive to interest rate changes.
Ooh.
Yeah, I don't know. This one might be another one where the answer is given away a little bit, but let's see. See if everybody's getting it.
Okay, good job. This is a pretty good one. All right. We got a lot of the right answers here. We got 10, 15, 20. Wow, they're coming in. Look at this.
Oh yeah, and again, they're
Yep.
all correct.
Yeah,
So
they're pretty good.
you guys really do have to be quick with that. Quick with the trigger
Yeah, I
there.
can't even read off the guesses because they're all just right. All right, I'll give it another 10 seconds. Put in your last request here. All right. You wanna go
All
ahead?
right, ready to
All
spin
right.
again?
Good job,
We can
guys.
go from the bottom here. Getting a nice mix here.
Ooh.
And mastering the overnight trade, Drew Dosik's sleeper hold. That is a $499 value. It's an entire course. That's a great prize.
For free.
For
8 months.
free.
8 months of
8
access
months of
for
access.
free. All right. What's the answer?
So the answer is small cap stocks. That's companies that their market cap is below a certain threshold. Small cap stocks. Most of the people I did see in the chat were getting that correct.
Okay, all right, yeah, and that was a pretty good, and there was about, again, 50 people, so you gotta be quick on the keyboard. Who's the winner? Let's bring them up. Let's see who it is. Oh, Steve. Go.
I think that was our last one.
Okay, hold on, Steve. Sorry, Steve. You've already won something. We gotta pick somebody else. Oh. Louis!
Right,
Yeah,
congratulations
good
to
job.
Louis.
Again, support at verifiedinvesting.com.
Yes.
Email in.
Make sure there is one extra step, but make sure you claim your prize.
Yes. All right. Thank you, guys.
All right. Now this one, there's two possible answers to this one that could be correct. So
Ooh.
hopefully we get, people pick up on it. Let's see. So the FANG stocks, FAANG, they became a popular acronym for what high growth companies that start with A. So what are one of the two A's in FANG? This one kind of tripped
Okay.
me up.
All right.
The second A.
Oh, okay. Yep. Good job, guys. Oh, people are just putting in both because why not?
Yeah.
People
I
are just
mean,
putting
hey,
in both.
that's totally acceptable.
Yeah. Ooh, someone put in here's interesting. Someone put in the stock name okay, I don't want to give it away, but someone put in an A stock name, but it's not the name of the company. That's incorrect, but that's a really good guess because that was,
Okay.
I'll tell you afterwards.
Okay.
You'll understand what I'm saying afterwards. But yeah,
Interesting.
look at this. People are just killing it.
Wow. We got some
Wow.
smart cookies.
We got some smart people out there.
Thought these might be a little bit tougher.
I love it.
All right.
All right. All right.
Correct answer. Waiting for it on the screen.
There it is.
Yes. So we were thinking either Apple or Amazon.
Yep. And then the others are Facebook, Meta, and then Apple, Amazon, Netflix, and Google Alphabet.
Which is
what, and so, yes, that's incorrect in the A's because it's Google, the company, but Alphabet is the stock.
Actually, the parent
The
company
ticker,
now.
yeah.
All
Good
right, so let's
job.
spin the wheel.
Yeah. All right. That was smart.
That was impressive.
Yeah.
Smart money stocks and ETFs.
Ooh,
all right.
1 month.
I think I've gotten a different prize every time I've spun it.
That means that's good luck.
Takes some skill.
Yeah, 1 month access, $150 for free, and that's the service I was telling you about that has the swing trades, the entry and exit levels, right? So
stocks and ETFs.
That's awesome. All right, do we have a lucky winner for this one? All right. Miri, congratulations. Oh, I love to see your name pop up there. Support at verifiedinvesting.com. I've seen you in the chat all day. You've been so lovely. So thanks for joining us. Yeah.
Love the participation.
That's awesome. All right, guys.
All right, we ready for another one here, Liz?
Why not? Let's keep giving out prizes.
All right,
This
I
is
think
awesome.
this one,
I feel like Oprah.
you get a prize.
You get a prize. Let's go.
All right. So, next trivia question. What is the term for the area on a chart? So this is actual TA here.
Oh, okay.
Technical question.
Ooh.
The name of the area on a chart where price has historically struggled to move below, often causing bounces and acting as a floor.
Mm-hmm. The term for the area on a chart where price has historically struggled to move below.
Below, right. Struggled to get below.
Often causing bounces and acting as a floor.
This is definitely something you will learn in the Winning Traders series.
Oh, wow. Okay, we've got some conflicting answers. But I think the key here, just reminds you, the floor.
Right. Focus
Bouncing
on
and
that.
acting as a floor. That's the... Okay. Oh, I see. Okay, some people are putting in some good TA analysis here, but
awesome.
We're close. Okay, I'll start reading them out. You won't know which one is right unless you know. The bottom, a trend line, support, resistance. Those are all good answers. Lower support. Okay. Well, we got a couple of right answers though in between there.
We do.
All right.
So, as you know, Liz, the answer here is support.
Support. We
Or
like
support
to see
zone,
that bounce.
support level. We would have accepted any of those answers.
All right. I'm going to do it this time.
Sure, go for it, Liz.
You know what? I'm going to go.
Don't let
spin
me
this
have
wheel.
all the fun.
Well, you're having so much fun over here. I'm going to give some free stuff away. You ready? I'm going to go the opposite way. Come on, big money.
Big money, big money.
Oh, spin again.
You got to spin again.
All right, now the opposite way. Let's go. All right, big money, big money. $1, $1. All right.
And
Ooh,
another smart money.
Commodities and miners. 1 month. That's a $100 value.
Excellent.
For free.
Wow.
Wow. All right.
We really are
Commodities.
covering across the board here. Almost every different prize has been hit.
That is wild.
It's pretty cool to see.
That's wild. All right. Do we have a lucky winner for the Smart Money prize? Andrew S. Good job, Andrew. Congratulations. Support at verifiedinvesting.com. Join or email in, claim your prize.
Yes.
You don't want to miss it. All right.
Okay, on to the next question.
There's
here.
no way. There's another question.
There is
another prize.
We're just
My
giving everything away today.
Wow. All right.
All
Here
right.
we go.
This is another market history question.
Ooh.
So, in 1929, stock market crash that triggered the Great Depression began in which month? What month?
And were you alive when this happened?
Hey, that would be bonus
Were
points
you
if any of
alive?
our viewers were there to see the
if
action.
you were alive, yeah.
Yeah.
1929. All right. What month? All right.
Let's see if
Let's
it's going
see.
through.
Oh, wow.
To be fair, you have a 1 in 12 chance, even if you're just
That's
guessing.
fair. That is fair. Okay, we've got some March, October, November, September.
I heard a correct one in there.
January. Oh, we've got some. Not only do we have some months, we have some years too. That's impressive. All right. I don't see anybody who said that they were alive though in 1929.
That's fair.
All right. Oh, we've got some actual dates. That's pretty good. Okay. September. Okay. April. All right. We've got a lot of the end of the year months. One of them is correct.
Yes.
Which one do you think it is?
Answer is October. And if you noticed, the stock market crash in 1987 also occurred in October. October is usually not a good month for the markets. It just isn't historically.
Not great.
So yes, October 1929, specifically October 24th.
Yep. And we had it actually on October 24th in there. So.
Wow.
Yeah.
Somebody nailed it.
Somebody nailed it.
You should get extra credit for that. All
Let's
right.
go spin that wheel.
All right. We're going to continue to go clockwise. Oh, just missed the big winner. But another 1 week access in the Apex live day trading room. That's probably my favorite one on the board there.
That is exciting because I'm telling you guys, I mean, I sit in on the live day trading in the morning and I get to go in the afternoons and just kind of, it's a little bit slower so we get to answer questions and stuff. Let me tell you, that's some exciting stuff. I mean, you're getting exact entry levels. You get to see, it's just, if you're not even want to trade in it, it's just the action of it is so exciting to see.
It's exciting, it's entertaining, and it's educational.
Yeah.
The 3 E's, the
The
most
3 E's.
important things there.
Everett, Elizabeth, and educational. 3 E's.
Wow, the
Boom.
5 E's.
5 E's, there you go.
If you really want to be specific. Oh
All
my
right.
goodness.
We got a winner though.
Oh,
is
yes.
it an E name? Jeff.
Oh, you go with
That's
an
an E in
E
it.
name. It does have an E in it.
Yep, that's good.
enough.
All right,
Good enough
Jeff
for
G,
us.
thanks so much for playing. Great job. Again, email support@verifiedinvesting.com to
Yes.
claim your prize. And you can chat there. We have a chat there too as well. You can chat with us in the afternoons. Make us aware that you did win the prize. Now, let me tell you, in the morning it gets a little chaotic because everyone's taking trades and the chat is looked at, but not as frequently because it's a lot of trading. In the afternoon, let us know when it come back on at 1:30.
Absolutely.
Be there. That'd be awesome. Cool.
All right, so everyone, we're going to take a quick break here. Drop us some questions in the live chat. We will be back very shortly.
All right.
Hi, I'm Dakota. I've been using smart money stocks and ETFs with Verified Investing for nearly a year. It's helping me become much more confident and consistent in my trading. In fact, it's actually allowed me to take some time off work and, take care of some passion projects I've been working on. Also, helped me develop more as a trader because I can devote more time to it thanks to everybody here at Verified Investing. Lately, I've also been exploring the idea of doing day trading, something that a little over a year ago, there's no way I could even have thought about, being able to replace my everyday income and do. So if you're thinking about getting started, I highly recommend it. It's been super meaningful for me. It's been incredible, and I can't wait to see where things go.
All right, welcome back, and thank you so much for that testimonial. And if you want to send one of your own like Dakota, make sure you head down to, there's going to be a link below in just a minute, and that's when, there we go.
Right there.
Submit your story, testimonial, right there. You can scan that QR code. It's on that side. There we go. And all you got to do is just take your phone, set it up somewhere nice, and have some good audio. Right there, maybe a little lighting. Don't do it in the dark. Don't do it in the dark.
Yeah.
Put some lights on.
But nothing fancy.
Yeah, nothing fancy. We just want to hear how you've liked Verified Investing, or if you just joined today, maybe how you've enjoyed Green Monday so far.
Absolutely.
Your thoughts on that. So we'd love to hear it. Again, send it to that QR code that you just saw on your screen. We'd love to see it.
Sure. All right. Let's answer some more questions from the chat here.
All right.
Before we move on with
All right,
trivia.
yeah.
We have more trivia for you guys. We have more prizes. Let's take some questions.
You know, a lot of people don't have questions. They just really want some prizes. But let's see if we
It's not that surprising. That
Which
is not
I mean, are we
surprising.
surprised? No, we're not surprised. We're not surprised. We love you guys.
Who doesn't like free stuff?
I mean, that's
especially
fair.
when it's.
That's fair enough. So, and just to go over, okay, here we go. Drew was talking about, and thank you so much for saying this is Eugenius. Remember, we have viewers from all over the world, so I apologize if I mispronounced your name. Thank you for saying this question. Drew was talking about his beginner course in the interview, and that was just a little bit ago. Is that part of the Apprentice Trading Library? It is not, and I can answer that because I do the Apprentice Library.
Yes, you do.
And so that comes out every Saturday. Drew's course is different. It's going to be the core trader, and that's going to come out. We have a couple of new courses come out in 2026.
Right.
So that's going to be a very interesting one. Don't miss that. So a couple of courses are going to be debuting specifically for 2026.
That is right.
And a lot of them are actually on, getting edited now. We've seen them. They look really good.
They
so
do. They do. I can give
definitely
you a little sneak preview into Trader's Core. Drew goes over so many things that I would never even have considered about picking the right brokerage, you know,
Yeah, you've
first
seen it,
in,
right?
first out.
Yeah.
Yes. So it is a comprehensive beginner's course. It really is a great platform to build upon if you've never taken the Winning Trader series, and then you can kind of transition into that after once you've gotten the basics down. But
Sure.
Drew did a great job with that course. We're really excited for it to come out soon.
Yeah, that's going to be interesting because I tell you the Winning Trader series, it gives you all the technical analysis and all that kind of stuff. But then you do have to make a decision on your broker and what's good for you because a lot of brokerages are different. You
They
know,
are,
some
yes.
you can't short and some you can. I mean, it depends on how much money you're looking to put in. I mean, it's everything, right? So that's
Lots
really cool.
of things to consider. Yep.
Yeah, he adds on to that. Great. Everyone's like, it's been a great event. Thank you, Elizabeth and Everett, for emceeing. Thanks, Paul.
Oh, appreciate
that's
you,
sweet.
Paul.
Thanks, Paul. Let's see. There's some specific questions here about different stocks. I'm not going to be able to answer this. I mean, we don't have charts or anything.
Yeah, we're not really
so,
taking any chart questions.
Yeah, but thank you for asking. And that's something you can join the live day trade room, and they would help you out on some of those.
Absolutely, absolutely.
All right. Well, I think that's everything we have.
All right.
Yeah. So Drew's course? We went over that coming out. That's
Right.
a good question.
And
Cool.
just a reminder, speaking of Drew, today at 4:20 and every Monday through Thursday at 4:20, Drew Dosick has his show, Trading the Close. Check it out. It's really informative. It is a fast-paced, information-dense show.
Yeah.
It really tells you everything you need to know about that day in the markets. So
Yeah.
check it out.
Yeah, and that's going to be on this stream.
Correct.
So don't change it over
Nope,
today.
it
It's
will-
different.
yes,
It's
exactly.
different. Yeah. Today is different. It's all, you don't have to move anything. Just watch this stream. It's all together.
Yes.
Now, speaking of it, I do want to go over some of our, before we get to, I promise we'll get to the spin,
We
guys.
will get back to trivia.
We'll get to this trivia, but I do want to go over what shows we have every day because those are free. And to anyone, you don't have to sign up. You just get on our verified investing page. If you want to make a login, that's also free.
Yes.
So we start off in the morning with Ben's.
Yes, today's best trade setups. That
Today's
is Ben's
best trade ups.
morning show every single day. He gives you, again, quick paced. I think the show is usually about 10 minutes or
yeah.
so. And he gives you several trade setups, more than enough, actually.
For free.
For free,
Yeah.
yes. Free
All
of
right.
charge.
And then that's followed by My Trading Game Plan with
Gareth
Gareth
Holloway.
Holloway.
Yep.
So right after that, again, right on our verified investing page, it just comes up there. It gives you a countdown and everything.
Yes.
And then the afternoon, now I know a lot of people have said they've missed Lawton. Guess what? He has a new show, guys.
He does.
Yeah.
He does. Earnings Central Live. Lawton covers the upcoming earnings and does a live look in on the charts as companies are reporting earnings. The big one he covered recently was Nvidia. That was
good.
a massive market mover.
Yep.
So Lawton is kind of our resident earnings expert.
Yep.
He knows how to trade those earnings better than anyone I've actually seen.
Yep.
That's his show. It's not every single day. It's sort
Right.
of as the earnings reports come out. So we always give all of our viewers about a 48-hour advance notice when Lawton's going to be going live. But that comes on at 3:55 p.m. on days where there are earnings.
And it's not a typical earnings share. You don't just, because I talked to him earlier, if you saw the interview, you don't just get in, because he made me do this and I see what happens now. You don't just get in before the earnings come out because you can get whipped all over the place. It doesn't matter what you think is going to happen. It doesn't happen, let me tell you. He gives support and resistance levels and it helps you navigate the trade after the earnings come out and hit those support. They're preset, right? So you're going to have to talk to him more about it, but it's not what you think it is. It's actually way better.
It is.
Yeah.
It is, and it fits Lawton's trading style very, very well. As
Yeah.
you said, he gives you the levels. He's really
Conservative
and focused on risk management, which
Yep.
is especially important during earnings because, like you said, the markets can whipsaw either direction.
Very quickly.
Yes.
Yeah. And then last show of the day, like we just said, Drew Dosick show.
Yes, Trading the Close.
Yep.
That comes on at 4:20 every Monday through Thursday. Like Liz said, just stick on the stream today. It will be our closing show, but most days, Monday through Thursday, I should say, comes on at 4:20.
All right. I think the people want what they want.
Okay, they're begging for more wheel
some
spins.
more wheel spins.
Ah,
All right,
I love
guys.
'em.
All right. Get your keyboards ready. Are you ready? All right.
This one shocked me. I would not get this answer
Okay.
right. I think it was the first one that would have tripped me up. So
Oh, interesting.
it's a little bit of a tougher one. So the S&P 500, it's a major stock index. It represents approximately what percentage of the entire U.S. stock market capitalization? So total value of all stocks in the United States, what percentage does the S&P make up of it?
Okay.
It's a tough one.
I would have thought more.
Really?
Yeah,
See,
because it's a top 500 company. So,
Liz can see the answer.
I can see the answer,
here.
so I'm giving you a little hint, but maybe I'm
I
throwing
would
you
not
off.
have. I would have gone the other direction.
All right, you ready? 85, 60, 80. Rue says 22. Diane says 70. Alex says about 80. Miguel says 60.
Smart cookies.
Melanie says
they know their stuff.
51. Cody says 80. Alex says 80, 51. Peter says 80. Okay, so right there in 50 and 80 range.
Yes. And I
All right.
almost wonder if it's like Price is Right, where if you're 1% over, $1 over,
Yeah, you can't go over.
lose.
You bust.
You
It's
can't go over
closest
here.
to- Yeah, I think we had some right answers in here, though.
Yes, we did. So.
All right. What's
Drum
the right
roll.
answer? 80%. 75 to 85. No, we accept only
Roughly
80. We're only going 80. We're tough on
Wow.
this show.
Yeah.
We're only going. We're
High
tough.
standards.
Yeah.
All right.
We're only going 80.
Oh, almost got Lawton's course, but another excellent one, the Golden Opportunity, Drew Wolfer, 8-month access to his course. That is a $997 value.
Nearly
For free.
$1,000. And that is just the insight to go. I mean, you just had Drew on, and just the insight to go, Drew Wolfer.
Yes.
So that is awesome. 8 months for free.
Very
All right.
cool. And do we know our winner?
Do we have a winner? Lee.
Congratulations, Lee.
Good job. Support at
You're going to enjoy that
verifiedinvesting.com.
course.
Yeah. Good job. All right. Make sure you email in and claim your prize. You don't want to miss it. You'll have 8 months of free access. That's pretty good.
It is.
Okay. Oh, we've got a testimonial. I've been reading them off, but we got video, guys. Thank you for sending those in.
Yes,
Hopefully you keep doing
appreciate
it.
you.
So we're gonna send it over to Jim, who has a
I bought my first stock when I was 18 years old. Now, 6 decades later, I'm still at it. The problem is, I never really made any money. I would win, I would lose. I wasn't going anywhere. I was like a blind dog in a meat house. I didn't know what I was doing. But then I started following Gareth, and then I became a member of Verified Investing. And now I'm experiencing the thrill of victory a lot more than the agony of defeat. Last week I closed 2 trades, a short of natural gas for 12% profit, and a short of crude oil for 8%. All of a sudden, I am excited about being a member of Verified Investing and Trading again. I have learned patience and discipline from these folks, and that's what makes me a better trader instead of totally ineffective. These folks are crazy good, and I'm emphasizing good, although to be a trader with the dedication, passion, and intensity that they give, it's good to be a little crazy once in a while. Thanks for everything, Verified Investing. I'm a member of the team, and I'm glad to be here. God bless.
All right. Thanks so much, Jim. And again, you can send those in. We're going to give you a code where you just take a video, just like Jim. Nice lighting. Just hold your phone up and tell us what you think about today or what you think about our services.
Yeah, we really appreciate it.
There it is. Thank you so much. Look at that. See, it's not just us that are up here. It's the traders. It's everyone. Share your story right there. All you got to do is scan it with your phone, the QR code. All right. Pauline says, hello, I love Verified Investing. I've been watching Gareth's videos every day for the last year and really enjoy the art of technical analysis. Well, thank you, Pauline. Are you going to post the full video of today's Green Monday Live? I wasn't able to watch all of it earlier. Thanks in advance. We will.
Yes.
We're going to post it. Yeah. So it's going to be available on our YouTube page. All right, Pauline? So you can catch all the interviews and everything that you missed. Can't win those prizes, though. Those are live.
Unfortunately.
Yep. Speaking of prizes, Everett.
We have our last trivia question here.
Oh, one
All
more.
right.
All right.
I think we're finally going to trip some people up with this one.
All right,
but
let's see.
I could be wrong.
All right.
So,
I'm ready.
excuse me. In crypto trading, What does HODL stand for? Now, the term actually originates from a typo, and it became a rallying cry for long-term holders of crypto. But what does the acronym HODL stand for?
Ooh.
Let's see if anybody
This
gets
is going to be
one.
interesting. Oh my gosh. Smith says, hold the line, which is if you're in our live day trading room, you'll get that one. Hold the line. It's close though. Oh, these people, you guys are too smart for us. Look at this. Look at this.
Knocking it out of the park.
Yeah, just killing it. Yep.
Wow.
Look at that.
Wow.
All right, come on, keep them coming.
Yep,
Keep
a lot
them
of
coming.
right answers on there.
A lot of right answers. All right, we're up to 30 or 40. Someone's refused to sell long term. Okay.
That gets the idea, but like each letter, it's an acronym. It's supposed to stand for something, so.
Lisa says Drew long term. Well, it is one of his services.
He does have the HODL
yeah,
service,
yep.
yes.
All right. All right. Everyone pretty much got it. I don't think there was a wrong answer.
Okay. Okay. So yes, HODL, HODL, hold on for dear life. But it is what they call a backronym, meaning the acronym came after the fact.
Oh,
They
okay.
just added it on.
Well, there
People
you go.
didn't say HODL intending for it to stand for this, but
Okay.
we came up with it after the fact. So.
Well, that's a fun. Yeah.
All right.
That's a fun tidbit.
So do we do our winner or spin? We're gonna spin.
Let's do
Okay.
spin first. Yeah.
All right.
Let's spin it.
All right. I'm gonna try your technique of
Yeah.
counterclockwise here.
Yeah. If it lands on spin again, it's cursed. Oh boy, it's getting close.
And oh, it didn't spin again, but another overnight trader, the sleeper hole. We were just talking about
just talking about
Drew
that.
Dosick and the hodler. So
All right.
awesome.
8-month access, originally $499, but you get it for free. Who's going to get it?
Who's our big winner? Our last winner for this segment.
Diego.
Awesome.
Diogo. Nice. Sorry, I can't read that far. Diogo. F.
Yeah,
Support
your eyes are better than mine.
verifiedinvesting.com. Thank you so much, Diogo, for playing. Thank you, everyone, for playing. Man, that was fun.
That was fun.
Man.
I'm very impressed by how smart our viewers are. They pretty much knew every single
You guys
one
were
of those.
killing it. You guys were really killing it. Now, keep sending the questions. We'll be back. But first, we have an interview with Lawton coming up. And again, that is going to talk a little bit about his Zero to Crypto show.
That's right.
So don't miss that, because any questions you have for Lawton, you might have them answered with this interview coming up.
That is true.
Yeah, we'll be back.
All right. Stick around.
Hey everyone, thanks so much for joining me again. Elizabeth Copeland, financial journalist and trader here at Verified Investing. Thanks for joining our show of Verified Market Insiders, where today we have a very good market insider, our own Lon Hoy, pro trader here at Verified Investing and an in-house earnings specialist. Thanks for joining us, Lon.
Thanks for having me.
All right, well, starting your journey here at Verified Investing, you didn't start as a trader. You actually started in the marketing department. Is that right? Can you tell us a little bit about that journey?
Yeah, so I started here, well, first of all, I got to say, undergraduate degree, I studied communications. From there, I got a graduate degree in marketing and worked in a bunch of different companies doing marketing. So when my last contract was up, I decided to come here and do marketing. So I didn't have too much experience with trading. I traded a little bit in the 2020 time when everybody traded around with Robinhood, trying to trade GameStop and AMC, trying to make a quick buck. From there, I just did marketing for about a year and then started to trade on my own after learning from these guys, after watching them. You spend enough time with traders talking about trading and you pick something up, right? And they recognized that, saw that, and gave me an awesome opportunity where they trained me and turned me into the trader I am today. And I'm a pro trader now.
That's pretty cool. And what do you remember most about that experience from going from when you started as the junior trading to pro trading? Was there a defining moment where, when you became a junior trader from marketing, even just doing the meme stocks and trying to make the quick buck, just going to a junior trader status, was there any kind of memorable event in that aspect?
That caused me the defining moment that's made me switch or whatever?
Yeah, that made you like, okay, I'm switching the way I trade because I'm learning X, Y, and Z from.
Well, the way that we did it, they just kind of threw me into the fire, right? It just made me learn. And the best teacher, you can have 100, 1,000,000, 1,000 winners, and you're not going to learn anything, right? So you can look back in retrospect, and I know people do that, and that's great. But for me, what teaches me the best lesson is taking a loss, right, and making it hurt. So you can ask me what my last 10 winners are day trading, and I won't remember. Let's say I haven't lost in a month, right? Which I have, but let's say I haven't lost in a month. I can't tell you about any of the winning trades, even last week that I took. But I can tell you about my last loss. I can tell you why I lost and how I could have, improved from that. So I think we were trading earnings on Restoration Hardware, and I remember I lost like $19,000 that day. And from then on, I totally changed the way I trade, and that was kind of my, all right, it's not all, rainbows and butterflies.
Yeah, and going back to, and we're going to talk about earnings in just a minute here. But when you started that transition, I guess you were trading meme stocks before, so I'm guessing you had some basic understanding of the market and GameStop, and you're following social media, I'm assuming, to trade those. But when you became a pro trader or even a junior trader, what was that defining moment where you started using more technical analysis and more of Gareth's kind of teachings?
Yeah, I mean, before when I was trading meme stock AMC, all these little GameStops, what I was doing was just going on social media and trading anything that people said to buy on Twitter, Wall Street Bets, right? Like that's what we all were doing. It's a big kind of Ponzi scheme. But looking at these guys, at first I saw technical analysis and I said, okay, they're drawing an imaginary line on a chart. That there's no way this works, right? So people call it astrology for men. And for me, I was like really skeptical of that, right? I'm still skeptical of some things, but when I watch things play out over and over and over and over and over and over and over again, and realize that, when you're looking at a chart, and this is a common misconception with retail traders, we think that, okay, we're all individuals, right? So they're not going to know what I'm going to do. I might buy here, I might sell there, I could do whatever. I have free will, right? But the thing is, when you take millions of people like that, millions of retail traders who trade like that, patterns start to emerge, and that's where technical analysis comes in. So if you get enough of it, there's an average, an expected result. So after that, I was like, okay, maybe there's something to this technical analysis.
Yeah, I mean, at some point, I guess you get a million people all thinking like they're thinking differently, but somehow some people have to think the same, even though it's differently. And so you do get those trends that play out. And speaking of retail investors, I do want to jump over to earnings because earnings is your specialty, and we'll dive a little bit more into it in just a minute here. But what do you think the biggest misconception to those retail investors is about earnings trading?
Yeah, I think that people love to take news and make decisions off of it. Like they don't realize that trading earnings, trading a stock, buying or shorting a stock into earnings is essentially gambling, right? Because let's say we use technical analysis. So I just talked a little bit about how awesome I think technical analysis is and how these trends can play out over a significant amount of time. And let's say a stock, NVIDIA, looks super bearish into going into earnings, right? It has, upsloping trend lines, it's breaking, there's a head and shoulders pattern. Well, what happens if they come out and say, our earnings, we beat earnings by 40%, and we have expectations to grow another 200% in the next year? Well, it doesn't matter if it's a head and shoulders, your mama pattern, the thing is gonna rip, it's gonna go higher. Another mistake that I see retail traders do is that they look at something like Meta. We did this together, right? There's an earnings trade, and you thought that Meta was going to go up into earnings because they had wearable technology, right?
Best in the market, I think.
Best in the market. So you're like, you're like, okay, they're the best in the market. They're probably going to go up. So what did I make you do?
I just bought.
I made you buy it. I was like, okay, you think it's going to go up because there's such good news before the report, right? Into earnings, right? And I said, okay, you think it's going to go up? Buy it and see what happens. And what happened?
I lost $15,000 very quickly.
So yeah. So
there was like a hidden tax. I mean, there's more than just earnings and trajectory, right? Like there can be things that we don't know about, like a hidden tax in Meta that bumped them 250. I mean, sure, that ends up in their revenue, but I mean, there are things there's so many.
Or they're like, this is going to disclose that they're buying some another company or this or that. You have no idea, right? And that's why trading a level before earnings and holding it into earnings is gambling. But what I do is I wait for the earnings to come, and then once there's significant movement, I look for a bounce if it falls or a pullback if it goes up.
And so you're talking about your support and resistance levels.
Yeah.
So instead of buying as or before the report comes out, which obviously is like gambling, like you said, you set these levels, the support and resistance levels. How are you setting those? Because I've found that some earnings can swing a lot, you know, 30, 40%, some, very few, but some. And some can only swing, 5, 10%. So how do you research that? What is your process in going into these earnings and to knowing, where to set these support and resistance levels at?
So I don't want to give too much away, but I'll give a little bit away.
Okay.
I mean, when you're trading to earnings, the first thing I do is trying to find out what the estimated volatility is, right? How much I expect the stock to move. And the way I do that is I look at the previous 3 to 4 to 5 earnings and be like, okay, this stock, let's say we're talking about Roblox, moved 8% last earnings, 5% the earnings before that, 6% the earnings before that, 9% the earnings before that. So I'm expecting volatility between 7-ish%, somewhere around 7 to 10% movement, right? So then I'm going to look for technical levels around that distance away from the closing price, right? So whether it's a gap fill, whether it's a trend line, whether it's a retrace, there are so many different technical indicators that it could be, but that's generally how I find my levels.
Yeah, and obviously you go over this a lot. I mean, you have a show, The Earnings Traders, it's out now, so definitely make sure to watch that. But for people who are also kind of unfamiliar with earnings, I mean, let's go back to the basics. When is earnings season typically? Are we reporting all year on these different companies? Or?
Yeah, so earnings come out once a quarter, right? It depends on which company. You'll see some weeks have tons of earnings, so I'll be live 3 times a week. But there are weeks where there are no earnings, so I'm not live at all.
Yeah.
So it really depends. It's just once a quarter.
And you're not going over every company that obviously has earnings.
No.
I mean, you're going over the bigger ones, right?
The bigger ones, so Nvidia, Microsoft, anything that really will move that I think that I can trade, anything I would personally trade, that's what I'm going to cover.
So typically when we're trading stocks here, we look at volume and cap of the company. Is that something you also look at kind of when you're going into trading as well, or to earnings?
Yeah, so for earnings, I'm generally looking for companies that have over 100 billion market cap at least.
Okay.
Right, but I want good names.
Right.
Yeah.
Right. Okay, so let's talk about a little bit about risk management, because that's something that I've seen you're really good at. Going into it, how volatile it could be, the possibilities, and so you talk a lot about risk management. Could you talk a little bit about your positioning sizing and a little bit about risk management and your philosophy going into especially earnings, or specifically earnings as well?
Yeah, so for me, risk and calculating the risk is the most important part of trading for me. I generally like to preset my adds or my stop loss and my risks, right? So let's say, for example, and I follow this rule of thumb with almost everything I do, day trading as well. Whatever trade I get into, let's say I'm looking to make $3,000 in a trade. Let's say I average around $2,000 to $3,000 per trade, right? Then I know how much I'm willing to risk. At most, I'm willing to risk around 10K, right? And the reason why it's is at most 10K is because I know that, okay, I might take this loser here, but I can make it back up in 3 to 4 trades, generally on average.
Right.
And if I can maintain a pretty decent win rate, which I think my win rate's around 85%, I'm going to be net profitable.
Right.
So that's how I kind of figure it out.
Would you say that the more volatile the certain stock, whether earnings or not, like the less you would position?
Yeah, that's something as well. Let's say I'm trying to make $3,000. Well, if a stock is going to move like 1% each minute, I need to put a lot less in to get that $3,000. But if the stock doesn't move that much, I have to go a little bit heavier. So it's all about managing risk.
Right, absolutely. And you're watching these multiple reports come out, like you said. I mean, you could have Nvidia, you could have Microsoft, Google, all these reports, Alphabet, come out the same week. How do you prioritize which steps deserve your capital attention, and why you would pick maybe one one of these over the other? You kind of mentioned it, but if there's a lot of big names coming out at once.
Yeah, if there's a lot of big names coming out all at once, like 3 in a single day, I'll just cover them all, honestly. Because the great thing about my levels is they're preset.
Yeah.
They hit, they hit, they don't hit, they don't hit.
Sure.
Right? That's just the way it goes. And generally, when it's really big earnings, they're usually spread out. Sometimes they're exactly on the same exact minute that they come out, right? But sometimes you have 5 to 10 minutes in between the different earnings.
Okay. And when you go into earnings, as you said, super unpredictable sometimes, how do you handle a situation? You kind of touched on it with risk management. How do you get into these stocks to say they go the other way, right? You're out of the money. I mean, are we adding to positions? Are we dollar cost averaging, or is it a one add and then if it misses your level and it's a stop loss hard?
Yeah, so when I trade, what I love to do is I'll DCA, so I'll add to the position if it gets out of the money. And if it ever, let's say I add and I get back to my break even, I will always, swing trading, day trading, doesn't matter, earnings trading, I will always take that position off of the table,
Okay.
right, just to mitigate some risk.
Right. So you're not only dollar cost averaging at that point, but you're also being a little more conservative, it would seem, to take some money off and then whichever direction it goes.
Yeah, I get that question a lot. People are saying, a lot of people ask me, like, Lawton, why are you taking some that off of the table if it gets back to your break even? It's because I know how much money I want to make, $3,000. And I know how much risk I'm going to have, like around 10K. And then I understand that if I add to a position, bring my average down, that means either my thesis was not correct or my level wasn't perfect, right? And just slowly, that's like getting a free get out of jail free card, right? I get to lower my average, get a better average for free. Why wouldn't I take some off? And then if it comes back below me, I can add again and keep working my average down. So when you finally get that pop, I can cash out. Now that prevents me from taking massive winners, but I don't believe in that. In that, you know what I mean? I don't believe in unlimited, upside crazy winners, because that's not how you make money over time. Small, consistent gains is how I do it.
Yeah, and I don't know if you have the same philosophy, but I feel like the more you lose, or the more you can gain, the more you can lose, right?
Absolutely, 100%.
Yeah. So let's talk about a little bit about your course, Zero to Trader in Under 60 Minutes. Tell us about that course. I mean, it's a bold title. Will students learn a lot from this? I mean, are we going from just basics of the trading, or are we going back to like how to find a broker? I mean, what's
so Zero to Traders Crypto Edition is really for everybody at home who's always been curious about cryptocurrency, a little skeptical, and wanted to kind of delve into it and learn more about it, but have been too either timid or worried, right? There's a lot of barrier to entry. With a regular brokerage for stock trading, you sign up with a brokerage, with your bank or whoever, and then you put money in and you can trade right away. But you have to, for cryptocurrency, it's so complicated, right? You might have to get a VPN, you have to open up a wallet, you gotta put that money into an exchange, and then how do you move it? And it's all really confusing. So what this course is really meant to do is remove those barriers to entry. It's a step-by-step guide on literally, okay, what is cryptocurrency, to putting money, creating a wallet, making sure your money is safe and secure so it can't get hacked. It's moving it to an exchange, placing your first trade, closing it out, and literally learning to trade from zero.
Wow. So it is a literal step-by-step process, not just how to trade, but like getting into crypto, which seems
Everything.
a lot harder.
Yeah, it is a literal step-by-step handhold.
That is awesome. Yeah. And with so much information going around on the internet, YouTube, sometimes I feel like when I research some things like this, I just feel so overwhelmed. So how are your courses different from, let's say you go on YouTube and you find 5,000 different ways to get into crypto?
Yeah, the thing is, there's a lot of skepticism behind these cryptocurrency because there's a lot of scams, right? There's a lot of bad actors. But this is literally me showing my screen step by step, showing you exactly what I do, click by click, and you can follow it along. It's different from those YouTube ones because not only do we have everything you need there, we have all the links, detailed explanations, but when you sign up, you also get access to our smart money crypto services. as well.
And so with that, they can follow exactly what your entry levels are as well.
Yeah, all of our verified investing, Gareth's, Ben's, Drew's, everybody's
Okay.
exact entries and exits on their positions. So they'll be literally, it'll take you from knowing nothing about cryptocurrency to being able to trade and follow along with Gareth.
With everyone's levels.
Yep.
That is awesome. All right, so we only have a few minutes left, so I would love to do a little rapid round with you. Some fun questions.
Let's do it.
What's your favorite type of earning setup to trade?
Earning setup.
I mean, like when we're going to, favorite company, I guess.
Favorite company?
Yeah.
I really think NVIDIA, just because it's been the darling of the stock market, so that's the most excitement is around that.
Okay. What is one tool or indicator you cannot go without when trading?
So for me is VWAP, volume weighted average price. I use it every single day.
All right, piece of trading advice you would give to someone who's just starting out.
Go small and manage your risk. Don't try to make $1 million in a day.
It's hard to do though. You start out small and then you're like, it's 100%.
That's the
though.
way that it works. Everyone thinks they're a master trader. They can make tons and tons of money until they take their first loss.
All right, so go swing small.
Mhm.
Okay, I like it. All right, preparation like the night before a big earnings week. What are you doing?
I'm just checking the levels, checking, again, the expected volatility. I'm looking to see if there's any hidden trend lines or setups that I've missed. But other than getting inside information, there's not a lot you can do. Yeah.
All right, Lon, thank you so much for joining us. And just for everyone watching, where can we find your course? And then where can we find you online?
Sure. You can check out my course, Zero to Trader Crypto Edition, available now on the verifiedinvesting.com website. And you can always follow me on Twitter, or X now it's called, at Lawton Investing.
Okay, and on Twitter we can get some analysis on what you're thinking the
Absolutely.
market's doing. Okay.
Yeah, absolutely.
All right. Thank you so much, Lawton, for joining us. And thanks for joining us here on Verified Market Insiders. Again, I'm Elizabeth Copeland, and we will see you back here next time.
Bye, guys.
Insight from zero to trader, or 60 seconds, or 60 minutes. 60 seconds would be pretty impressive to learn how to trade crypto, but 60 minutes crypto, make sure you definitely check that out. So that's on sale today, actually, up to 50% off. So you might have noticed, Everett's got a replacement here. We've got a very special guest here to interview me. So tables have turned a little bit. I've made some tough questions for those traders. Now here to ask me some tough questions is our in-house questionnaire, Howie. Howie, how are you?
Good.
Good. How old are you, Howie?
7.
You're 7 years old?
Yeah.
Okay. And what is one of your favorite things to do?
One of my favorite things?
Yeah.
Like to build Legos.
You like to build Legos?
Yeah.
I hear you're quite the architect. You like to build stuff and create worlds and things like that?
Yeah.
Wow, that's pretty impressive for 7 years old. I hear you're really good at it too. All right, Howie, last thing. What is your favorite color?
Red.
Red? All right, that's going to be important. Remember to stay tuned. That's going to be an important question. All right, I hear you have some questions for me. Do you want to fire them off? You're going to put me under the gun? All right, what you got?
Why do grown-ups say saving money is important?
Well, that's a good question. That's a tough one, man. That's really good. Saving money is really important because it's kind of like your Legos, right? You don't just want one Lego. You want a lot of Legos. And you can't get a lot of Legos at once, right? You kind of have to build up your Lego collection over time. That's kind of like money. You only have, $1 to start, but then you got to start saving up so you can have more money later. So it's important to start saving when you can, because some things get expensive and you have to pay for them. So you want to make sure you have a savings in order to then to pay for some stuff. Does that make sense? Okay. All right. What you got?
What does it really mean to invest your money?
Ooh, that's a good one too, to invest. Okay. I'm trying to think of things that they're good analysis. So let's say, it's important to invest because let's say that you're playing a game. Say, I'm not very familiar with Roblox. You're like the professional at it. But say like you're going to build a city, right? And you're spending all the coins. What do you play on Roblox? Is it coins?
No, it's like Roblox.
Okay, well that makes sense. Very smart marketing idea. So you spend all your Roblox, right, all at once, and you're building this empire, right? Well, eventually, can you make Roblox back? Like, do you earn Roblox in the Roblox?
You could earn them.
You can earn them. So it's important to build things that can then earn some of that back. So by investing money, it's kind of the same thing. You're kind of building this fund in order to then slowly get it returned back. And there's a lot of ways you can do that, whether you invest in a house like in Roblox, or you build a house, or maybe you go to the bank and put it somewhere where it can slowly gain money. So there's lots of ways to invest, but it's important to invest because it's a way to have some money aside that helps build it for you. So you don't have to just go out and spend all your money and not get any return. Yeah.
How do you know if something is a good place to put your money or a bad place?
Ooh, that's a good question. I guess it kind of depends on how risky you want to be, right? Because a lot of us here, we're pretty conservative traders, so we don't like the risky moves where you can put it in somewhere and it all goes away. Like, you don't want to put it somewhere and then, somebody from another team comes and takes it. That's not very fun. But you want to put your money somewhere where, you have maybe a longer term investment, and it's probably not going to lose as much, or probability of losing as easily as it would for the long term, where you can just you don't gain a lot, but you gain a little bit over time, but you also don't lose a lot. Where sometimes you can put it in somewhere and you lose a lot very quickly. So good places and bad places, it just really depends on who you are. But I would say a lot of people here, myself included, kind of like the plays where it's more conservative, but you get little chunks at a time. Like Gareth always says, baseball, right?
Yeah.
Yeah, he always says you always want to hit the singles, not the home runs, because a lot of those really good baseball players, they hit singles and they add up and they run the bases. They hit 1, 2, 3, 4, and then they come, 3 and come home. With the guys who are just swinging all the time through the fence, I mean, they might get a home run, but a lot of times they strike out. So you want to be the base hitter.
If you could buy anything in the whole world, even something silly, what would you buy?
Anything in the whole world and silly? Ooh, that's a good one. That's a surprise. I didn't even read that question before. That's a good one. A silly something to buy. What about, because it's winter, what about like a cocoa machine? Does that sound pretty good?
Yeah.
Oh, that would be pretty good. That's not a good investment unless you really like cocoa, but I really like cocoa. Do you like hot chocolate?
Yeah.
Yeah, that's pretty good. All right. Is that the last question?
Yeah.
Okay. All right. So now I want to do something really fun with you. Have you seen the wheel yet?
Yeah.
Yeah. Okay. So if you guys remember, I asked Howie at the beginning of the interview what his favorite color was. If you can put it in the chat, we're going to have you win a prize. And Howie, you get to spin the wheel. You want to spin the wheel? All right, let's go spin the wheel, bud. Here, I'll hold that for you. All right, let's go do it. Okay, here you go. All right, Howie's going to go spin the wheel. All right, there he goes. Whoa! Do you know what that says?
9,997.
That's right. That is our Winning Trading Pro Edition with Gareth Holloway. The Winning Trading Pro Edition. Whoever's going to get it, we're going to announce it soon. If you have the right answer, you get 8 months free of the Winning Trading Series Pro Edition. Dude, good job. I don't think they can see you. Here you go. Give me a high five up here. There you go. Thanks, Howie. All right, we're going to be right back. We're going to have some testimonials, and then we're going to come back. Everett's going to join us. But everyone say bye to Howie. That was awesome, dude. That was awesome. Good job. All right, we'll see you back here in just a second. Yeah, good job, dude. Yeah, you just got the best one on the whole wheel. Did you know that? Yeah, that was awesome. In meteorology, pattern recognition is so important because you're looking at temperature, pressure, and those patterns that come with similar types of systems. Well, in trading, it's kind of the same. There's always patterns that you're looking for, whether it be head and shoulders or M and V. I mean, there's 1,000, right? But the uncertainty is what lies within both. Just because it's a head and shoulders, it doesn't always play out. Just because it's a high pressure system that was similar to last week's, not always the same result. So it's important to plan in both situations for that uncertainty in the patterns.
Hello everyone, get ready, it's Mark Leibovitz. I've been a follower of Garrett for a few months, and I have to say that he is terrific. Many of you may remember me. I was an elf on the old Louis Rukeyser Wall Street Week television program. I was a market monitor guest for 30 years on PBS with Paul Kangas, and I author vrtrader.com, which is a technical website. Many of you may know the indicator of the volume reversal. In just short, Garrett's done a terrific job. His objective view of the markets really impressed me, and I'm eager to follow them, even though I do my own technical work. I find his work very complimentary and insightful, so I encourage all of you to sign up to his service. And thank you again.
Welcome to the Apprentice Trading Library. In this segment, we will explore blockchain technology. Blockchain technology is a complex but increasingly relevant topic. Here's a breakdown of its key features. Imagine a shared ledger like a Google document, but distributed across multiple computers instead of one central server. This ledger records transactions or information, not just financial. Each entry, called a block, contains data and is cryptographically linked to the previous block, creating a chain. This chain makes tampering with any block extremely difficult, as it would require altering all subsequent blocks as well. The key characteristics of a blockchain include decentralized. No single entity controls the blockchain, making it resistant to censorship or manipulation. Blockchains are transparent. Anyone can view the transaction history on the blockchain, providing trust and accountability. They are also immutable. Once a transaction is recorded, it cannot be altered or deleted, ensuring data integrity. And finally, they are secure. Cryptography makes blockchain highly resistant to fraud and hacking. Now let's explore the uses for blockchain. Cryptocurrencies. Blockchains are most famously used for cryptocurrencies like Bitcoin, where they securely track ownership and transactions. Supply chain management is another use of blockchain technology. Track the movement of goods and materials transparently and efficiently. Blockchain technology can also be applied to voting systems, secure and verifiable voting processes, and many other potential applications across various industries. It is important to remember that different types of blockchains exist, with varying levels of transparency and permission to participate. While blockchain technology is considered secure, it is still evolving and potential vulnerabilities exist. Understanding the specific implementation and purpose of a blockchain is crucial before drawing conclusions. I hope this explanation of blockchain technology has been helpful. Thank you for watching the Apprentice Trading Library. Please visit verifiedinvesting.com for more.
Every day that passes means that you're missing out on compounding profits as a trader or an investor. Some people want to wait because they don't feel they have the education, they don't feel they have the money, they don't feel they have all these other factors that will make them successful. But just like any career, you have to start somewhere. There's so much good knowledge out there. You have to be focused in, and you want to start today. Because again, a dollar that's not made today doesn't have a chance to compound every single day in an unbelievably profitable environment, which is day trading and swing trading. And again, that dollar can be literally worth thousands in 20 years. So you got to start now. That's the key. Hey everybody, welcome to the Winning Trader series. My name is Gareth Soloway and I want to walk you through in this video what the Winning Trader series has in it and why it will make you into a likely successful or very successful individual trader or investor. So basically starting from the very beginning, I've traded for 25 years. When I started trading, I made every mistake in the book. I bought a stock and it would go down. I shorted a stock and it would go up. And I honestly had no clue. But ultimately what I did was I started to study charts. I studied cycle analysis. I studied pattern formations. And all of these things put together started to improve my profitability, where I went from a losing trader to a break-even trader and then a profitable trader. And again, this applies to swing traders, day traders, and long-term investors. If it has a chart, if it's any asset that has a chart, you can use the Winning Trader series to shoot yourself far into the profit zone. Now again, going into this, essentially what I did was I took all the knowledge from 25 years of mistakes and learning and put it down in an almost 20-hour course for you. And this course again delves into every little nuance that is up here in my mind that I've learned, and it puts it down in video form for you to be able to learn. And again, the idea here is for you to not have to make the mistakes that I made, but ultimately leapfrog that, turning yourselves into a much more profitable investor or trader. So again, we're going to go into everything from pattern formations, the success rates, the probabilities, the psychology of trading, everything I use, even the stuff that I've created. And I've created some of the most successful trading formulations out there, the confirmation signal, time count, cycle analysis. I get into this in the nitty-gritty and I give it to you in forms that you can easily understand. You don't have to be a genius. I am by far not a genius, but I did spend time and effort developing all of these methods and now putting it in video form for you guys. So thank you so much for tuning in. I hope you enjoyed the Winning Trader series.
Oftentimes, most people don't focus on timing when they're getting in a trade. Technical analysis focuses on patterns and price, but then cycles highlights the timing in which you can get in and out of trade. There's cycles we go through each day, week, month, and year to pay attention to, all of which, if you know what you're looking for, can help guide you to get the best odds for taking that next trade.
All right, welcome back to Green Monday. We are wrapping up here shortly, but stick around. We have a few more things. First off, before we announce the winner from guessing Howie's favorite color, which we did talk about in the beginning of the interview. So if you watched, thank you. First of all, Pavlina, thank you for giving us a compliment. Howie was a great interviewer. She said, "Great interview, Howie and Liz." So hopefully you learned a lot more about Roblox than I ever knew.
Yeah, me too.
And Sean, thank you for putting together Green Monday. I have been following VI for over a year and a half. Today I enjoyed live trading, in-depth interviews, and trivia. Keep up the good work, team. Happy Thanksgiving. I will definitely make sure to pass that along to everyone.
Happy Thanksgiving to all of you as well.
Yeah. All right. Well, thanks, guys. If you have any more questions, keep sending them in. But Everett, What do we got next?
So you're going to be kind of flipping roles here, Liz, because I know you've been interviewing a lot of people. We've watched some of those interviews. Now I'm going to get to interview you.
Oh my gosh! You know what? Should we announce the winner of this now? Or
I think we
wait till the
should.
end?
No,
Let's go ahead.
I think we should go ahead and
because
announce
it's
the
going to be a
winner.
lot of me talking. I feel like
I don't want to miss it.
Smith, hey, you won a whole 8th month of Winning Trader Pro Edition. That's like the big overall prize.
The big kahuna.
So you can thank Howie for that, Smith, because Howie, that's only been spent, what, twice today, right?
Yeah,
Howie's
yeah.
won the last one, so good job, Smith. And stick around and see what you guys get. Thanks for sending in more colors. But yeah, it was red.
Thank you.
It was red.
The answer was red.
Good
Yes.
job. Thank you, Howie.
Awesome. So, before we begin, I just want to remind everyone, when Liz and I are finished up here at 420, we will be going straight into trading the close with Drew Doak. So you don't have to change the channel or leave the stream. It'll just transition right into it.
Yeah, good point.
That being said, Liz, you are the newest trader here at Verified Investing.
Yep.
And you have a pretty interesting background where you came from meteorology.
I did.
You know, was it mainly about the science that drew you to meteorology? Like, what was your draw to get into that career path initially?
You know, that's funny that you asked, because that wasn't even my initial, you know,
Right.
my initial path. So actually, when I started, I was a journalist for a while. I went to Kennesaw State, go Owls, if anybody knows. So I was a journalist for a while and decided, you know what? I don't think I like journalism, because listen, my idea of journalism was being an overseas war correspondent, like the action, like
right.
a photojournalist, right?
Mhm.
So like Arwa Damon, if anybody's familiar with her, that was like my dream, to go. And you know, things didn't like plan out exactly how. I mean, you kind of have to, if you're going to do that, you kind of have to just basically grab a camera, fly yourself over there with no affiliation. No one's going to hire you or build security around you. That costs a lot, right? Like no network's going to do that. So you got to fly over there, you got to film stuff and just kind of send it back and hope someone pays for the images. So it is a really self-driven career, and not just self-driven like an entrepreneur. Like, it's an entrepreneur in a war zone. So it's pretty intense to get into that field. I wasn't aware of all that. I had the idea of like, you know, Arwa Damon, go for like X, Y, and Z paper or whatever, and security was fighting. So anyway, that didn't really pan out. So when I was in news, I worked at a network for a while, and then ended up, after about 4 years, I decided, you know what, this isn't quite for me. So I just picked up and I moved to Australia for a year. And so I know we have a couple of Australian members. Hey, some of our members from Tasmania watch, so hopefully you're watching now. But I lived in Sydney for a year and backpacked around. So did a lot of scuba diving, a lot of backpacking in the country. I had my work visa, so I was able to do quite a few things on like yachts and at bagel shops, and it was wild. It was a wild time. Went to Thailand for a month just to backpack by myself.
Wow.
Came home and I was like, what do I want to do with my life, you know? And that's something I know a lot of Americans watching, we don't really get the chance to do that quite often. I know a lot of people from Europe or overseas, anywhere overseas, get a little bit more time to do that, but that's not really common in America. So it was nice to take that 1.5-year break. Kind of decided, you know what? I had some friends at my network that I really liked, and they were into the science side of things. But I really love the creativity and like the stress of news, right? So when I went back to school at Mississippi State Online, to get my broadcast meteorology degree, it was kind of the best of both worlds, because it incorporated science, which I love science, but I also got to still be creative. So it wasn't just sitting behind a desk all day analyzing charts. It was also the part of it where I was sciencey and was analyzing charts, but also got to tell a story to people every day about those charts in a way that they could understand. So that's kind of how I got into meteorology. And before Florida, I was in Montana. That's where I started my meteorology career for 8 years. So anybody had been to Big Sky Country, I highly recommend. I'm a little biased, but it's awesome. And then moved to Tallahassee, went through 3 different tornadoes that ripped through town, so 10 total.
Wow.
But 3 that ripped through town, I was on air for that. 2 different hurricanes and major hurricanes that went through our area, 3 through Florida. So it was a wild, it's a very intense job. So I think I'd thrive in that intensity, as weird as that sounds. I thrive in those kind of, like, it's like I'm calm, but the world around me is chaotic. So I found in trading, it's not really that way. Like, the world's not chaotic, but I mean, you've got to manage your emotions in those charts. So of course I'm not brilliant at it yet. Gareth can just like make a trade, walk away to a meeting, right? And I'm like, what in the world? You just walked to a meeting? I'm like sweating over here, you know? So I'm learning more about that, but that's kind of how I got into trading. Was There's that aspect of it, right? Being creative, educating, and doing a lot for our viewers and members, but also the side of it where it is more pattern analysis, which you find a lot in meteorology, right?
Right, right. And that makes sense that there's a lot of overlap between that kind of pattern recognition skill that you might use when you're looking at, you know, atmospheric levels or meteorological charts.
Nailed it.
That's a tricky one.
Nailed it.
And candlesticks,
Yeah,
right?
right.
So when you initially transitioned into trading, did you get a lot of like pushback from people around you? Was there anyone who questioned and said, how are you transitioning into this? Or was it mostly supportive?
Well, that's a great question. So I think at this point in my life, my parents have just accepted that, you know, I am very adventurous. I want to learn more. So originally in school, I was a nursing major. They were very upset. I went to communications. Then I got a job at network. They're like, oh, I'm proud of you. And then I was like, I'm moving to Australia. They're like, oh my gosh. So I think they've just kind of accepted that, you know, I'm going to pave my own path at whatever way that is. So they've been very supportive. But there are people definitely around where I told that to. I think they had this misconception of what day trading is. They think, and you hear the stories of these day traders that lose everything. And of course, people blow up their accounts, especially if they don't know what they're doing.
Sure.
But this is so much different because not only do we have a team here, we're not fighting against each other to make the best trades, right? We're working together to make the most money for our members, and also make the best trades and educate people on how to do it themselves. So it's a little different here. There's definitely times where I'm, not trading successfully, but I am new, so it's going to happen. But it's not like I'm going in just blindly picking numbers and blowing up accounts. So I think there is a misconception a lot of times with day traders are just these, gung-ho people that want to get in trades, and they exist, but it's just not what it is here, and I really appreciate that.
Wow. Yeah, that makes a lot of sense. And I will say, I'm behind the scenes here as the editor, but I've seen you working together with Ben, with Lawton, with Drew. Verified investing definitely is a team,
right?
And in the live day trading room, yes, Gareth is there and he kind of leads the way, but the members are getting trades from 4 different perspectives.
Right.
And when you start giving out trading, that will be another different perspective. So I do see how that kind of breaks the mold of the normal, stereotype of what day trading is, that there's, these large risks being taken and it's almost akin to gambling. So I appreciate you pointing that out.
Yeah.
So speaking of verified investing specifically, when you came here, what is one thing about the way that we approach education that really has resonated with you?
I'll go back to probably the portfolio and how to do a lot of risk mitigation, right? Because I started trading before I came here, a little bit more swing trading, kind of during COVID. So it was buy the dip, right? That was a big dip to buy.
Yes.
So I did, I remember in college, I was unfamiliar with finance until my dad got into a finance role later in his life. But I was pretty unfamiliar with finance other than like my parents being like, you gotta save money to have a future, right? But I didn't know exactly how to do that, right? Or I just didn't implement it, right? So I went to this thing in college. I remember it was in Buckhead. I lived in Atlanta. And this guy who was like a pro athlete gone financial, right? It wasn't a day trader, but he was like someone who was talking about investing.
Right.
And to a bunch of college students. So I remember him saying, invest in what you believe in, right? So like products you buy or things that you do because people are also investing. So it was less technical trading and more just long-term investing strategy.
Got it.
So that's when I started my trading, was just kind of putting small chunks of whatever, some parts of my savings into that. But I had no idea what dollar cost averaging was. I had no idea what a portfolio amount was. Like even coming here, I was like, I don't understand what this dollar cost averaging is and how you put in an entry, but then you're changing that entry so the average comes down. I didn't understand it. So that education honestly has made me reevaluate a lot of trading, because there are ways to, help your chances of making a winning trade, whether that be, mitigating loss or helping you win in small chunks, or just technical analysis in general. So it's all very interesting. Yeah.
Yeah, that is very illuminating, because I think many of our members, many of our viewers, they probably have a similar experience where they knew a little bit, or they had some kind of taste into the investing world.
Sure.
But it really does open up a whole new book of things to know.
Right.
It's a lot.
It is. Yeah.
Very interesting. So, is there anything though that you can remember from when you first started here that really tripped you up, or just was very difficult for you to kind of wrap your mind around?
You know, I didn't understand the concept of selling. Like, I didn't understand to short something.
Ah, okay.
So
That's a very common one.
yeah. So I mean, because I mean, a marginal account, obviously you can short and go long, buy or sell. But I couldn't understand what in the world like shorting was. So I looked it up, and the definition made me even more confused because it was like you're borrowing money from a broker and blah blah blah. I'm like, how many steps does that take? It's literally just a sell button, right? It's like it's no harder than that. So that was something I really didn't understand. And then, you know, I watched Verified Investing online quite a bit, as a lot of you members are doing now. And I saw these trend lines and the price, these candlesticks, which I call box and whiskers, by the way, growing up in school.
Technically in the math books,
yeah.
that is the correct
So I was like, what are these
terminology.
box and whisker things doing? And they're candles, and they've got wicks and tails. Anyway, they're bouncing off of these lines. I'm like, how is that line magically drawn and it bounces off of it? So learning all that was pretty interesting.
That's great. Yeah, and again, I think that's very relatable.
Right.
Everybody has to start somewhere, and all of this is kind of foreign to most of us, right? Unless you're like in the trenches, like Gareth has been for a quarter century. Not to date him or anything, but he, you know, he's been doing this for more than half of his life, and it comes almost second nature. And in my experience, at least what I've observed here, is almost anyone can learn it.
Right.
But it does require putting in the work, right?
Right.
Very, very interesting.
It does, yeah.
All right. Let's see, what else do I want to know, Liz? So, have you taken any, and I know you've been doing paper trading, right? Have you taken any trades thus far that really taught you a difficult lesson, or that you learned something from?
I've had 2 difficult lessons in my paper trading account. In personal account, it's a lot smaller, obviously, value. It's small little, you know, losses and wins. But in a paper account where I'm trading off of the portfolio like they do here, so $1 million portfolio, I learned, first of all, what leverage was, because I was trading, I remember my favorite stocks were Baidu and Alibaba, which are 2 Chinese stocks, right?
They are, that's right.
So those are 2 stocks out of China that are basically they're Amazon and Google's and that kind of realm of tech stocks, if you're familiar with them. But anyway, so I remember getting into a Baidu trade and it didn't go my way. So what I did was I held it overnight thinking, okay, well, at some point this has to rebound. It's coming into another level of support. You know, this is going to go the other way. Well, little did I know, it was a leverage paper trading. You have to set your, you know, leverages. Well, I didn't know it was leverage 10 to 1, number one. So not only was I way heavier leverage than I thought I was and didn't understand leverage, but B, it's a Chinese stock. So it's held overnight, which is daytime in China, which means I was really out of the money the next day. That was very stressful. So, and that was paper money. I can't imagine real money. So learned 2 very valuable lessons: that leverage is a thing and you have to watch if you're leveraged or not, or B, if you're trading a stock that happens to be overseas and it's nighttime, it's still very tradable during the day, or the volume is still going to be high during the overnight hours. So that was a very valuable lesson. Another one was with Lawton. You saw in that interview, I was talking to him about earnings trading. So I was convinced. So Meta had earnings a couple weeks ago. I was convinced that Meta's stock prices were going to go up because there's a few reasons. They have some great wearable technology. I'm biased because I love their wearable technology. I wear it all the time. But I was like, this is cutting edge. You only hear really about Meta's, you know, wearable technology, blah, blah, blah. And people are buying it. So it's got to go up, right? It's almost Christmas time. Like the stock's going to rocket. Well, so Lawton said, and he was teaching me a lesson. It's paper money, so it wasn't real money. He was teaching me a lesson, which is why I learned it. He said, all right, well, if you think they're going to go up, why don't you just buy right now and go long? And before earnings came out. So I did. And what did the stock do? It just tanked because, surprise, surprise, Meta just got hit with a something billion-dollar tax from overseas and something you would never even think about, right? And so, of course, their earnings they missed and it tanked. And so there goes $15,000. And luckily, I had like at least a stop loss set. But, you know, I learned a valuable lesson then to, first of all, go into earnings, you're going to set support resistance levels and you're not going to go in before because it is gambling at that point, right? With earnings, because you don't know. So waiting until it goes up to hit your support or resistance, or go down to resistance or support level, go up to your resistance level. So that was 2 very valuable lessons.
Wow, good thing it was paper trading.
Yeah, it was paper
Good thing
trading.
it was
so,
paper trading.
Yeah,
and that's where
honestly, I'm very good paper trading right now. I take trades and I'm not very good. I'm good with paper trading. I don't want to take real trades right now. I'm not good at it yet. I'm just good taking them right now. So that's the good news. I'm not trading real money in a large account yet. So
Gotcha. Yeah, I mean, you got to start somewhere. You got to get your feet wet, and to have that kind of like safety net of knowing, all right, I'm not going to cost the company $100,000
right. You're
before you're
learning.
ready to.
Yeah,
That makes perfect sense. So you may or may not have already kind of developed your own like favorite assets to trade.
Sure.
Like, do you? Do you have ones in particular or certain sectors?
I've tried different things. I've tried Forex, I've tried crypto, and they're interesting, but boy, do I love a gap fill. So I love stocks because, it closes at night, opens during the day, and you have some of these gaps. That's one of my favorite things to look for is gap fills. Now, they don't always work, and they work sometimes and not others, and I'm learning why, but I do like just regular old stocks or inverse ETFs. Been following, a lot in stocks trades. SOXS, which is the inverse of SOXL, which is leveraged semiconductors. I feel like I'm like saying all these words. I'm telling
And
you,
it's all correct.
3 months ago, I would have not known what the heck I was talking about. So, so I've learned a lot over the last 3 months.
That makes sense. And I also like gap fills in my very limited trading I do on my personal account. Those are some of the most reliable setups that I could find on the charts.
Right.
They make sense to me. It doesn't sound like you're probably going to be super interested in crypto though, because if it trades 24/7, very rarely are you going to get a gap on the chart, but it can happen.
I haven't dabbled in it yet, so maybe once I get into it, I'll like it a lot. But I'm kind of sticking to like one thing that I'm at least comfortable with for right now.
Makes sense.
Yeah.
Makes sense. Get into your comfort zone.
Yeah.
So, is there anything so far in trading or in markets that has really surprised you? Maybe something either you didn't know or you thought you knew, and then you come to find out not what you thought.
That's a good question. Technical analysis in itself, I think, is what is surprising to me because news is my world, right? So I just think of like news driving stocks. Well, that's not always the case. News does drive stocks, but in sometimes ways you don't think. Who knows, you're right? So the way that news drives stocks is like very interesting to me, especially now. It's like, it seems like, come December, the Fed is undecided if the cuts are going to happen. So, the stocks are a little bit more volatile. If any kind of news hinting at anything, it's so interesting to see how, it's all psychology, right? It's all what plays into the stock, technical analysis, news driven, ups and downs of the stock, it's all psychology driven. So that I think is the most interesting thing, that each candle represents like a seller or buyer's what they're thinking.
It does. It does. Yeah, that resonates a lot with me. The market psychology that you can see displayed in the patterns of the charts.
Right.
It's sort of jaw-dropping when you start to realize what you're looking at. Like you said, you can see market sentiment.
Yeah.
All right, let's see what else. So you're still relatively early in your trading journey, but I think that puts you in kind of a unique position to be able to speak both from the side of, you've learned some things, you got some stuff under your belt, but you also are only, X number of months removed from essentially being a complete novice.
Right.
So given that you have that perspective, what would you tell someone who's right where you were, let's say 6 months ago, that maybe they've dabbled in trading or they follow markets somewhat loosely or just watch the news, and they're interested perhaps in trading? What kind of advice would you give them?
Well, first of all, I would say too much advice is too much advice. So, between watching the news and watching what maybe some of these, like CNBC saying, oh, X, Y, and Z stock is someone put a lot of money into this stock, or, trying to take that trade. Okay, well, you never know what's going to happen there. Also, you go onto YouTube and there's about 500,000 people trying to tell you how to trade. That's a lot of information too, because that's something I did do before I came here, was I wanted to know more about trading. Well, there's 500 different ways to trade. More than that, there's 500,000 different people to tell you how to trade. It is so overwhelming. And so to make it simple, that's something, and this is not, I am biased because I work here, but I'm not saying this just because I work here. It is so, like the winning trading series, the pro edition now, it's so concise. It is the simplest couple of things, like 5 or 6 things that you just pick out, a little bit more than that, but like a couple that you just pick out your favorites and you just use them on the chart, and you have a better win rate than all these like different I don't know, indicators and blah, blah, and your chart's filled with all this stuff. It is so overwhelming. And on top of that, you're trying to find out what the trend's going to be. If you have 500 things telling you different trends that are going to happen, it is overwhelming, right? So the simpler, the better, honestly, is my advice.
Wow. And, I immediately thought of the too many indicators on the screen when you mentioned that.
Yeah.
It's so easy to have information overload,
Yeah.
especially when, every candlestick represents new information about price.
Right.
It can be overwhelming. So I think that that's excellent advice for beginning traders or people who are just kind of considering getting into it.
Yeah, and some of those indicators, I'll tell you, they'll tell you one thing, and then some will tell you another thing, and then you're like, well, which one do I trust? So
Right.
it just is too much.
Yeah, you can get conflicting signals. That makes sense to keep it as simple as possible.
Exactly,
right?
yep.
So, let's see. What would you say has been the most rewarding part of being a trader so far, or perhaps maybe the most intellectually satisfying part of it for you?
I'll tell you, it's not super easy. You gotta put in time,
Mhm,
right? You gotta put in some time. I mean, the trading series is what, 18 hours or so?
Roughly, almost 20 hours.
Yeah, and I've watched it like 2 times now. I'm not done yet. I'm gonna watch it at least 5, 6, 7 times because there are so many little bits of information, and so you hear it, and it's simple concepts, but he also gives you little tidbits that you probably wouldn't get anywhere else.
Mhm.
So like even in his trades, like take half off at this price. Anyway, so there's little tidbits I'm still picking up on top of the major concepts, right? So putting time into it is seriously what you got to do. I mean, there's just no way around it. Just practicing, paper trading, and just getting into it.
Yeah, makes sense. Makes sense.
Yeah, that's and the intellectual part I would think is just feeling that, yeah, I put some time into it and I've gotten a lot out of it. And there are some times I'm like, oh my gosh, that makes so much sense, boom, it clicks. But there are so many times I'm like, there is a lot more work to do.
Sure. And it takes time to sink in,
Yeah,
so that
yeah,
makes sense.
yeah.
I think I know the answer to this question,
Okay.
but I'm not going to jump the gun on it.
Okay.
So far today for Green Monday,
Yeah.
what has been your favorite moment so far?
Oh, Howie's interview.
Okay,
Yeah.
what I thought you were going to
Yeah,
say.
Howie interviewing me.
Yes.
How good is that?
He's a pro.
He had tougher questions than you, Everett. I'll tell you. He had some tough
Fair,
questions. I
fair.
mean,
I will
those were
take that
deep.
one.
Yeah, those were deep. I had to tell him how to invest. I don't know. That's a good question.
He's a sharp one.
He's good, yeah.
Obviously adorable, but
Yeah.
hey, I'll take that L that he's probably a better interviewer than me.
Well, not
so
a better
be it.
interview, just tough questions, man. He didn't relent. And here's the thing: he comes up because he looks so cute, and then he nails you with the hard questions. That's his thing.
Makes sense. Makes sense.
Yep.
Okay, Liz. Another kind of closing question here.
Mm-hmm.
If you could go back and tell yourself something, I know I asked about what advice you might have for a new trader.
Sure.
But if you could tell yourself something back when you first started this
Yeah.
this journey, what would it be?
Ugh, breathe.
Mm.
Man, there were so many times where I came out of work, and it's nice because I do get to do it 8 hours a day, or not plus, right? I do
Mhm.
get to trade, I do get to learn that, and it's very fortunate that I have a lot of people around to also help me. But it was so difficult to sit down and watch that through over and over again. Now, granted, it's easy when it's one of those things like I compare it to snowboarding, but I guess you can compare it to riding a bike. Once you get it, you're good. Like I am starting to see stuff. It's like all like, clicking. It's like Beautiful Mind. You're seeing all these like patterns like, oh, this totally makes sense. But when I started, it was like, I'm never going to get this. I don't understand. Like, okay, I understand what a trend line is, but how then do I put it to this? And how do I understand that? It just all, if you breathe, comes together, and it does click eventually, and it all kind of makes sense as it overlaps. So that's the biggest advice, is just, it's okay. It's gonna click.
Wow, yeah, that sounds partly like trust the process,
Yeah.
but then also that emotional side that I know in the Winning Trader series, Gareth goes into how to manage your emotions.
Yeah.
And it's, that discipline is definitely one of the most important aspects of trading beyond the technical side of it. You could have all the information, all the setups, and yet if you don't have the emotional discipline, right? Or you don't have kind of, like you're saying, the ability to stop, take a breath,
Yeah.
just manage your feelings, because we're all human.
Yeah.
We're all gonna feel those things, you
Yeah.
know. And many times I've heard Gareth say that if your heart is beating too fast, that means that you have put too big of a position into your trade.
Right.
But that over time, that just goes away.
Yeah.
Right.
Yeah.
And
Because
so
you learn more about not positioning your whole portfolio in a trade.
right.
Yeah.
We're not accidentally using 10x leverage
Right,
when you weren't aware of that,
Yeah,
right?
Exactly. Yeah.
Yeah. Well, that's very, very cool. Very informative.
Yeah.
Thank you, Liz.
Yeah. Hopefully you guys got a lot out of it. I
yeah.
saw some questions coming in here, but yeah, this very good.
Yeah, well, if you want to perhaps grab one or two questions, if anything jumps out at you there, we've got
These are
about 1 minute or 2 minutes until we kick it over to Drew for trading the close.
Yeah, these are pretty technical questions, so maybe
Mm.
maybe we'll have these answered another day. They were asking
Yeah.
about specific, it looks like specific
Tickers.
stocks. So
Yep.
yeah.
Yep. If you're a member of the live day trading room, come in there in the afternoon,
Yep.
ask those questions then, and that's the best time to get those answered.
Yeah, absolutely. And so like I said earlier, if you're kind of just joining us, we are about to wrap, but if you do the live day trade room, it's a great resource, and you got, again, 4 traders in there making trades for you, giving you your levels and everything. But in the morning, it can be kind of hectic. Opening bell, things are swinging around, trades are being in and out, adding, dollar cost averaging very quickly. So if you have a question and it doesn't get answered in the morning, it's okay. You're not the only one. It's just chaotic. And our first priority is to give you trades, right? So live day trade room. So in the afternoon, when things calm down a little bit, volatility is not as high, traders can come out and start looking through. So if they didn't get to your question, it's okay. You don't have to get frustrated. We probably just didn't see it, honestly. You just copy and paste it, boom. And then, we'll hopefully get to your question.
Absolutely.
Yeah.
All right. So thank you, Liz. I think it was a very informative interview.
Absolutely.
We will now be kicking it over to Drew Dosick for trading the close.
Hey guys, thank you so much for passing it over. Thank you guys so much for a fantastic Green Monday. Unbelievable stuff. Now let's wrap it up and kickstart trading the close, folks.
Data-driven insights for serious traders. As the closing bell approaches, momentum is analyzed, tomorrow's key price levels highlighted, and the setups that matter most broken down. This is Trading the Close with Verified Investing.
Hello, everybody. Welcome to Trading the Close. My name is Drew Dosick. It is awesome to be back here in the markets. Even though we did just have a 2-day weekend, gosh, it felt like forever. There was so much news that came out. Now, last week, this is really the story of the show, and as well as really the foreseeable future. But last week, the CME Fed Watch tool was under 50% for a chance of a cut in December. Then we had a Fed speaker come out Friday, changing that narrative. Now the Fed Watch tool is over 80% chance for a cut in December. Thus, the markets are rejoicing. Investors are jumping back into the market. So let's look at the market summary board, see where everything panned out today. You can see here the Dow Jones up 0.37%. The NASDAQ is up 2.69%, right back into tech. Again, lower rates allows them to have cheaper money to access to build out more projects. S&P 500 up 1.47%. U.S. oil getting a nice pop, up 1.69%. Gold also having a nice pop, up 1.64%. Got another near-term parallel channel to show you on that chart. Then Bitcoin rallying back, not out of the woods yet, folks, but still up 2.41% on the day. And before we jump over into the S&P 500 heat map, let me just drag this over to illustrate really what I was talking about at the beginning of the show. Right now, 84.9% chance for a Fed rate cut in December. Is that going to be the thing that solves the market? No, not at all. But last week, like I said, this was under 50%. We were hanging out down here with the low 40% probability and a higher chance of no rate cut, keeping the rates the same. Now, as I've said, now we're up over 80%. Investors are rejoicing. They're buying back the stock market that was bludgeoned up last week. All right, so let's jump into the S&P 500 heat map. As you can see here on a nice green day, we have NVIDIA up 2%, Apple up 1.63%. Look at this, AVGO up 11.1%. We're going to look at that stock here in just a few moments. Meta up 3.16%. Tesla also leading some of the mega caps up, as well as in AVGO. Tesla up 6.82% today. We did see some retail stocks did fall off a little bit, but they were up last week, so it wasn't that big of a decline. Man, a lot of green on the screen, predominantly concentrated in a lot of these big tech playing stocks that have really elevated the stock market all of this year. So let's jump into the SPX. Now you can see here, I've got two trend lines drawn on the screen. This is the S&P 500 index. These two trend lines is what I'm monitoring in the most immediate near future. You can see where I've gotten these trend lines from, simply were the highs and the lows from October 10th's red candle. Now, if you notice that this big red candle we had on Thursday, basically it did close outside of it, but since then price has now started getting back and trading amongst these candles. Now, whenever you have these big red candles on the charts, they are damaging near term for price action. But man, this rocket right back up, all fueled by that Fed rate potential cut in December, is really rocketing and challenging this red candle. So in the near term, tomorrow, as well as this week, being a holiday week, I could easily see us floating up, at least tagging the top end of this trend line. That's at 6,700 points. So be watching for that to see if we can get above it. Consider that holiday weeks, as I said, are lighter volume. That generally dictates a float up in the market. And then you fuel that float with a potential rate cut. We're likely tagging the top end of this by the end of the week, but that doesn't mean we're going to rip higher on the stocks. We still got to make sure we get through the first 2 weeks of December, where there could be some serious profit taking by institutions. Now, I want to flip over to the SPY, which is the ETF that does track the S&P 500 purely to show volume. Notice here, the volume is an indicator on your chart down at the bottom of the screen, illustrating how much participation took place that day. Now, back on Thursday of last week, notice this huge volume spike. The highest volume spike we've had in the most immediate future also was going to imply further downside. But that rate cut news changed the narrative, and then all of a sudden we're rising right back up on the charts. In the S&P 500, the SPY, I am monitoring this inclining trend line that also corresponds with those horizontal trend lines that I mentioned on the SPX. Next up, the Qs. Nice rocket today, 2.56% pushing up. Still did not conquer this big red candle from Thursday on November 20th. So I'll be watching that in the coming days. Should we break above that, there will be the next level of resistance right here at this gap fill. It's going to be at $621.08. That area, as well as this candle, is where I'm thinking price on the Qs is likely to go in the very near term. So be watching some more upward movement on that chart. Next up, the SMH. Now, guys, look how beautiful this was with this massive decline concluded there on Friday, but notice where it caught support in two situations, folks. We've been talking about this long-term inclining trend line holding up the current trend from the April push that we've seen. And we've not closed underneath this trend line. You can see we teased with coming down, breaking down beneath it, but we had two levels of support, this trend line and this long-term inclining parallel channel that caught price, rebounded it very nicely right from the bottom of this parallel all the way back up. Now we're approaching the 50% area of this parallel. So this area will be resistance come tomorrow or even on Wednesday, right around $345 on the SMH. So be watching for that. Obviously, just like with the Qs and the spiders, this red candle is just beyond it. So we've got two levels of resistance back to back on the SMH. Should we beat that, that shows you strength is returning to this bullish sentiment on the SMH. We'll see. You can't kill a bull with just one or two daggers. You're going to need to take it down with a lot more than that. So we'll likely be experiencing these buy the dippers until we have more concrete negative news to break us and confirm us underneath this inclining parallel channel. Next up, we've got the IWM. Now, IWM is a lot of small cap stocks that rely on cheaper rates to survive. So a lot of these companies aren't even profitable in this index. So you've got to pay attention to that and understand cheaper rates. We're going to rocket right back up. We're already above Thursday's big red candle on the IWM. That tells me next resistance is going to come here at gap fill just under $245. Should we start chugging past that? Well, then now we're talking all-time highs at the bottom end of this parallel channel. I do think there's going to be stiff resistance right here, 243.67 cents. Next up, guys, Bitcoin. All right, so Bitcoin, that was the story of the week last week. Look where we caught support, guys. We kissed this level, 80,451, actually got down to a low of $80,524. And I guess, you know what? Good thing for you guys. You might have front run my support level. That's okay. Guys, take this for your knowledge and information to make plays on your own. But you can see purely right here, that was a very solid level as price on Bitcoin has rocketed right back up. but we're going to be facing a lot of resistance moving up higher. So Bitcoin bulls, you need to be watching these levels. First off, this 50% area of the parallel. Let me zoom in a little bit more. I know we only paused there 3 days, but that will be a resistance level to beat if you're a Bitcoin bull. That's at $91,900. Should we get above that, then we need to test this inclining trend line. If I remind you, this inclining trend line has held up price on numerous occasions when we were marching up and making these all-time highs. Now that we're underneath it, this trend line will be resistance. So should we get past this 50% area, the next level to test will basically be at $100,000. So should we get above both of those levels, now we're going to be talking about potential new all-time highs with Bitcoin. But in the immediate future, you need to be watching these levels if you're a bull on Bitcoin. Next up, gold. Check out this beautiful move on gold. Now, we've been jockeying back and forth across this inclining trend line, so much so that it's almost made it irrelevant. So I've got another, what we're going to do, we're going to get rid of this here, and I've got another potential near-term analysis tool I'm going to use with an inclining parallel channel. And I'm going to just connect the pivot lows that you see there on the chart and extend it out to the most recent pivot that we've got high. So now that gives us a clearer picture, as this was resistance, this 50% area moving up when this parallel first began. That tells us then the next resistance on gold is not that far away. Tomorrow, $4,168.56. You should see resistance there, but should we get in the top 50% of this parallel? Now we're talking about beating this pivot high that occurred back on November 13th and potentially testing the all-time highs again. So for gold bulls, guys, you want to see price get in the top 50%. You want to see it get in there as fast as possible, as that will open up the door for more probabilities, increased probabilities of price going higher. Next up, we've got silver. Now, guys, beautiful display of technical analysis here. Look at this inclining trend line that we've been talking about for the past several shows about how this was the trend of silver, how for any bulls in silver, you wanted to make sure price didn't break down underneath this trend line. Friday, man, it sure came close. We tested, broke through, but we finished the day up higher. Great move for silver. Notice this is hit once, twice, 3 times. Now the 4th time it's been hit. The more times we hit it, the more vulnerable it is for a break. So if you're a bull on silver, you want to also see separation from this trend line. You want to see price get back and make new pivot highs here in 2025, potentially test the next resistance at $56.34. Otherwise, breaking this trend line, we're then going to stair step down to $46.79, followed by $44.26. Next up, U.S. oil. Now notice, guys, where U.S. oil caught support the last 2 trading days, right on top of this consolidation. I had mentioned that this area, $57.50, was going to be the next area of support. And sure enough, that's exactly what's happened. Good bounce today. If you're bull on oil, you want to see it try to fight to get back up amongst the rest of this consolidation, ultimately break this November 12th red candle and tag this trend line. So a lot to be done there, right? It's kind of a mouthful. So you can tell too, that's going to be a good test and fight for U.S. oil to get up there. Currently trading at $58.96. Should this day reverse tomorrow and then we retest this pivot or this consolidation and support, then the next support, folks, is going to be down here sub $56 at these pivot lows, $55.93. Next up, nat gas, really chopping around, kind of like I anticipated. The last few days of last week surprised me a little bit with pushing up, retesting this $4.70 mark. That area still is resistance. As you see, it's holding down price. I would anticipate even another tag of this support zone, $4.33 and $4.45 before nat gas decides to break up or to break down. But still, great move on nat gas, little cooling off period going on at the moment, but also still holding a nice price level that can go either way, up or down. Right now, though, I think it needs to consolidate before it makes its next move. Now, guys, look at this push on AVGO. I talk about big candles, and I do so for a reason, because they are big signals on the chart. And they can provide great insight as to where price will go near term and really where and institutions are getting in, and you can piggyback on them and then take that ride the wave up on the charts when you see stuff like this. Now, so a couple things here on AVGO. AVGO is tied in with Google as far as some of the chips that they're producing for the new AI component with Google's Gemini 3 rollout. Okay. So that's why AVGO, one of the reasons it was really surging up today. It wasn't that, AVGO just made a different chip or anything like that. No, it was the combination of the combined work with Google and AVGO that accelerated AVGO up. Google was another one that pushed up to new highs. And so great pushes on those. So where are we going to go here with AVGO? New all-time highs are not far away, folks. We're talking only about $9 on this chart, and a chart that's valued at $378. That's easily attainable. So I could see us even testing that as early as tomorrow. Where some traders are going to get this wrong is trying to short it right there at double top. This parallel clearly states and shows you right here at $410 is the top end of that parallel. That's where you're going to find stiff resistance. We could even float up tomorrow and the following day, putting us into December, potentially tagging the top end of that parallel. But if you're a bull in AVGO, be watching this parallel closely, because this could be at least the end of the near-term ride right around $410. Great place to take some profits. See if we can't have price come back down, buy it again at the 50% area of the parallel, rinse and repeat. Next up, we've got Tesla. Now, I've been banging the drum on Tesla for a while, mainly because of this massive inverse head and shoulders pattern that's displayed on this daily time frame chart that comes with a measured move up here at $512. So that raises my eyebrows, piques my interest, especially when we had price come down here, test this support at 385.95 this last week. You can see today, nice rocket recovery back inside this inclining parallel channel, giving Tesla the chance to then reattack both this resistance at $457 and the 50% area of the parallel right around $470. Those are the areas that it needs to beat. And then if it does that, folks, I think it's clean sailing all the way up here, clean and smooth sailing up to $512.97. So be watching Tesla very closely in the near future, especially if they've got any news coming out about Optimus or any of those other robots. Next up, Amazon. Amazon, as you see here, had a nice day today, up 2.53%, but caught support on this inclining trend line. Immediate resistance is right here, folks, right here at the 50% area of the parallel. Tomorrow, it's going to be $228.33. Should we get above that, then that does lead the way for Amazon to push up, retest these pivots at $240, and potentially even this inclining trend line. So tomorrow is critical for Amazon to continue momentum, to get back into the top 50% of the parallel channel. Next up, Hood. Now, this has been a very, very volatile stock. You can see it's ripped all the way up here from $101 to $150, down here to $102. And this stock, too, for the year is up around 190%, guys. You can rewind all the way back here, even with the drawback that we've had, 200%. So this is one of the biggest winners in the S&P 500. So right now, though, we are coming to another crossroads. If we do beat this declining trend line, the good play for bulls would be a potential move all the way back up to retest the bottom end of this parallel channel, right around $134, implying about 20 points of moving up. That would be a nice swing trading gain if price is capable of breaking this declining trend line here on Hood. So be watching that. The break area is roughly $117. If that breaks and confirms, we likely could be pushing right back up to the bottom end of this parallel, around $134 to $135. Lastly, we got Kava, folks. I wanted to bring in one of the stocks that's kind of underperforming, right? And that's an understatement. Look how high Kava was at $172. We're now trading down here sub $50 at $46.80. Nasty fall on this stock. So you see I've got a couple trend lines drawn in. One horizontal connecting pivot highs that you see here coming from the bottom, also connecting pivot highs. Then it did hit the top end too. So that's a solid level of support. So far, it's held it. As a matter of fact, not only did it hold it, we've got a great bounce up on this candle to put in a base to grow off of. Next resistance would be the previous support at $60.47. Now, if this trend line fails, you notice the inner workings of that trend line. We've got another exactly similar setup right here. If you see this bottom end pivot, and I string this all the way across, notice how that catches this pivot high here and the pivot high here. So I think the bottom barrel there on Kava, at least near to midterm, is 37.07. So if you're interested in getting in here, space out your ads to include this level 3707 as a backup, as then that way you can pull your average down, wait for the bullish momentum to return, and then price should come back up and retest all this consolidation just under $62. So right there at $60.47. Really interesting play. Could be an opportunity for some great gains once that sentiment returns in there to that stock. All right, guys, what a fantastic day today. Thank you guys all so much for joining. Don't forget to like and subscribe to the video. Send it out to your friends and family so they too can start learning technical analysis. This stuff, as Liz said, is psychological. We trade psychological movements in the charts. Therefore, we can predict them. Therefore, our patterns and technical analysis can give us and help make us profits. Really cool stuff. Thank you guys for being great viewers today. Can't wait to be back tomorrow. Until then, I'll see you guys on the charts. Take care, folks.